Hello all, welcome to BCCA. This is Manideep. I'm a chartered accountant, cost accountant. So, in this marathon, we try to cover, I try to cover almost 60 to 70 marks at CMA final level. Since there are certain common topics in CMA inter level also, so the first three, four chapters are even relevant to inter level also. Okay, so the topics which I am covering here are okay. So in this marathon, the topics which I covered are supplies. I covered supply chapter and I covered charge chapter. Then I even covered value of supply. I covered ITC, then TDS and TCS, then assessment and audit, then even FTP. Okay, so these are the topics which I covered, sir. Okay, sir, you might have the questions about regarding the weightage. Okay, supply is having around weightage of minimum 5 marks, sir, but there are attempts where there is around 10 marks also. Charge also there is minimum of 5 marks, sir. I'm taking maximum of 8 marks. VOS some 10 marks, ITC 15 marks, TDS TCS 5 marks, assessment audit some 6 to 8 marks, and FTP again 15 to 18 marks. At final level, this is. At inter level, if you guys are watching, okay, only till this TDS TCS are applicable. Okay, that also for old syllabus students. New syllabus students, even TDS TCS also not applicable. Only supply charge, VOS and ITC. Even in ITC also, the rules part is not applicable to you. Okay, so in supply at inter level, there are around 10 marks weightage. Old means. Okay, new means again there is only 5 marks weightage. In charge also there is around 8 marks being asked from old syllabus. In new syllabus there will be around 5 marks. Value of supply again old 10 marks. ITC again there is 20 marks. So around here 48, and TDS teaches 5 marks. 53 marks has been covered for old syllabus students. When it comes to new syllabus students, here 10 marks, here 5 marks, total 25 marks has been covered. When it comes to CMA final student, supply 5 to 10, here 5 to 8, 10 marks, so around 60 marks has been covered in this marathon. Sir, in this marathon, I completely explained the concept in English. Okay. So maybe here and there might be some grammatical mistakes or some pronunciation mistakes, because I'm trying this English marathon for the first time, because previously we used to do in Telugu only, but since many students from other languages are also asking, so that's why I come up with the English marathon. Okay, and few words, sir, before starting the lecture I wanted to talk to the students who are watching this lecture, and especially which I am observing, sir, this 1 week period of time we are having for this July 23 exams. So this 1 week is very crucial for you guys. Okay, so I have been hearing from lot of students like, sir, this 1 week, we are having lot of fear, what to do, sir, like how to cover the preparation and all. So first of all, keep aside that fear. Okay, with that fear you cannot go ahead. Okay, only when you keep aside that fear, then you can prepare and your brain will work consciously. Okay, sir, how to keep aside that fear, sir? To keep aside that fear, we cannot tell mind that keep aside that fear, it will not listen to those words. What you need to do for that, just stick to the timetable, prepare a timetable, maintain discipline and stick to that one. Okay, have timely targets. In this 2 hours this topic has to be completed, in the other 2 hours this topic has to be completed. So keep such timely targets. Only on keeping such timely targets you can complete the portions. Only when completing the portions you will gain confidence, which will automatically set the fear aside. Okay, so only that can make you free from the fear. Okay, make you free from the fears which you are having. Okay, and one more thing means, sir, please avoid the distractions for this 1 week or during the exams period. That is like staying out from social media or from unnecessary calls and talks. Okay, this will disturb you. Okay, and which will impact a whole day or at least a half day. Even an hour is important for you in this moment. So please, okay, please set aside all those deviations and have 100% focus, ma. Okay, sir, in these videos also, supply alone, rushed into the concepts because supply, what I feel is like many of you know supply concept little well. So I rushed, okay, that means I discussed very fastly through the supply concept, ma. And even the lot of content is there in supply these days because of lot of updates, clarifications issued in supply chapter. Only supply chapter I rushed a little bit. Then coming to charge, value of supply, ITC, TDS, TCS, assessment audit, FTP, explained everything, okay, in detailed manner and even written the notes as well, which might be useful to you. Okay, I will share even these notes also in our Telegram group, ma. Okay, everything will be sharing. And as usual, in every video, I'll ask this. Okay, if at all you like these videos, please share with your friends. Okay, make a comment. Okay, what what you liked in the video. Okay, how the video went. You can make that comment. You can share with your friends. Okay, not only my video, ma, even in BCCA channel. Coming to English videos, only DT and IDT are available. DT by Bhaskar sir and IDT by me. Okay, whereas other final level videos are available in our channel. Okay, for almost all the subjects, the final level marathons are available, but they are in Telugu language. When it comes to inter level, ma, for every subject around 20 hours content is provided through marathons. Okay, so please subscribe through our channel. Okay, if at all you are liking our videos, if you are getting benefited with our videos, share to your friends. Okay, and put a comment. Okay, so I think like now we can move into the concepts now. Okay, we'll be diving into the supply ma directly. Okay, no introduction part is discussed. Directly I entered into the supply concept. I am assuming that you know little basics. Okay, that's why I'm diving into directly into the supply concepts because at the this is the last minute marathon, last minute revision I am uploading this video, no. So that's why I'm thinking like the basic part, you know, if you are a beginner, if you are listening for the first time IDT, then this video may not be suitable for you because I'm not explaining what is IDT, what are the taxes, how it goes. Nothing that part I didn't explain. I directly entered into the supply chapter, and supply chapter also I, as I said already, okay, fatafat I'll be finishing supply, then the other chapters little bit slow it will be. Okay, and one reminder to CMA final students, you always ignore FTP, but if you see the trend, FTP is the chapter where there are consistently 15 to 18 marks questions are there. So I detailedly explained FTP. Okay, very detailedly, keeping that weightage in mind, I discussed FTP very elaborately and with writing notes and somewhere like with the material also. Okay, but it was discussed very elaborately, which is very useful to you guys. Okay, I hope you'll enjoy the lecture. And one more reminder, ma, please, wherever, if my English is bad, instead of, please don't troll me. This is the first time we are doing, so maybe I'm having those mistakes. I think like you guys will accept that instead of trolling that. I think like you guys will support us. Thank you. We are starting with the topic now, charge, ma. Okay, in charge. Okay. So I'm trying to write short notes for everything, ma. Okay. But if at all, like based on the pace, may not be possible at sometimes. But I think like you guys can write down it. Charge. Okay. Basically, coming to the chapter charge, there are two sections from CGST Act which we need to discuss, and there are two sections from IGST Act which we need to discuss. Section 9 and 10 are from CGST Act. whereas section 7 and 8 are from IGST Act. Okay, so these four sections we are going to discuss this whole. Okay, and even in this also section 9 is separate about charge, and whereas section 8 section 10 is about composition scheme. Okay, section 7 and 8. So coming to the points, aggregate turnover. So now we are discussing about what? Aggregate turnover. So very important, sir, aggregate turnover. I can tell you the places where aggregate turnover will come. It will come in this supply charge chapter, registration chapter, because it is linked to thresholds, QRMP scheme in returns chapter, because you are eligible for QRMP or not. Next in invoice chapter, about like HSN code mentioning, next e-invoicing applicability. So it is linked to invoicing chapter. Okay, so at various places will be referring to aggregate turnover. So it's very useful. I mean, it's much required to remember the aggregate turnover definition. Aggregate turnover includes taxable supplies. Includes what? Taxable supplies. So taxable supplies means the supply which is chargeable to tax. Supply of goods, services, or both which are chargeable to tax are called as taxable supplies. Okay, sir, coming to exempted, sir. Exempted definition is also important. Sir, exempted has three parts, sir. Exempted means it has three parts. Exempted means which are exempted by notification. Exempted by notification. Next, second ones are which were nil rated, which are nil rated. So nil rated means in the classification itself for that particular good, the rate itself is declared as nil. Then they are called as what? Nil rated. And coming to the third one, sir, non-taxable. This is important, sir. Even non-taxable supplies are also treated as like what? Exempted. So non-taxable supplies means what, ma? Non-taxable means HP man, high speed diesel oil, petroleum crude, motor spirit, aviation turbine fuel, natural gas. So, and even alcoholic liquor for human consumption. These are non-taxable supplies. So, exempted means three. Nil rated, exempted by way of notification, and even includes non-taxable supplies. Zero rated means supplies made, I mean, like exports or supplies made to SEZ are called as SEZ unit or SEZ developer are called as zero rated supplies. Next, sir, supplies made by an agent on behalf of principal. Sir, when any supplies are made by agent on behalf of principal, sir, to include the agent supply, I mean to include in the turnover of agent that particular supply related. Sir, let's say I'm the principal. I sent certain goods to my agent. My agent is selling those goods on behalf of me. So now the question is, agent turnover will anyhow added into the principal, but will it be added into agent turnover? Because agent is selling not in his capacity, is selling on behalf of principal. Even in such case also it has to be issued when if invoice is raised by invoice issued in agent name. If invoice is given in agent name, then the turnover is includable in the agent's turnover as well. Next, if there are any supplies between distinct persons, that also has to be added. Okay, so what has to be added, amma? Taxable supplies, exempted, zero rated, supplies made by agent on behalf of principal, and supplies between distinct persons. Sir, next, what needs to be excluded? All the GST related taxes. That means in your turnover, GST will not be included. Next, inward supplies on which tax is payable under RCM. Sir, by definition itself, turnover means sales, sir. If at all, inward means it's your purchase, but you are paying tax under RCM. It doesn't change the characteristics of purchase and sale, no. So that's why if it is your inward, even though tax is under RCM, it cannot be includable in your turnover. The last important point, sir, which is much more important, value of exempted turnover. Sir, we already said like exempted should be added in the aggregate turnover, but here we are even saying like excluded. Which exempted turnover? Exempted turnover by way of offering loans and advances and consideration in the form of interest or discount. You are offering loans
and the consideration is in the form of interest or discount. To that extent, if it is exempted, so generally banks will be providing loans. No, on that bank will be getting interest, that is exempted. Or if I am make a fixed deposit, on that I am getting interest, such interest is exempted. Such turnover shall not form part of aggregate turnover, else it is a supply, it is exempted, but still such need not to be, even if it is exempted, it need not to be added. Okay, sir, one more thing, aggregate turnover has to be calculated pan wise. How, sir? Pan wise. That means if you are having 8 registrations linked to same pan, then the aggregate turnover is total of all those 8 registrations, even though they are in multiple states. Aggregate turnover always has to be calculated how? Pan wise. Okay, now sir, special category states. Sir, special category states means U for Uttarakhand, sir. This is the code, sir. U as Tamana. Okay, U for Uttarakhand, A for Assam, S for Sikkim, K for Kashmir, T for Tripura, A for Arunachal Pradesh, MA for sir Manipur, Mizoram and Meghalaya, and NA is for Nagaland and H is for Himachal Pradesh. So these are the special category states, sir. Uttarakhand, Assam, Sikkim, Kashmir, Tripura, Arunachal Pradesh, Mizoram, Manipur, Meghalaya, Nagaland, Himachal Pradesh. Sir, here since the discussion came, I am saying, sir, CGST Act applicable across the country. SGST Act applicable to all the 28 states plus 3 union territories which are having state legislature. What are those 3 union territories, sir? Pondicherry, Delhi and Jammu and Kashmir. Okay, these 3 are also called as states only for the purpose of GST. So total 31 states. There are rest 5 union territories, sir. 5 union territories: Andaman Nicobar Islands, Lakshadweep, okay, Daman and Diu, Dadra and Nagar Haveli, Chandigarh, Ladakh. Okay, for these 5 union territories, UTGST Act is applicable. Okay, so now coming to the definition, sir. I mean section 7. Section 7 is about section 7 of IGST Act, sir, because section 7 of CGST is supply, which is already done. Now we are into section 7 IGST. Okay, what IGST says section 7? It talks about interstate supply, sir. Interstate supply. Okay, whether irrespective of whether the supply is related to good or service, where location of supplier, that means generally the place of business of supplier, location of supplier and the place of supply. Place of supply generally means the destination, where the location of supplier and the place of supply are in 2 different states, 2 different union territories, or 1 state and 1 union territory, then it is an interstate transaction. This is what the first point said. Second point, sir, if there are imports until they cross the customs frontiers. Sir, once they cross the customs frontiers, after that sale can be either intra or it can be inter. But till it cross customs frontiers, such import can be called as only what? Interstate. Third one, sir, where location of supplier is in taxable territory, India. Fourth one, whereas the place of supply is outside India. Okay, location of supply is in India, place of supply outside India, then it is called as what? Interstate. Sir, place of supply outside India means destination where, sir? Outside India. Supplier where, sir? In India. When supplier in India, destination outside India, generally they are exports. But for service exports, there is a separate definition, ma. What is the definition of service exports, ma? Supplier in India, place of supply outside India, that means destination outside India, but there is an extra condition there, ma, like what? The consideration should be realized in convertible foreign exchange. So then only we can call it as an export of service. That's why they are not here mentioning it as export as interstate. They are saying when location of supplier in India, place of supply outside India, then it can be called as interstate. Next, supply to SEZ developer and units are also interstate. And any other supply in taxable territory, not intrastate, can also be called as interstate. So 5 points, ma. Location of supplier, place of supply, different state, different union territory, interstate. Imports, interstate. Okay, supplier in India, place of supply outside India, interstate. Fourth one, supplies to SEZs, interstate. Any other supply which is in the taxable territory, which is not classified as intra, can be called as interstate. So section 8, sir, no. Section 8 is about what, ma? Section 8 is about intrastate. So section 8 of this is also IGST Act. Section 8 of which act? IGST Act. What this section is saying, sir, when location of supplier and place of supply are in the same state, then intrastate. Sir, even though, let's say in Telangana, in one place there is my factory, in Telangana itself there is an SEZ. So from my factory to SEZ, even though it is within the state, it is called as interstate only, because here it clearly said like supply to SEZ developer or unit is interstate. Okay, sir, by this we completed what, ma? Section 7 and 8, sir. Now we are entering into section 9. Section 9 is about what? Charge. Okay, section 9 has total 5 subsections, ma. 9(1), 9 subsection 2, 9 subsection 3, 9 subsection 4 and 9 subsection 5. Total how many subsections are there? 5 subsections. Okay, out of this 9(1) easy, 9(2) easy, 9(4) easy. Only the two things which we need to focus are 9(3) and 9(5). Okay, it has lot of relevance, ma. So very much important to have attention towards this topics. Okay, and these are connected with other chapters also. Okay, 9(3) is about RCM. No, generally it connects with ITC here and there. So time of supply, wherever possible, it is going to connect it. So you should have clarity regarding RCM. 9 charge. Okay, what 9 subsection 1 is saying, sir? We are discussing 9 of which act? CGST act. 9(1) is saying a tax called CGST is levied fine on what? Intrastate supplies. Okay, sir, only CGST is levied, no SGST. SGST is also levied, ma. On what? Which, I mean, where it is mentioned SGST act, but generally will not refer SGST act. Whatever is there in CGST is the copy in SGST. Just CGST place, it will come as like SGST. The same way, section 5, sir. Section 5. Section 5 of IGST Act is also there, sir, which is also about charge. It says like a tax called IGST is levied. Okay, here CGST is on intrastate, no? Then IGST is on interstate. Okay, now on what, ma, it will be levied? Tax called CGST is levied on intrastate supply of what? Intrastate supply of goods, services or both, except alcohol, because alcohol definition, alcohol itself is not there in the definition of GST. What is the definition of GST? It's a tax levied on supply of goods, services or both, except alcoholic liquor for human consumption. So that's why it is excluded. On what it will be levied? On good quantity, on good weight, no, on good or service value it will be levied, which is determined as per section 15 of CGST Act and as per rates notified by central government. Simple na 9(1) tax called CGST. Okay, on intrastate supplies of goods and services are both, on value of supply as per the rates notified by central government. However, the maximum rate that can be levied is 20%. When it is IGST, maximum 40%. 9(2), sir, it is much more easy, sir. On non-taxable supply, sorry, on petroleum products, HP man, high-speed diesel oil, petroleum crude, aviation turbine fuel, natural gas. Okay, sir, 9 subsection 2 on what? On petroleum products, high-speed diesel oil, petroleum crude, motor spirit, aviation turbine fuel and natural gas. On these, the GST can be levied from when? Only from the date the council recommends. If council recommends from tomorrow, then from tomorrow GST will be there on petroleum products. Okay, so 9 subsection 2 is giving relaxation for the time being. There is no GST on petroleum products. Only from the date council recommends there will be GST. Okay, so 9(3), sir, it's about RCM, sir. Okay, so first of all we'll understand what is RCM. RCM means when a supplier supplying goods and services to a recipient, when a supplier supplying goods and services to a recipient, let's take the value as 10 lakhs, ma. On that IGST is 1,80,000, okay, if it is RCM, then recipient will not pay the total 11.8 lakh rupees to the supplier. He'll pay only how much? 10 lakh rupees. Sir, then how the government will get GST, sir? 1.8 lakhs. Such 1.8 lakh GST will be paid by recipient directly to the government. Who will pay? Recipient will only pay directly to the government. Sir, why this RCM concept? Supplier will pay? No, it would be easy, no. Sir, understand, in all the cases, their supplier can only not fulfill the obligations. In certain cases, supplier may be a smaller person, smaller business person than compared to the recipient. Then GST people, I mean the lawmakers and the council thought like it is better to keep the obligations on the person whoever is more competent to fulfill those obligations, or whoever has that capacity to fulfill those obligations. So in majority cases it is supplier, because majority cases supplier will only be a bigger person. But in certain cases, recipient may be a larger person or bigger person having lot of business scope, so he can fulfill the obligation. That's why the responsibility is kept on recipient. So when RCM is applicable, the tax to government is paid by supplier or recipient? Recipient only. But one thing you need to understand here, sir, the burden is always on recipient. The tax burden is always on recipient, because ultimately he has to give from his pocket. But two things happen, sir. FCM means he will, from his pocket he will give to supplier, supplier will pay tax. FCM. If from his pocket he will only pay directly to the government, then that is RCM. Sir, my next question is, sir, here to recipient this is an inward only, na? But tax is payable under RCM. So my general question is, sir, if it is RCM, can recipient claim ITC? Yes, no doubt. Be confident and say like RCM transactions also recipient can claim ITC. Why, sir? Because nowhere it is about FCM or RCM. If it is your inward, you are eligible to claim ITC. If it is your inward, sir, it is your inward, so you can claim ITC. Okay, so 9 subsection 3 talks about certain goods on which RCM is applicable. First, sir, goods means which type of goods are covered? Cashew nuts not shelled or peeled. Okay, that means they are not broken into pieces. I mean, that outer shell not removed and they are not peeled. BD wrapping leaves, tobacco leaves, raw cotton, silk yarn, lottery tickets, used vehicles and seized goods, priority sector lending certificates. Okay, these are the goods on which RCM is applicable, sir. But supplier, based on the supplier also it will get decided. Okay, whoever the, like, let's say if in a shop, that particular dry fruit shop, if that guy is selling cashew nuts, on that RCM is not applicable. When cashew nuts sold by an agriculturist to a registered person, BD wrapping leaves sold by an agriculturist to recipient registered person, RCM. Tobacco leaves sold by an agriculturist to registered person, RCM. Raw cotton sold by an agriculturist to registered person, then also RCM. Next is silk yarn, sir. We might have learnt in school, no, how the silk yarn is produced from the cocoons. It will be extracted. Okay, that silk yarn will be made. Okay, so when a person is making silk from silk yarn and he is selling it that to a registered person, then also RCM applicable. Next, lottery tickets. When the state government is organizing lottery and it's, I mean, the tickets were printed by state government, union territory, local authority, and for sale they were giving to agents and distributors. So then dealers and agents will only pay tax under RCM. Used vehicles, seized vehicles sold by central government, state government, union territory, local authority, then also a registered person being recipient. Priority sector lending certificates, registered person will not pay ma. If the recipient registered person will only pay tax under RCM. 9.3 services. First one, transfer of copyright. Okay, I'm a music composer. Let's say, assume I composed a song. My song copyrights I'm giving to some other person. Okay, transfer of copyright now. Okay, me being the composer, supplier, but the person who is buying that particular tune is the recipient. Such recipient will only pay tax under RCM, provided he should located in taxable territory. The same applicable to even to photographer. Next, renting of motor vehicle. Sir, renting of motor vehicle means which motor vehicle? Goods transport vehicle or passenger transport vehicle? Here it's cleared, sir. Vehicle is meant for transportation of passengers. And on motor vehicles, generally transportation services, there are two rates applicable, 5 and 12. But only if the tax rate opted is 5%, then RCM is applicable. And the contract cost, sir, I am giving my car hire to a person, but for a monthly rental of 40,000. Okay, what this provision is saying means to make RCM applicable, the 40,000 which I am charging should be inclusive of fuel. Okay, when the contract cost is inclusive of fuel, then only RCM is applicable. Okay, now see, sir, supplier. Who should be supplier, sir? Any person other than body corporate. That means other than company LLP, and to whom the service has been provided, sir? To a body corporate. Okay, other than body corporate, providing service to body corporate, renting of motor vehicle, RCM applicable. Next, Arbitrary services, sir. Arbitrary services means they will try to sort out the disputes, sir. Okay, business disputes. Where an arbitral tribunal providing service to a business entity, then arbitral tribunal will not pay GST, sir. The business entity which is receiving the service will only be paying GST under RC. Okay, two business entities having disputes, sir. Both these business entities will appoint separate arbitrators. These arbitrators come and sit and will try to resolve the issue for those two business entities. Okay, since these two arbitrators are working for those business entities, this business entity will pay consideration to this arbitrator. Okay, like the same way, the other business entity will also pay fees to the arbitrator. So on the arbitrator services, RCM is applicable. Okay, next one, sir. Transfer or permitting the usage of copyright. Okay, sir, already discussed in the first one. Sir, they're excluding author, sir. Here, this entry is only for author. Okay, I'm an author. I wrote a book like I'll Die My Day. ఓకే ఇన్ తెలుగు ఇట్ ఈస్ లైక్ నా చావు నేను చేస్తా మీకెందుకు ఓకే ఐ డై మై డై ఇట్స్ నాట్ ఎగ్జాక్ట్ వర్షన్ ఇస్ నాట్ లైక్ ఓకే ఐ డూ మై డై వాట్స్ ద ప్రాబ్లమ్ టు యూ సంథింగ్ లైక్ దట్ ఓకే okay, this is like out of a frustration word, so someone is like completely mocking you, like what is this, what is that, what you are doing, okay, will get frustrated or sometimes like, okay, when your CMA get completed, when you will be writing, when you will job come, okay, then if at all you are a Telugu student, always you already know because it's popular in movie like na chavan em chesta neekenduku. Okay, if at all you are a other language guy, then you also learn this word na chavan em chesta neekenduku. Okay, that means I'll okay, I'll die my day. Okay, that's the exact. I'll die my day. What's the problem to you? Okay, so that's the book I wrote. Okay, because everybody will try to point on us, no, for different issues. So that's why. Okay, in a comic sense only, it's not like. So please take other language people. Maybe you might not understand the sarcasm in that. Okay, so that's why it's in a lighter note only. We said transferring or permitting the copyright. Okay, author wrote a book and giving such copyright to a publisher, then who has to pay tax under RCM? Publisher. But author has the option to pay tax under FCM. Author has option to pay tax under FCM, but when author registered, he filed a declaration that he will only pay tax under FCM, but once our declaration filed, he cannot withdraw until the expiry of 1 year. That means he continues to pay tax under FCM only. Next, director services. Director means not SS Rajmouli or Prashant Neel. Okay, director services, okay, Maniratnam, so not like the director services means here director of a company providing services to company. Okay, on such services RCM is applicable. Sir, director may be employee also, no? Yes, that question is there. I'm not going detailed into that. Sir, there is a clarification issued here based on TDS deduction under income tax. Under 194J TDS deducted on director services, then it's not salary, RCM applicable, supply. If TDS is deducted under 192, then it is salary covered under Schedule 3 of Supply Chapter. Okay, Schedule 3 of CGST Act. So it is not a supply at all, so no tax at all. Okay. Direct selling agent. Sir, who is this direct selling agent? These direct selling agents are persons who will try to grab business to the banks. So when an individual direct selling agent trying to bring business to the bank, individual direct selling agent, then this direct selling agent providing service to bank, financial institutions, NBFC, not this DSA. This bank, financial institution, NBFC will only pay tax under RCM. Next, government services. When government being central government, state government, union territory, local authority providing services to a business entity, to what ma? Business entity, then on them the tax is payable by whom? Business entity. However, there are exceptions ma. On these services, RCM not applicable. Sir, renting of immovable property, even though government, not under this entry, there is a separate entry. That's why here excluded. Transportation of goods and passengers. On railway tickets, if it is RCM, you will not buy ticket itself first. Okay, then why you will pay taxes? So that's why they are saying like, okay, no macha. On transportation of goods and passengers, we will only pay tax under FCM. That's why it is excluded. On post office services, speed post, on these also. On services within the port premises provided by government to aircrafts or vessels, on them also no RCM, FCM will only be applicable. Okay, so government services to business entity RCM except these four. Okay, for them the code is RTP. Okay, exceptions, for exceptions the code is RTP. Renting of immovable property, transportation of goods and passengers, post office services and services within the port premises. GTA services. When GTA providing services to a specified recipient means whom? Factories Act, society, as per Societies Act, cooperative society and registered under Cooperative Societies Act, firm registered or not, CTP, body corporate established as per relevant laws, any other person registered. These are called as specified recipients. When GTA providing services to specified recipient, RCM applicable. Irrespective of whether the tax rate opted is 5 or 12 percentage, no ITC. Sir, but here there is an amended point, sir. Amendment. Okay, what is the amendment? On 12 percentage case also you can claim, I mean, you can be under RCM only. But the amendment point further says like there is an option to the supplier to be under FCM, and for that he should be registered and should file a declaration. Okay, sir, who is called GTA? Person who is transporting goods by way of motor vehicle and who issues a consignment note. Next, renting of immovable property. Sir, I am having an immovable property and I am giving on rent. On such rent, I am the supplier. You being the tenant, you are paying me rent. RCM applicable, not the owner. You, the tenant, have to pay tax under RCM. Sir, here such renting of immovable property can be made by any person. That means including government. Sir, their exception, but here it is covered. So, government providing renting of immovable property service is also covered under RCM. But when when the recipient is registered person. Next, insurance agent providing services. Generally, what insurance agent will do? Solicit the business for insurance company. Such agent providing service to insurance company, RCM. Insurance company will pay. Recovery agent. Sir, the bank recovery agents will try to recover the loans from bank, recover the loans from the customers. No, who is providing service to whom? Bank. On that also RCM applicable. Next, advisory services by RBI overseeing committee members to RBI. The members of overseeing committee providing services to whom? RBI. Members of overseeing committee providing services to whom? RBI. Sir, RBI will have a panel of overseeing committee like experts who will be giving various opinions and their knowledge to take various decisions by RBI. So on their services to RBI, tax is payable by RCM since it is the recipient. Sir, here the next one, lawyer service. Sir. On lawyer service also, where a lawyer is providing service, either senior, junior advocate or even firm of advocates to a business entity, then the lawyer only has to pay tax under RCM. Next one, sir, long-term lease of land. When it is called as long-term lease, when the period is greater or equal to 30 years, then it is called as long-term lease. When the landowner, okay, providing services by way of leasing his land to a promoter or development, then also RCM applicable, not the owner, the person who is taking the development, right? That person will only pay tax under RCM. Sponsorship service, sir. Sponsorship means what, sir? Promoting brand. So let's say BCCI, not BCCA, Cricket Control of India. Okay, they are sponsoring different brands by way of printing it on the cricket jerseys. No, let's say Virat Kohli is sponsoring MRF. No, okay, so when they are promoting a brand, that is nothing but sponsorship services. When sponsorship service can be, supplier can be any person, sir. Virat Kohli, BCCI, any person individually or else like in an organization. To whom it has to be provided? Body, corporate or firm. Sir, let's say on Virat Kohli bat, it is written as like monthly IDT classes. Okay, and Virat Kohli is sponsoring me then. Okay, assumption is good only, no? Okay, if he is sponsoring me, since I am an individual, not sponsoring BCCA, sir, me individually, so then RCM not applicable. Virat Kohli will only pay tax. If Virat Kohli bat, if it is written as like BCCA, okay, so he is sponsoring whom, sir? Okay, body, corporate or firm, no, so then RCM is applicable. Next, lending of securities, sir. Sir, there is a clarification in second chapter, sir. Security, short-term lending of securities. As per RBI requirements, banks has to maintain separate certain amount of securities. Whenever they have a shortfall, they'll borrow from other banks and try to, okay, fill that gap and to maintain that level. Okay, once in a next week or in a 2 weeks period, the bank will give back their securities by way of buying the new securities and giving back to them, or else like the existing one will only be transferred to that lender. Okay, so one lending bank is lending securities to a borrower, no? Okay, for that this lending bank will charge certain amount, no, lending fee. This lending fee is a supply. There is a clarification. This lending fee collected will be called as what? Supply only. On this, RCM is also applicable. That means not the lender bank which has to pay, borrower bank has to pay. Next, security services. Security means not that share security is not that one, security, okay, this security, sir. Any person other than body corporate providing services to a registered person, then RCM is applicable. However, exceptions are there, sir. When such service is provided to a section 10 person or to government or local authority, then also it's not covered under RCM. Next, business facilitator, sir. Who is business facilitator? When a bank is set up newly in a place, then the customers will not come and run to into that bank. Okay, so the bank wants to get the attention in that place and to get the customers trust, no, so that's why they'll appoint business facilitators who will try to get the customers to the bank. So this business facilitator will be providing services to bank now. On that also RCM is applicable. Next, business correspondent services, sir. Sir, here bank business correspondent, agent of business correspondent. Let's say, sir, HDFC Bank wants to extend it business operations across the rural areas also, but it cannot start a branch everywhere now, it's not viable, no. So let's say it took business correspondent like LIC. Okay, for HDFC, LIC is acting as business correspondent. What business correspondent will do? It has agents across India. LIC agents are everywhere, no. So that's why HDFC appointed LIC as business correspondent. For LIC, there are agents everywhere. So this agent work for LIC work for HDFC. Okay, so now what HDFC wants to do? It wants like one person to be there in every place who can accept the deposits of HDFC and who can do the banking transactions or procedures, instead of that person going to a nearest HDFC bank, which might be around some 10-20 kilometers away, no, because in every rural area there is no HDFC bank now. So that's why, sir, now RCM is applicable on what? On the service provided by this agent of business correspondent to business correspondent, on this RCM is applicable. Sir, this business correspondent LIC is providing service to HDFC, na? On that FCM only. Agent of business correspondent to business correspondent only RCM. Next, import of service. When you are importing service, importer there outside India, he cannot pay tax. So automatically it should be where RCM only service. Sir, goods also, na? Goods covered under Customs Act. So that's why we are not discussing here. Person, non-taxable territory. Recipient here, but recipient, see, sir, here recipient means who, sir? Other than non-taxable or online recipient. Who is non-taxable online recipient, sir? Okay, NTOR means very important only, sir. Understand, NTOR means government. Okay, government departments. Okay, government authorities. Okay, and unregistered individual or to a charitable entity. Okay, charitable entity. These unregistered individuals are other than for business, and these are importing services other than OIDR. Other than OIDR, sir, what is OIDR? Online information data access and retrieval services, sir. OIDR means you are playing games in mobile now, all those are OIDR services. The cloud storages, Google Play Store, I mean like Google Photos, all these are OIDR services only. Sir, OIDR is a person who can perform service only digitally. Such services are not existent when there is no IT. Okay, only with IT those services can be performed. First thing. Second one, they are highly automated, sir. No need of any manual intervention. Sir, let's say I took Netflix subscription. I want to watch RRR movie in Hindi. Sir, if I click on RRR movie, will someone in the back end from Netflix will come and put that movie for me, na? No, it will be automatically played, na? So everything it's automated, and it is possible only because of IT. Then such service is called as OIDR. Examples are advertisements over the online, okay, gaming apps, okay, normal photo storage apps, even like the cloud storage facilities, all these are OIDR. Other than OIDR service, if these people are receiving any service, then they are called as what? Non-taxable online recipients. So for them, okay, sir, let's say the OIDR service, if it is received by them, then FCM only. Other than this NTOR, if any other person is receiving import of service, then RCM only applicable. Next, sir, goods transport service from outside India to India. By way of what, sir? Aircraft or vessel. Okay, the transporter is from non-taxable territory and to importer is transporting goods, then on that also RCM is applicable. Sir, these are the total RCM transactions, sir. We have a code for this, sir, to remember. Mad girl boyfriend imported. Okay, sir. M for music composer. Okay, motor vehicles. A for arbitral tribunal, D for director, direct selling agent, G for government, GTA, I for immovable property, insurance agent, R for recovery agent services, and even RBI overseeing committee, L for long term lease of land, lawyer services, S for sponsorship, short term lending of securities, and even third one security services, BF business facilitator sir, and even remember business correspondent. Okay, imported sir, that about that import point. Okay, so this is the code to remember RCM transactions sir. Now 9.4 sir, what 9.4 sir? Very simple man. 9.4. Okay, supplier unregistered, supplying goods and services to a recipient who is registered. Supplier cannot pay tax, unregistered, no? Then the obligation is shifted to recipient. But it is not applicable on all the transactions, ma. Supplier unregistered and supplying which goods, ma? Notified goods and services to a notified recipient who is registered, then only RCM is applicable. Cement supplied by an unregistered supplier to registered promoter, RCM is applicable. Under, I mean, registered promoter or registered builder, then on this also RCM is applicable. So when a supplier supplying notified goods and services are both to a notified recipient, then RCM is applicable. Last one sir, 9 subsection 5. What 9 subsection 5 is saying sir? Sir, FCM, supplier will pay tax. RCM, recipient will pay tax. 9.5, not the supplier, not the recipient. In between, there is e-commerce operator who is connecting this supplier and recipient. Now, the tax has to be paid by whom? E-commerce operator. Sorry, e-commerce operator service means he is a person who arranges or who maintains and operates a platform which connects the supplier and recipient. He manages or operates a platform, okay, which will create a marketplace for suppliers and recipients. Or Amazon is a platform where supplier and recipient can meet. Book My Show is a platform where theaters and we can meet, not physically but online we can meet, no, and we can buy tickets, no. So they are e-commerce operators. So now the obligation is shifted to whom? Not on e-commerce operator, it is shifted to not on supplier, not on recipient, it is on e-commerce operator. So there are only 4 transactions here sir. Transportation service, where a transportation service is provided by any person. Okay, transportation means what sir here? Okay, like red bus through bookings, Abhi bus, okay, Ola, Uber, okay, including Rapido. Not the Rapido, the captain will come na, Rapido by captain. No, he's the supplier, no, actually. He will not pay tax. Who will pay? Rapido will pay tax under e-commerce operator. Ola, through Ola you book the auto. Not auto person is the supplier, no. Auto person will not pay. Who will pay? Ola will pay. Next, accommodation services, sir. That means Oyo, okay, Go Ibibo, okay, okay. These are the certain websites which are providing, I mean, certain apps or software e-commerce operators who are providing accommodation, hotel, lodging, okay, these services. Sir, in this case, the hotel one is registered. Supplier is hotel person, no. If he is registered, he will only pay tax under FCM. If such hotel guy is unregistered, then the liability is on e-commerce operator. Next is our household services like plumbing, carpenting, okay, electrician, this. Okay, the one example for this service provider is urban company, UC. Okay, urban company. Okay, through urban company we can book plumber, all these kind of services, no. So sir, again, let's say plumber is coming. If he is already registered on his own, then he will only pay tax under FCM. If this plumber is unregistered, then the responsibility is on e-commerce operator. Next, supply of food and beverages, sir. What are the apps, sir? Zomato, Swiggy. Okay, Zomato, Swiggy. Okay, through Zomato, Swiggy, if any food is supplied, then not the restaurant guy will pay tax, sir. It has to be paid by whom, sir? E-commerce operator. But if it is other than specified premises, if they are brought from specified premises, sir, then RCM is, I mean, then e-commerce operator is not liable to pay taxes, sir. What is specified premises, sir? Specified premises means where accommodation is also available, in a hotel where accommodation is also available, and per day their accommodation is greater than or equal to 7,500. Sir, that means, let's say I ordered food from Taj Banjara, okay, Taj Hotel, okay. Then Taj Hotel per day the room stay will be more than 7,500, no. So it's a specified premises. From there, from Taj Hotel, if we buy food also, through Zomato. Zomato need not to pay tax under, okay, need not to pay tax as per 9(5). Who will pay? Taj Hotel will only pay. So by this we completed even what ma 9 subsection 5. So very detailedly I'm discussing ma 9(1), 9(2), 9(3), 9(4), 9(5), and even we'll start discussing composition scheme also. Within 15-20 minutes we'll wind up even composition scheme also. So we'll continue with the topic now, composition scheme. Sir, for composition scheme, very easy, sir. First, we need to we have clarity about aggregate turnover, which needs to be calculated pan-wise. It includes taxable supplies, exempted supplies, which includes nil rated, non-taxable, exempted by way of notification, zero rated supplies, supplies made by agent on behalf of principal. And the fifth one is what, sir? Supplies made by interstate supplies between distinct persons. Excludes what, sir? GST related, inwards on which tax under RCM, and interest or discount, even though it is exempted, okay, it is generally what? Exempted, it shouldn't be what? Includable. So composition scheme, what it is saying, like taxable supplies, exempted supplies, zero rated supplies, okay, sorry, aggregate turnover includes taxable, exempted, zero rated supplies made by agent on behalf of principal, interstate supplies. What has to be excluded? GST, inward supplies under RCM, and interest or discount to the extent if it is exempted. So all these has to be mentioned here, sir. So aggregate turnover has to be computed like what? Pan wise. Has to be computed pan wise. Special category states, sir. You ask Tamil, Uttarakhand, Assam, Sikkim, Kashmir, Tripura, Arunachal Pradesh, Manipur, Mizoram, Meghalaya, Nagaland, Himachal Pradesh. Okay. So now composition schemes, sir. There are two composition schemes here. One is under 10(1) or 10(2), okay, covered here, whereas the other one is covered under 10(2)(a). So who is eligible here? Composition scheme. So persons who, they should be a manufacturer of goods. Either he should be a manufacturer of goods, or he is into supply of, okay, food, okay, food and beverages except alcoholic for human consumption, nothing but restaurants people, and any other person who is into supply of goods, any other person who is a trader of, any other person who is into supply of goods. Only these three category people are allowed here: manufacturer of goods, food and beverages supply, and the third one is any other person who is engaged in supply of goods. Okay, these three are eligible, sir. Okay, if I am doing this business straight away, I am eligible for composition scheme. No. This businesses you should be doing, any of this business you should be doing, plus your aggregate turnover should be less than or equal to, your aggregate turnover should be less than or equal to 1.5 crores in case of normal state, less than or equal to 75 lakhs in case of special category states. Okay, when your aggregate turnover is within 1.5 crores or your aggregate turnover is within 75 lakhs, then you are eligible for what? Composition schemes. Okay, sir, here for example, I am having one particular branch in Hyderabad, sir, and another branch in Mizoram, sir. Now, what is the threshold limit I need to check? Sir, whichever is lower you need to check. That means 75 lakhs. If 75 lakhs your turnover is exceeded, in Mizoram you are ineligible, and even in Hyderabad also you are ineligible. Okay, your turnover should be what, ma? It should be less than or equal to 1.5 crores in normal states. However, sir, 3 states from special category states opted to 1.5 threshold only instead of 75 lakhs. What are those? Jammu and Kashmir, Himachal Pradesh, Assam. I call it as JA. Jammu and Kashmir, Himachal Pradesh and Assam. So, where the aggregate turnover is within 1.5 crores, and if you are from normal states or from Jammu and Kashmir, Himachal Pradesh, Assam, you are eligible for composition scheme. If you are in special category states, your turnover should be within 75 lakhs, then only you are eligible for composition scheme. Okay, sir, I am having business in both the normal state and special category state, then check the lower threshold. Lower threshold will only be reckoned for you or checked for you. Okay, sir, do I need to do only these businesses? Yes, but there is a relaxation given, sir. What? Even though along with these three, plus service provided other than these three. Okay, you are a manufacturer plus service also providing. You are I mean your restaurant one, additionally service also providing, plus service provided, and such service provided within limit. What is that limit, sir? Again there is a sublimit for service. What? There is a sublimit for what, ma? Service. Okay, what does this sublimit for service says here? The turnover, okay, the service turnover should be within 10 percentage of state turnover, 10 percentage of state turnover of 5 lakhs, whichever is higher. Sir, let's say, okay, a person is having mobile shop. He is having in AP Telangana. AP Telangana. In APA, he is having both supply of good and both having supply of service. In Telangana also, he is having supply of good, supply of service. Goods turnover 40 lakhs, service turnover 3 lakhs. AP. Telangana goods turnover 45 lakhs, service turnover 6 lakhs. So now we'll check whether he is eligible for composition scheme or not. Sir, first we'll find out aggregates. Sir, state turnover I mentioned, you might have a doubt like what is state turnover? The same definitions are aggregate turnover definition, state turnover definition, same. If at all it is aggregated pan wise, the total of all the states where you are having branches is aggregate turnover. If at all you are calculating it for a single state, then that is called as state turnover. For number of states, okay, pan wise, aggregate turnover, like how many ever GST registrations you have, you'll have only one pan. So all the registrations total is aggregate turnover. Okay, to a particular state total is called a state turnover. Here state turnover is what, sir? 43 lakhs. Here it is 51 lakhs. So the aggregate is both 43 plus 51. How much, sir? It is 94 lakhs only na aggregate turnover. Sir, I am talking this as like preceding financial year only. Sir, here this turnovers we are checking is for what? Preceding financial year. Let's say for 23-24 you are checking for composition scheme eligibility, then 22-23 turnover is the base. So that aggregate turnover is how much? 94 lakhs within 1.5 crores only now. Fine. Service is also there, no? Then you need to check what? Service sublimit as well. What service sublimit is saying? 10 percentage of state turnover. That means for every state you need to check this separately. 43 lakhs into 10 percentage. How much? 4.3 or 5 lakhs, whichever is higher. That means how much are here? 5 lakhs is the sublimit na. Service here there is only 3 lakhs na. So for AP it is fine. When it comes to Telangana, sir, total how much? 51 lakhs into 10 percentage, it equals to 5.1 lakh or 5 lakhs, the limit, whichever is higher na. So how much it is, sir? 5.1 lakh. Sir, the limit in Telangana is how much, sir? 5.1 lakh only. The limit in Telangana is how much? 5.1 lakh only. But the service they provided here is how much, sir? 6 lakhs, which is more than what? The threshold limit, which is more than threshold limit. So for Telangana it is ineligible. Sir, composition scheme is PAN specific. If you are having 6 registrations linked with PAN, one PAN, if one of your registration becomes ineligible, then all your registrations become ineligible. It's not like one registration under composition scheme, other under regular scheme. All of your registrations will become ineligible. Okay, so turnover should be within 1.5 and 75 lakhs. Additionally, if you are a provider of service as well, along with the supply of goods, then, sir, main activity should be this one only, manufacture or food and beverages or other supplier of goods. Along with that, incidentally, okay, to a limited extent, incidentally you are providing services, then fine. And for that service also there is a sublimit. What it is, sir? 10 percentage of state turnover or 5%, 5 lakhs, whichever is higher. Sir, I need to clarify you one thing. For eligibility, we are checking turnover. Turnover, aggregate turnover we are checking. State turnover also we are checking. For what? Service. Aggregate turnover of what? Preceding financial year. State turnover also preceding financial year. For eligibility we are checking this. Sir, for tax calculation, on what tax liability will be calculated? Tax calculation will always be on current financial year turnover only. That also what? On state turnover only the tax will be levied. On state turnover only tax will be levied. Because for every state the revenue has to go separately, you know. That's why it has to be calculated separately only. So now coming to tax rates. Okay, tax rates. manufacturer, sir. 0.5 percentage plus 0.5 percentage on turnover of state, on turnover manufacturer. Sir, if he is restaurant and means food and beverages, then the tax rate is 2.5 percentage plus 2.5 percentage on turnover of state. If he is like others, then 0.5 percentage plus 0.5 percentage on taxable turnover of state. On what? Not total. Taxable turnover of state. So there is a difference here. When you are a normal scheme person, when you are a when you are a manufacturer, you are paying tax on your total turnover. That means if you are having exempted on that also, you are paying what? Tax. Even restaurant also on what? Total turnover. But if you are a others, that means wholesaler or retailer, you will be paying tax only on what? Taxable turnover only you are paying taxes. Okay. So now composition scheme person, 10-1 is clear na sir. 10-1 who will be there and what are the conditions? Manufacturer of goods, food and beverages, and any other person who is supplying goods. Okay, aggregate turnover should be within 1.5 crores or 75 lakhs. Sublimit for service 10 percentage of state turnover or 5 lakhs, whichever is lower. Okay, so now 10 to A. Who can be eligible under 10 to A? Sir, for 10 to A, actually it is for service, sir. But the wordings or how it can be interpreted is like, if you are ineligible for, if you are ineligible for 10-1, I mean on 10-2 scheme, and your aggregate turnover in preceding financial year is less than or equal to 50 lakhs, then you are eligible for composition scheme. Sir, I am a chartered accountant and even a cost accountant. I am providing services. Okay, only service. Am I covered under 10-1? No, because these three I'm not covered there, no. So there what it is saying, I cannot be under 10-1. So I can go to now what? 10 subsection 2A. What 10 subsection 2A is saying? My preceding financial year turnover should be within 50 lakhs to be under 10 subsection 2A. Okay. Sir, one more example, sir. There is a mobile shop, sir. Okay. They are having goods to an extent of 35 lakhs and they are having service to an extent of 7 lakh rupees. Service to an extent of 7 lakhs. What is their total? Aggregate and state same na. Only one place of business they are having. 42 lakhs into 10% means 4.2 lakhs or 5 lakhs, whichever is higher means how much, sir? 5 lakhs is the threshold, but service how much you are having? 7 lakhs. So for 10-1 he is ineligible, no. Now he can come under where? 10 subsection 2A. So for 10 subsection 2A you cannot say like it's only for service. It's for service, it's for both goods and service guy also. Only goods person also can come na sir, means sir here under 10 subsection 2A the tax rates are 3 percentage plus 3 percentage on total turnover of state. Okay, sir, if a goods person, if he wants to come under 10 subsection 2A means he can come, nobody is denying him. But the problem is, if under 10-1, if you are under 10-1, sir, goods person eligible under 10-1 within 50 lakhs only. Still he wants to come under 10 to A. Is he eligible or not? He can come. But if you are if he is a sound mind person, then he will not come, because under 10-1 the tax rates are 0.5 plus 0.5 or 2.5 plus 2.5, whereas under 10 to A 3 percentage plus 3 percentage. So no one will come under the 10 subsection 2A generally. Okay. Other than if he is ineligible for 10 subsection 1. Okay. Sir, composition scheme person return filing, sir. Composition scheme person return filing. So either 10-1 or 10-2A. Sir, the return format they are filing is through GSTR 4, sir. Okay, which is annually. Okay, annually by when, sir? 30th April of succeeding financial year the return has to be filed. But whereas payment of tax, okay, whereas the payment of tax, okay, by way of CMP 08, which has to be done quarterly, 18th of month succeeding the quarter. 18th of month succeeding quarter. Okay, this is the composition scheme person related return filing and tax payment. Next, one more compliance, sir. A composition scheme person has to file a
If he is a new registered person, then directly he can opt for composition scheme. If you are a regular person and wants to convert to section 10, then you have to make a declaration within 60 days from commencement of financial year. Okay, if you are a regular scheme person and you wanted to opt for composition scheme, then you want to file declaration within how many days, sir? Within 60 days. Okay, within 60 days you need to file an intimation that you should be under the composition scheme. Then again within 90 days from intimation you need to send your stock details like finished good, work in progress, all these details you need to provide. Why, sir? Why I need to provide? Because initially you're a registered person, so you might claim the ITC on them, but composition scheme person is ineligible, no? So you need to reverse the ITC on them. That's why. Okay, this is about the time limit, sir. Sir, a composition scheme person has to put a name board like he is registered under composition scheme. He cannot issue invoice. What he will be issuing? He will be issuing bill of supply. He will be issuing what? Bill of supply. Okay. Next one, sir. There are certain ineligible persons for composition scheme. Persons ineligible for composition scheme. So why they are ineligible, sir? Persons ineligible for composition scheme. When a person becomes ineligible for composition scheme means if he is supplying service greater than sublimit, service person greater than sublimit. If he has stock purchased from unregistered person, he is ineligible. Third one, if he is making interstate outwards, he is ineligible. Interstate inwards eligible, interstate outwards. That means even exports he is making also ineligible. Okay, fourth one, sir. If he is having non-taxable supplies, sir, what are non-taxable supplies? Non-taxable supplies means HP man in, okay, high speed diesel oil, petroleum crude, motor spirit, aviation turbine fuel, natural gas, plus alcoholic liquor for human consumption. Non-taxable supplies, he is also ineligible. If he is an NRTP, non-resident taxable person, ineligible. If he is a notified manufacturer, sir, who can be called as notified manufacturer, sir? If he is into supply, if he is a manufacturer of tobacco, sir, only manufacturers, not retailers or wholesalers. Tobacco, pan masala, okay. Next, aerated water means cool drinks, sir. Okay, ice cream. Next one, sir, bricks and tiles. Okay, bricks and tiles. If you are into manufacturing of any of these lists, you are ineligible. Next one, sir, CTP ineligible, and a person supplying through e-commerce operator. All these persons are ineligible. If one of your branch becomes ineligible, all the other branches will also become ineligible. Okay, these are the ineligibilities. Next, one more thing, sir. Sir, this guy name is Mr. Raju. He is registered under section 10. Section 10. He is having certain inward supplies on which tax is payable under RCM. So Raju is of the opinion, since he is a composition scheme person, for him 0.5 and 0.5% tax rate only applicable, no? So on his inwards also he is saying like he will pay only 0.5% plus 0.5%. Whereas actually on that particular inward supply the tax rate is 12%. He is saying like I'll pay only 0.5 plus 0.5 since I'm a composition scheme person. Is he correct? Is he valid? No, he cannot do that because inward supplies RCM has net notwithstanding effect. Okay, so section 10 wordings itself will start with respect or notwithstanding anything contained in 9th subsection 3 and 9th subsection 4. That means if RCM is applicable, then on these RCM rates only applicable, not the composition scheme rates. Next, the last point, sir. Mr. Rajesh commenced business on 1st April 2023, sir. Okay. Since his first time is starting business, he is into composition scheme person. Okay. Then by 1st July 2023, his turnover reached 20 lakhs, sir. Then by 1st October 2023, his turnover reached 50 lakhs, sir. This Rajesh, assume he is a chartered accountant, sir. Okay, his turnover is 50 lakhs. Now, till which point he can be under composition scheme is the question. Okay, sir, understand here. Okay, turnover, it's from when 50 lakhs, sir. What the provision says means, when a person registered under composition scheme until his turnover exceeds the registration threshold 20 lakhs in a financial year, this turnover shall not be includable in taxable turnover, not include in state taxable turnover, but include in aggregate turnover. So if you ask aggregate turnover of Rajesh, by October it is 50 lakhs because the whole year turnover has to be added. When you add taxable turnover, when you ask me taxable turnover of Rajesh, it's not 50, it's only 30 because the first 20 lakhs till his turnover exceeds the threshold limit, such turnover has to be reduced or has to be ignored. So from 1st April 2023 to 1st July, April, May, June. On these 3 months, he is having 20 lakhs now. On this 20 lakhs, he need not to pay any tax because this will not be includable in his state taxable turnover because till that point of time he didn't exceeded the threshold, no registration threshold, that wouldn't be taxable. Next, from 1st July to 1st October 2023, he is having again, mean July, August, September quarter, he is having how much, sir? 30 lakhs. On this 30 lakhs, since he is a chartered accountant, he can be under only 10 to 8. That means 3% plus 3% is the tax he need to pay on this 30 lakhs. Okay. CGST and SGST. But once the turnover exceeds 50 lakhs from 1st October 2023, he becomes ineligible for composition scheme, sir. Why? Because under 10 to 8, the threshold is 50 only, no? Since from 1st October 2023 is crossing 50 lakhs, he becomes ineligible for composition scheme. So that means not only the previous year conditions will be checking, even in the current year also, if aggregate turnover exceeds the threshold, you will become ineligible for composition scheme. So I discussed everything from the composition scheme, sir, not even leaving one point. You can see the main material as well. Okay, everything we discussed. Only the problems part we are not doing here, sir. Okay, the balance, other things and all we are covering. Sir, why you are not doing problems if you are asking me? First things are time constraint. I want to revise you more concepts. Sir, problems even I also wanted to discuss with you guys, but I'll discuss problems from value of supply, some 3-4 problems I am going to discuss. In IDC, I will spend some half an hour time on discussing problems. And even FTP also, last part I'll discuss certain problems. Whereas composition scheme, the problems can be solved on your own generally. Okay, there may not be an issue. Okay, generally with this particular chapter in solving the problems. Okay, so that's why I'm saying, okay, not discussing problems here, sir, only concept I'm discussing here. Okay, you understood, no? In supply I already discussed, no, two problems, okay, regarding the composite and mixed supply. So whenever it's required and whenever I think like it's complicated for you, I'm discussing. So generally, sir, in composition scheme also the problems are with aggregate turnover, or else the problems are with the last point which I discussed. No, this one only on this mechanism there are problems. So on this there is a problem, or else it is linked to non-taxable supply, or else it is linked to aggregate turnover. Only three models of problems are there which can be solved in no time by you. Okay, just pause the video here, go for take 30 minutes and solve the problems and come back and watch. Okay, thank you. Hello all. So now we are discussing with the topic value of supply. Sir, especially at CMA final level, either new or old syllabus, this chapter is having around 10 marks weightage. And most probably from this chapter, there will be only problematic question. So you guys can score easily this 10 marks. Okay, so I'm going to cover each and every concept from this lecture, I mean from this topic, and I even going to cover the problems as well in this chapter as well. Maybe not all the problems, at least selective problems we are going to discuss. So definitely you're going to get confidence from this particular value of supply video. Okay, so value of supply. Sir, value of supply here, coming to the content in this chapter. In this chapter, there is section 15, which is the main. Other than section 15, there are rules. Rules are like from 27, 28, 29, 30, 31. And there are even other set of rules, rule 31A, rule 32, rule 33, rule 34, and rule 35. So we are going to cover all the content of section 15 as well as even the rules we are going to discuss now. Okay, sir, I'm writing, but I'll write very quickly here. Section 15 subsection 1. What does section 15 subsection 1 says here, sir? Transaction value will only be the value of supply. Sir, what is transaction value? Transaction value means in between supplier and recipient, the price which is transacted is called as the transaction value between supplier and recipient. Let's say I went to shop and I paid 10,000 rupees and bought a good, whereas X went to the same shop and bargained and bought the good for 8,000. In my case, 10,000 is the value of supply, transaction value. In his case, 8,000 is the transaction value. Okay, so that is the transaction value. In between supplier and recipient, what is the price negotiated and transacted is the transaction value. So okay, so we can take transaction value as value of supply. But to take transaction value as value of supply, there are two conditions here. What are those two conditions? Supplier and recipient should be unrelated. So in a case, supplier and recipient should be related. Sir, when we can call them as related? If they are not related, then they are unrelated. Sir, then what is related? Sir, related means, okay, two persons can be called as related in the following cases. What are the following cases? When they are officer or director of each other business. When they are officer or director of each other business. First one. Second one, sir. When they are employer and employee in each. Okay, when they are having employer and employee. When they are legally recognized partners. They are what? Legally recognized partners. That means partners of LLP or partners of a firm. Next one, sir, when they are having holding and subsidiary relationship, or when any person is having greater than or equals to 25% voting power. Okay, next, when they are jointly controlled, when an entity is jointly controlled, then both of those jointly controlling entities are also called as related persons. Next, when they are acting as a sole agent, when a person is acting as a sole agent, then also they are called as related persons. Next one, sir, when a person is, when they are acting as a, sir, next, when they are acting as a sole agent and when they are as a family members, then we can call them as what, ma? Related members. Okay, so if between supplier and recipient any of these relation is there, officer, director of each other's business, they are employer, employee, they are partners, they are holding subsidiary, or they are having more than 25% voting power, or they are controlled by, they are jointly controlled, okay, or they are acting as a sole agent, or they are like family members, so they are called as what? Related persons. When they are related persons, you cannot take transaction value because of their relationship, the price may be compromised between them, so you cannot take transaction value. And the second condition which 15 subsection says, like, price must be the sole consideration. Sir, what it mean? Other than the amount they agreed, the money form, other than that, nothing has been transacted between them, only money has been exchanged between them for the good and services they offered, then we can call it as transaction value. So section 15 subsection 1 says, like, you can take transaction value as value of supply, but price must be the sole consideration, supplier and recipient should be unrelated. This is what 15 subsection 1 said. Sir, now coming to 15 subsection 2. What 15 subsection 2 says, sir? 15 subsection 2 says like, sir, there are certain incidental, okay, sorry. 15 subsection 2 talks about certain inclusions and exclusions to the value of supply. Inclusions and exclusions to the value of supply. Sir, these things, I mean, these inclusions has to be made only when they are not already included in the transaction value for the good and service. Okay, these may be certain incidental expenses or additional expenses or additional things which were not included in the transaction value, but 15 subsection 2 says like these also has to be added. So I'm talking about inclusions. Ma first inclusion is like all the duties and taxes. All the duties and taxes has to be added. Any duty or taxes suffered for on that good and service has to be added except GST and TCS. Other than GST and TCS as per Income Tax Act, all the other things has to be added. Sir, all the other taxes means what will be there, sir? Generally, excise duty. Okay, sir, excise duty is not completely subsumed. On tobacco, still excise duty is there. Okay, if any local taxes, such as like municipal taxes, entertainment tax also. Entertainment tax levied by state government alone is subsumed. If it is levied by local authority, is still there. Such entertainment tax has to be added. If any customs duties or any other taxes are there, all of them has to be added to the transaction value to arrive value of supply, except GST related and TCS. Second one, sir, where the obligation or liability of supplier is met by recipient. Sir, what does it mean? Sir, let's say supplier agreed to me like he will buy a machine, he'll sell a machine for 10 lakh rupees. Me being a recipient agreed to buy it for 10 lakh rupees. Sir, supplier, what he has to do? So all the costs associated with that machine has to be paid by supplier only, no? Now what happening means, me being a recipient supplying certain components for that machine free of cost to the supplier. Okay, so when those components are supplied free of cost by me being a recipient, that is the cost which has to be incurred by supplier. Okay, but it was not incurred by supplier, it was incurred by me being a recipient. So that component cost, that free of material cost which I supplied has to be added to the transaction value to arrive value of supply. Okay, so if any obligation or liability, the expense which has to be paid by supplier is met by recipient, such amount has to be added to the transaction value to arrive value of supply. Next, third one, sir, what here it is saying means incidental expenses. If any incidental expenses are there, all those incidental expenses also has to be added to the transaction value of good and service to arrive value of supply. Sir, what are called as incidental expenses? Incidental expenses are designing charges, okay, packing charges, commission and brokerage, okay, loading, okay, transit. Next here, weighment, inspection, transit insurance. So these type of expenses are called as incidental expenses. All these type of expenses has to be added to the transaction value to arrive value of supply. So remember one point, while writing note point, these are considered as like composite supply. Sir, what is composite supply? When two or more goods or services supplied as a bundle and they are conjunction with each other, and one of them is a principal supply and they are naturally bundled. One of them is a principal supply and they are naturally bundled, then we can call it as composite supply. So let's say you bought goods and along with that even they are agreed to be delivered. So then one good and one service, good sale along with that delivery is being provided, which is a service. That is nothing but a composite supply. That logic has to be applied while adding incidental expenses. Like in note points, why we are adding incidental expenses means in note points, institute is not providing like because of 15 subsection 2. It is giving like since they are incidental expenses, they are also chargeable to tax at that of the main supply, principal supply of that like good. Okay, so that's why we are adding even this incidental expenses also to the transaction value to arrive value of supply. So designing, packing, loading, commission, brokerage, all these has to be added. Next, fourth one, sir. If any interest, late fee or penalty charged, if any interest, late fee or penalty charged for what ma? Interest, late fee or penalty is charged for delay in payment by recipient. For delay in payment by recipient. Sir, you, I'm a supplier, you are a recipient. I agreed, I mean, I sold goods to you worth 10 lakh rupees. By what is the commitment you given me, sir? Like you said, like you will pay me within 1 month. The 10 lakhs you'll be paying to me within 1 month. But what you did actually means you took 4 months time. Okay, that means you delayed for 3 months now. For 3 months, I didn't get the 10 lakh rupees. No. So for the 3 months delay, I might ask you interest, late fee or penalty. If at all I charge that interest, late fee or penalty, such interest, late fee or penalty shall also be added to the value of supply. Such interest, late fee or penalty also has to be added to the value of supply. Sir, here two practical situations I'm saying, like two, I mean, what are the problems that will arise? Sir, I might have issued invoice initially itself, no? When at the time of sale itself, if I know like you are not going to pay me within 1 month, then I'll not even sell the goods to you, no. Okay, so what will be my expectation? My expectation is like you'll pay me within 1 month. So I raised the invoice only for 10 lakh rupees initially, but later on you made that delay and you paid me this extra interest or late fees, or let's say 1 lakh rupees also to me. So now what 15 subsection 2 is saying, it is saying like even add that interest, late fee or penalty to the transaction value to arrive value of supply. But in invoice I given only for 10 lakhs, no. Now value of supply is becoming 11 lakhs, no. So how to do? Already invoice raised, no. So what to do? Sir, in this case only there is a concept of debit note. Sir, simply saying make it as a thumb rule. Whenever the invoice value has to be further increased, invoice value 10 lakhs only, no, first be given. If it has to be increased further to 11 lakhs, then we need to raise debit note. Okay, whenever invoice value has to be raised, then we'll be issuing what ma? Debit note. Okay, so debit note has to be raised here, and interest, late fee, penalty also has to be added. Sir, one more thing here, while doing problems, sir, the interest 1 lakh we got is inclusive of GST. So if any interest, late fee you got, don't add total 1 lakh rupees to the value of supply. Multiply it 1 lakh into 100 by 100 plus tax rate. We are assuming this 1 lakh is inclusive of GST. So only the net of GST has to be added. Interest, late fee, penalty also has to be added. So since the point came, I'm even saying the time of supply point. For this interest, late fee and penalty, the time of supply is date of payment itself. Date of payment itself. Okay. Next, the last points are very important regarding subsidy. If this point you guys are clear, almost you can solve the sum here clearly. Okay, subsidy. Sir, I am writing it very clearly. Subsidy. I'll even take examples as well. Subsidy. Sir, while talking about subsidy, we need to understand 2 points. Subsidy should be linked to price. What does it mean by linked to price, sir? Linked to price means, sir, let's say government wants to give tabs, okay, the tabs to all the school children. So it entered into a contract with one tab manufacturer, let's say Lenovo. With Lenovo company, the government entered into a contract. Sir, what Lenovo will do? Lenovo generally sell a tab for 10,000 rupees. But the student cannot afford 10,000 rupees. No. So government gave directly 20 crores as some lump sum amount to that particular Lenovo company. Now Lenovo company, since it got 20 crores, it is selling each tab for only 5,000 rupees. Okay. Sir, here understand. The subsidy given by government is in lump sum amount. such subsidies we are not considering, we'll just ignore if at all such lump sum subsidy is given in the question. Here what I am saying, subsidy should be linked to price. What does it mean by linked to price? Now Lenovo company wants to sell the tab for 10,000, no, but what government is saying, like it wants to sell it to the school children for a lesser cost. So Lenovo will sell the tab to children only for 5,000 rupees. The other 5,000 rupees will be given by government directly to the Lenovo company. So it is linked to price. That means out of 10,000, 50% is paid by the customer, whereas 50% is paid by government. Such case is called as linked to price. Okay. Next, such subsidy should be given directly to whom? Directly to supplier. Sir, why subsidy will be always be given to supplier? No. So remember the example of LPG subsidy. In your house, you might be using these LPG cylinders, no? On that, the central government is providing subsidy, but such subsidy is not given to gas agency or gas supplier. That is credited into that customer's account. Such subsidies will not consider, because subsidy should be given to whom? Supplier. Okay. So these two conditions has to be checked first. Subsidy should be linked to price and should be given directly to the supplier. Then also subsidy given by central government, state government, given by others. Okay. Sir, if subsidy is given by central government and state government, generally subsidy means what, sir? Like, I mean, again repeating that school students example, Lenovo given the tab for school student for what? 5,000 only. But actual price of the tab is 10,000. Now we need to take 10,000 or 5,000, means first take 10,000. From there, the subsidy given by central government is how much? 5,000. No, such 5,000 subsidy can be reduced. Okay, then the value of supply will be 5,000. So since the subsidy is given by central and state government, there might be two approaches in the question. The value given in the question might be already adjusted to subsidy. Already adjusted to subsidy. Sir, if it is already adjusted to subsidy, what provision is saying? Adjust subsidy only. If it is already adjusted, then no action, nothing to be done. Okay. If subsidy given by central and state government has to be adjusted, but not adjusted. Okay. Already not adjusted. Then what we need to do? Reduce that subsidy part. Reduce subsidy. But when it has to be done, only when it is given by central and state government. If at all the subsidy is given by others. Others means most frequently the questions will say like NGO or any person. Others means other than central and state government. If subsidy is given by them, such subsidy shouldn't be reduced. But if at all already reduced in the question, then what we need to do? Add that. Okay. Given the value in the question, to the value given in the question, subsidy is not adjusted, then simple, ignore that subsidy. Okay. Already adjusted, then what we need to do? Add back. Okay. Not adjusted, then simple, ignore that one. Not adjusted means what we can do? Simply ignore. So okay, so these are the inclusions. Sir, exclusions also covered here, sir, because here in exclusion they'll say GST TCS shall not be included. So this is one exclusion covered with the inclusion only. In subsidy also I covered the exclusion part also. Okay, so 15 subsection 2 we need to remember 5 points. What are those? All the duties and taxes and cesses has to be added except GST and TCS. Second point, if at all the obligation of supplier is met by recipient, that part also has to be added to value of supply. Third, if any incidental expenses such as like loading, packing, transit, designing, payment, commission, brokerage, these has to be added to the transaction value to arrive value of supply. 15, fourth point, interest, late fee, penalty if any charged by supplier for delay in payment by recipient, that also has to be added to the value of supply. Okay, but there one caution, what you need not to add the total value, that interest late fee collected is inclusive of GST. So only the gross amount, not the gross amount, net amount other than GST has to be added. Next, subsidy. Okay, we discussed everything about subsidy very detailedly. So now I am moving to 15 subsection 3. Sir, what 15 subsection 3 says? 15 subsection 3 talks about discount. Sir, if at all I am buying a good means, sir, generally what we'll ask, we went to shop and we'll ask for discount, no? Otherwise, in a shop in front itself, they kept a board like 50% discount. That will definitely will attract us, no? Whenever we see board like flat 50%, flat 60%, generally we used to get attracted. So if discounts are there, do we need to tax on the total value or after discount value? That part we'll be discussing now. Discount. Sir, here discount means two scenarios, sir. Discount known at the time of supply. That means at the time of supply itself. Okay, you know that there is discount on that product. Okay, what are those instances, sir? You went to a shop, there is a big board kept there, 50% discount. That means you know. Other instance, sir, there is no board kept. You bought goods for 1 lakh rupees, but when they are billing, you talk to that particular owner and asking like, sir, give me 5% discount, 10% discount, and he provided you that. That also at the time of invoicing only, no. That means at the time of supply only, no. So such discounts are called as known at the time of supply. If a discount is known at the time of supply, such discount can be reduced. Okay, so if 1 lakh rupees discount given 10 percentage, then that 10,000 can be reduced. Taxable value of supply will only be 90,000. Okay, okay, not known. Not known means these are called as what, ma? Post supply discount. These are called as what? Post supply discounts. Now my question is, can we adjust the post supply discounts? Can we adjust post supply discounts? So here there are two scenarios, sir. To reduce post supply discounts, there are conditions to be satisfied, sir. What is the condition? There must be a precondition in the contract or agreement between supplier. Precondition between supplier and recipient. Sir, what might be such contract means? Sir, I'm a manufacturer of bikes. Okay, one particular wholesaler came to me and bought 100 bikes. Okay, sir, if at all this wholesaler sells all these 100 bikes within a 1 month and came with a second order means, then even my sales also getting pushed, no. I mean, I'm also making more turnover, no. So to make that wholesaler or to encourage that wholesaler to sell all the 100 bikes within a 1 month, within 1 month period itself, what I am doing means, when he is buying 100 bikes, I am saying like each bike 1 lakh rupees. So okay, so 100 bikes, 1 crore rupees, raised invoice, he took the 100 bikes. But in the contract I am keeping a condition like, if at all you sell all the 100 bikes in the first month itself, then I'll give you 10% discount. Okay, so this is the condition which is kept initially itself, no. That is called as precondition. First condition. Okay, first point. Second one, sir. Sir, now being a supplier, I need to raise a credit note. Sir, what is credit note? Sir, credit note concept, understand. I already said debit note. When the invoice value needs to be raised, debit note. When the invoice value needs to be decreased, credit note. I can say even logically also, sir. Sir, our in our books, I mean supplier books, customer balance will be debit. Okay, when you are increasing invoice value means you are increasing customer balance. When the debit balance has to be increased further, you will be debiting. Okay, sir, credit note means you want to decrease the credit balance. Customer's balance, which is having debit balance. So when debit has to be reduced, you'll do credit note. That's why credit note. So, but forget about debit and credit, all these things, Amma, because some students might not have good accounting knowledge. Some students, Amma, like me. Okay, so for them I'm saying, when invoice value has to be increased, debit note has to be decreased, credit note, simple. Okay, sir, here initially we sold for 1 lakh, na. That particular wholesaler sold all the 100 bikes in 1 month, no. Then I said him like, I'll give 10% discount. When we are giving 10% discount, then bike value is not 1 lakh. It coming to 90,000. Then the invoice value has to be reduced, no. That's why to reduce invoice value, for that extent I'll be raising credit note. Third one, sir, credit note by supplier, and recipient has to reverse excess ITC. Has to reverse excess ITC. Sir, what is excess ITC? Sir, I give an invoice to the recipient initially for 1 lakh. On 1 lakh GST component, recipient might avail ITC initially. But now the value is getting down to 90,000. So he claimed excess ITC, no. On 1 lakh he claimed ITC. But actually he has to claim on what? 90,000. So that extra ITC, if he agreed to reverse recipient, then such discount can be reduced. So post supply discount, to reduce from value of supply, there are three conditions. Between supplier and recipient, there should be a precondition. Supplier has to raise the credit note and recipient has to reverse the excess ITC. If these things are satisfied, such discount can be reduced. In other cases, ignore such discount. In other cases, discount has to be ignored. Okay, this is about 15 subsection 3. Now 15 subsection 4. What does it say, 15 subsection 4? When you cannot take transaction value as value of supply, then what will be the value of supply? We will be having that question. No, what 15 subsection here is saying, like, go for rules and determine value of supply. Okay, go for rules and determine value of supply. Okay, so now we continue with our discussion with value of supply rules now. So 15 subsection 4 said no already, transaction value if you cannot take as value of supply because price is not the sole consideration or because supplier and recipient are related, then go for rules. So rules, especially the first set of rules we are discussing, 27, 28, 29, 30, 31. These rules only we are discussing. Okay, very simple rules, sir. People think like they are tough, no, but they are very simple. You will only say that, no. Okay, when you feel like simple, just make a comment. Okay, rule 27, 28, 29. Sir, these can be grouped into two categories, sir. Okay, again we can categorize them into two categories, sir. Rule 27 one category, sir. Rule 28 and rule 29 one category, sir. Sir, we cannot take transaction value as value of supply, no. That's why only we came to rules. If you came to rule, that might be because of two reasons. One reason is price may not be the sole consideration. Other reason is supplier and recipient are related. Sir, when price is not the sole consideration, then you come to rule 27. When supplier and recipient are related, then come to which rule, sir? Rule 28 and 29. In this also I am making it much more clear, sir. When 28, when 29 also. Rule 28, rule 29. When rule 28, sir, supplier and recipient are related. Okay, but that relationship is other than principal and agent. Rule 29, sir, supplier and recipient are related, but their relationship is why? Because they are principal and agent. Okay, you got the clarity now? 28 is when supplier and recipient are other than principal and agent but related. 29 is they are principal and agent and related. Okay, so now I am discussing one by one. What rule 27 says means it gives some sequential points to be followed to take it as value of supply. The first one it is saying is like take open market value as value of supply. Take what, ma? Open market value as value of supply. Sir, what is open market value? Simple thing, sir. Sir, okay, you can even say like when price is not the sole consideration, barter, exchange, or like permanent transfer or disposal of business assets on which ITC has been claimed. In schedule 1 supply chapter, that point will come, no. So those are the cases where price is not the sole consideration. In that case, what this rule 27 is saying, go and take open market value. What is open market value? Sir, I am a mobile shop person. I sold one mobile to a customer for exchange at 5,000 rupees. He gave me old mobile. I took that one and gave him no mobile along with 5,000 rupees. Sir, their price is not the sole consideration. We cannot take that. What rule 27 is taking? Go and take open market value. What is open market value? If I sell the same kind of good to an unrelated customer where price is the sole consideration, the amount which I charge is the open market value. So if at all there is no exchange concept, if I sold to an unrelated customer, I'll sell it for 10,000. Then the 10,000 itself is the open market value. So 27 is saying like take that open market value. If at all open market value is not possible, then monetary value paid, monetary value consideration plus monetary value of consideration, monetary value of non-monetary consideration. Sir, what is this? I didn't understand, sir. Simple thing, sir. Sir, I am having a jewelry shop, sir. I asked one security agency guy to provide security to my jewelry shop. Okay, so he sent 5 security agents to me. So okay, and such security agency guy is not providing such kind of service to any other person. Only to me is providing service. So there is no open market value available there. So now what he is saying means, what happened means, sir, me and jewelry shop are unrelated only. But what happened means, in a month, I paid him 70,000 rupees, and to their staff I bought uniform as well. Okay, sir, here I didn't pay the whole consideration in money value, no. That's why we came to Rule 27. Okay, so now what is the value of supply? What section Rule 27 is saying means, take the monetary value paid 70,000 plus what is the non-monetary thing I given to them, uniform. Sir, the uniform cost what I had incurred. Okay, I bought that uniform for 30,000 and given to them. So the monetary value of that non-monetary thing is 30,000. No, so add 70 plus 30. That 1 lakh is the value of supply. Open market value, monetary value consideration plus non-monetary value of monetary value of non-monetary consideration. The third point, sir, C point. What here they are saying means of like kind and quality. Okay, take the value of like kind and quality. Sir, like kind and quality means nothing but identical or similar goods are called as like kind and quality. Sir, let's say, okay, this pencil, okay, this pencil, okay, a particular supplier is, okay, let's say X, okay, let me take it as an example. X supplied this kind of pencil to Y. Okay, X and Y, in between Y paid consideration other than in monetary terms, non-monetary. You cannot found open market value because X is supplying only to Y and none of the other suppliers are dealing with this kind of pencil. Okay, we cannot even array monetary value consideration plus monetary value of non-monetary consideration because Y is paying something for which you cannot even find out the monetary value. Okay, maybe Y is saying like he is giving a profit share on him. Okay, he is giving some service to him for which monetary value we cannot array. Sir, in such case, what Rule 27 is saying means, for this pencil, identify any identical or similar good is there. Okay, any other thing which works like the same, which looks like the same and has similar characteristics and similar functionalities, that good might be sold by unrelated supplier to unrelated customer. No, their price is the sole consideration. Take their value and take it as value of supply. Simple things, no sir. These three it is saying. Okay, sir, if at all A failed, B failed, C also failed. Okay, sir, why it will fail? Let me give you an example. Sir, I'm a manufacturer of cars. Okay, inspired from Tesla, and I also want to manufacture a auto drive car. For that I need technology, a software to support that. No, so I went and spoke to Infosys providing me such software. Okay, what happened there? What I agreed with Infosys means I am not paying anything to Infosys now. They'll develop a software, provide to me. I'll give 10% share in my profit. Okay, so now Infosys is not preparing such kind of software to any other person. So Infosys supplier. So there is no open market value. Second one, sir, I am not paying anything non-monetary now. How much I will pay also now it is not ascertainable because only when my business gets start we'll know. Okay, so that's why the second point also failed. Third one, sir, like kind and quality. None of the other suppliers like TCS or other Tech Mahindra, they are also not supplying any kind of such service here. So there A failed, B failed, C failed. Then what Rule 27 says is like go for Rule 30. What Rule 30 says, sir? Simply cost plus 10 percentage, or it can be read as like cost into 110 percentage. Any way you can read. Okay, so what Infosys company has to do means to provide me such software. What is the cost incurred by Infosys? Find out that and on that add 10 percentage. Then that can be taken as value of supply, sir, because of some bad luck, sir. Okay, I'll tell even that bad luck as well. Infosys allocated some 100 employees, software employees, to work on this software. But those employees are not working completely on this software. Okay, they are simultaneously working on 3 softwares. Okay, one is my software, the other 2 are different. Okay, some unrelated software, some related to a bank, something they are working. So they cannot apportionate the cost also only to this particular project. Then what happened? Rule 30 also failed. No, then come to Rule 31. What Rule 31 says, sir? Best judgment method, sir. So they are tied with your options. Okay, they are simply saying like, okay, go and take any method you want. okay, and but ascertain the value. Okay, so rule 27 is saying like go for open market value. Not possible, go with the non-monetary value, monetary value consideration plus monetary value consideration of monetary value of non-monetary consideration. Then go for the value of like kind and quality. That is also not possible. Go for rule 30. If that is also not possible, go for rule 31. However, sir, if at all, if the valuation is being done for a service, then you can skip rule 30 and go to rule 31. Value of supply for service, you can skip rule 30 and go to rule 31, but that is purely optional. Sir, these has to be followed sequentially, sir. Only if open market value not available, then come to B. If B not available, then come to C. If all the three not available, then only go to rule 30. Okay, then only rule 31. For goods, all the five order. For service, just skip rule 30 and go directly to rule 31. Okay, now coming to rule 28, sir. When rule 28, supplier and recipient are related and they are other than principal and agent. Here also two options, sir. Option 1, option 2. So option 2 is applicable only in the case of goods, whereas option 1 is for both goods and service. What option 1 is saying? Again the same things. Go and take open market value, ma. Okay, sir, my brother came to my shop and purchased goods, related person, so I might have compromised in the price. 100 rupees good, I might have given to 50 rupees, but to everyone I will not sell that, no. So to unrelated customer I might have sold, no. That price, open market value, take close. B. Okay, sir, here it said like non-monetary thing, that no, that has been skipped. Here saying like go for like kind and quality values. Okay, sir, I am a holding company. I supply raw material to subsidiary company. I only supply raw material to subsidiary company, not to anyone else. So open market value not available, no. Then the same kind of raw material with the same characteristics, if it is supplied by a different person to his unrelated customer, the price charged by them can be taken as value of supply. Sir, A also not available, B also not available, then what to do, ma? Here also go for rule 30. Rule 30 what? Cost plus 10 percentage. So not possible. Then go for what? Rule 31. What? Best judgment method. This is what option 1 said, ma. Sir, here also the same thing, sir. What? Value of supply for service valuation means A, B you need to follow sequentially. But for service, you can skip rule 30 and can go directly to rule 31. Sir, here there is a proviso, sir, which is very important, sir, in question. The first thing we need to check in a question is only this point. When, if at all the question is on rule 20, what is that, ma? Sir, proviso is if recipient is eligible to claim ITC. If recipient is eligible to claim ITC, then take transaction value itself as value of supply. That proviso is saying, sir, okay, holding company supplied to subsidiary company for 10 lakh rupees, sir. This subsidiary company is registered and it is eligible to claim ITC. On 10 lakh rupees, holding company charged 1 lakh 8 lakhs as GST, which can be claimed as ITC by this subsidiary company. In such case, since recipient is eligible to claim ITC, you need not to go and check open market value, like and quality, rule 30, rule 31. The transaction which is happened between them, that 10 lakhs itself can be accepted as open market value. That itself will be the value of supply. Okay, option 2, ma. Coming to option 2, sir, what I said, option 2 is available only for whom, sir? Only for goods. Sir, what it is saying means when goods are sold as such by recipient to unrelated customer. That means, sir, holding company supplied certain computers to subsidiary company. Sir, it is already manufactured. Now what subsidiary company will sell? It will sell to its unrelated customer. It is selling each computer at 1 lakh rupees. But whereas holding sent to subsidiary only for 40,000 rupees. The problem is what? Holding and subsidiary are related, no? And assume subsidiary is unregistered, because if it is registered, transaction value itself can be taken, no? So we'll assume subsidiary is unregistered. 40,000 is the transaction value, which we cannot take because they are related. Now, open market value, that option is anyhow there. What option 2 is saying?
this supplier, is he selling it to unrelated customer? Yes. Is he selling the good he received as such or after processing? No processing, computer already manufactured. No, it was sold as such. Then the value between the recipient and unrelated customer into 90 percentage, which is 90,000, can be taken as value of supply between this holding and subsidiary. So when goods are sold as such by recipient to unrelated customer, then the value of supply will be, value of supply equals to 90 percentage of transaction value between recipient and unrelated customer. Okay, done na? This is about rule 28. Simple no na? Rule 29, sir. Rule 29 also has two options, sir. When, sir? Okay, rule, when we'll go to rule 29 first? We'll go to rule 29 only when supplier and recipient are related and their relationship is principal and agent. What option 1 is saying? Again the same story. Go and take open market value. But B, sir, it's not saying like go and take like and quantity, kind and quality also. Simply, if you cannot find out open market value na, then go for rule 30. Okay, go for rule 30. Sir, if rule 30 is also not possible, go for rule 31. That is what option 1. Sir, what is option 2? The same one, sir. When goods are sold as such. Okay, when goods are sold as such, then by recipient to whom, sir? Unrelated customer. Then VOS equals to 90 percentage of transaction value between recipient and unrelated customer Okay, so this is about the summary of rule 27, 28 and 29. Okay, and even 30, 31 are also interlinked here, no? So that's why we covered even rule 30 and 31 as well. Very simple, no? Very simple. 27, when we will be coming, supplier and recipient are not related, but price is not the sole consideration. Examples, barter, exchange, this kind. What we have to take? Go for open market value, not possible. Monetary consideration plus money equivalent value of non-monetary consideration, not possible. Take value of like, kind and quality things, goods. Okay, rule 30 is like cost plus 10 percentage. Rule 31, best judgment method. Okay, simple now. Rule 28, sir. One rule, sir, I didn't said this. Scenarios when rule 28 might be applicable. Interstate transfers between distinct persons, stock transfers between holding and subsidiary for no consideration at all, these cases. Okay, here also I clearly said, sir. Okay, sir, rule 29, quite a few chances. Most chances are with rule 28. Okay, fine, sir. We'll continue with other rules now. Okay, we'll start with. Okay, let us continue with rule 31A. Sir, what rule 31A is saying? Rule 31A is about how, when, what will be the value of supply in case of lottery, betting, gambling. Okay, so in the case of lottery, if the lottery is organized by state or either authorized by state, then face value into 100 by 128 or the price notified in the official gazette into 100 by 128. Face value into 100 by 128 or the price notified by in the official gazette into 100 by 128. Sir, here what is the price notified in official gazette means? Sir, lottery ticket, let's say the face value is 100 rupees, sir, but based on the demand, if at all it is having more demand, then they may sell it for premium. Okay, then they'll release it through notification in official gazette by saying it as like to sell for 120 rupees, then take 120. Okay, 100 into 100 by 128 or 120 into 100 by 128, whichever is higher, sir. Okay, sir, if at all the lottery ticket has no demand, then they may say like sell it for 90 rupees only, which is for discount. Then also 90 into 100 by 128 or 100 into 100 by 128, whichever is higher will be taken as value of supply. Sir, if it is other than, okay, if it is other betting, gambling and lottery, okay, other lottery, betting and gambling, sir, in such cases whatever is the face value, that will itself will be the value of supply. Sir, now rule 32, sir. Coming to which rule, sir? Rule 32. What rule 32 means? First, rule 32 subsection 1 itself clear, sir. Sir, rule 32 is a special rule, sir.
Okay, in special circumstances, if the normal taxpayer or registered person is feeling complicated to determine value of supply, then 32 suggesting alternate ways to decide value of supply. Okay, so these are not mandatory to follow. If a supplier wants to follow, he'll take that. Otherwise, he can, okay, he can ignore these things and he can follow, okay, the normal transaction value only. First one, sir, rule 32 sub rule 2. Okay, what does it saying in determination of value of supply in the case of currency exchange or money changing? Sir, here there are two options, sir. First option, okay, and second option. Second option is about slab, sir. So in option one, okay, so let me say, sir, okay, let me take here some examples, sir. I'm having a dollar, sir. Okay, I'm having 1 lakh dollars, sir. I'm having here 1 lakh dollars, sir. Second, sir. I'm having, let's say I'm having 50 lakh rupees, sir, and I want to convert into dollars, sir. So now RBI, okay, gives a reference rate which given as like $1 equals to 80 rupees, something like RBI reference rate given. Whereas the bank rate is, sir, I'm not going to confuse you by saying like bid rate, offer rate on that. The bank rate given is like $1. The bank will, okay, the bank will provide, I mean 50 lakhs. For that, the bank will consider it as only $1 equals to 79 rupees. Okay, so now what they are saying means difference between RBI reference rate and, okay, RBI reference rate and what bank rate. How much are here? 1 rupee. Okay, divided by number of units of foreign currency. That means 50 lakhs divided by 79. 50 lakhs divided by 79. You will get number of units of foreign currency. No, multiply it with 1 rupee. You will arrive the value of supply. Okay, or else one more thing. Sir, I am having 1 lakh dollars, sir. I want to convert into rupees, sir. RBI said like $1 equals to 80 rupees, sir. But whereas a bank said like $1 equals to only 79 rupees, sir. Then also difference how much, sir? 1 rupee. How many units of foreign currency, sir? 1 lakh. 1 lakh into 1 rupee, how much? 1 lakh is the value of supply. Sir, this can be done only when RBI reference rate is available. Okay, and one of the currency being exchanged is Indian currency, because we are converting rupee into dollar. No, one of the currency exchanged is Indian currency plus RBI reference rate available. Then what the provision is saying, difference between bank rate and RBI reference rate into number of units of foreign currency. That only we need. No, sir, RBI reference rate not available, sir. Same question, sir. $1 equals to, okay, $1 I'm having, I want to convert it into rupees. The bank rate given in the question is $1 equals to 81 rupees. Sir, now what is the value of supply? Simple thing, sir. Convert into Indian value. 1 lakh into 81 means 81 lakh rupees. Into simple 1% you take, that itself will be the value of supply. That means 1% means 81,000. That 81,000 itself will take it as value of supply. Gross value of Indian currency into 1%. Okay, now next, case 2, sir. When case 2, sir, case 2 means none of the currency is Indian currency. Sir, what is that case means? When dollar is converted into Great British pounds, okay, or into when dollar is converted into dinar or something, then none of the currency exchanged is Indian currency. In such cases, convert the dollar also into Indian rupees. Okay, by what rate we need to convert, sir? Convert the both of them using RBI reference rate only. By using RBI reference rate only, convert dollar also into Indian rupee, pound also into Indian rupee. Okay, then multiply both of them separately with 1%. Whichever is lower can be taken as value of supply. Whichever is lower can be taken as value of supply. So you can even see here in my material as well. Okay, when the value of supply is 1% of the lesser. Okay, this is the value of supply. Sir, what is option 2? Option 2 gives slabs, sir. The slabs means up to 1 lakh rupees if the Indian rupees is being exchanged, 250 or 1% of that amount, whichever is higher. Okay, let's say 50,000 Indian currency is being exchanged. Then 50,000 into 1% means what? 500, no? More than 250, no? Then 500 itself is the value of supply. Second one, sir. If greater than 1 lakh but less than or equal to 10 lakhs, then slab is 0.5 percentage in excess of 1 lakh. Okay, and on the first 1 lakh it is 1000 rupees only. Sir, let's say example 5 lakh rupees is being converted, sir. First 1 lakh rupees set aside. On 4 lakhs 0.5%, no, because above 1 lakh 4 lakhs into 0.5 percentage means how much, sir? It would be 2000 rupees. Okay, 4 lakhs into 0.5 means yes, it is 2000 rupees only. Plus on first 1 lakh rupees, sir, 1%, no, 1 lakh into 1%, 1000. 2000 plus 1000, total 3 lakhs. Okay, if it is greater than 10 lakhs, if the currency being exchanged is greater than 10 lakhs, then 0.1 percentage in excess of 10 lakhs plus 5,500 on first 10 lakhs. Okay, how you got 5,500, sir? On first 1 lakh 1000. Up to 10 lakhs means in excess of 1 lakh 9 lakhs, no? 9 lakhs into 0.5%, 4,500. Total 5,500 only, no? So that's why. Okay, sir, I'm even taking an example, sir. Maybe some people might not understand. Let's say example 1, 7 lakhs, sir. Okay, 7 lakhs means first 6 lakhs one thing, above one thing. First 6 lakhs into 0.5 percentage, that means 3 lakhs. First 1 lakh how much, sir? Into 0.1, into 1 percentage only, no? 1 percentage, which equals to 1000. So here 3000, here 1000. So total value of supply how much, sir? 4000. Okay, example 2. Let's say the currency exchange is 15 lakhs, sir. That means 3 slabs, sir. Above greater than 10 lakhs. How much, sir? 5 lakhs into 0.1 percentage, which is 5 lakhs on 5 lakhs. It is not even 1%, sir. 0.1%. That means 500. Okay, in between 1 lakh to 10 lakhs, sir, we are having 9 lakhs, sir. Into 0.5 percentage, which is 4,500. Below less than 1 lakh, sir, here there is 1 lakh, which is 1 percentage, which equals to 1000. So total how much, sir? 6,000 is the value of supply. Okay, that only the provision is also saying. Okay, 0.1% in excess of 10 lakhs plus 5,500 or 60,000, whichever is lower. Sir, whenever they ask a question, they are giving certain values to be converted. They are asking both option 1 and option 2, sir. So, okay, this is most frequently asked questions from rules, sir, this one. Okay, so please don't miss this question, sir. Okay, model questions. Okay, this model questions has to be solved. Next, rule 32 sub rule 3, sir. What does it say? Value of supply when the booking tickets by an air travel agent. Okay, sir, air travel agent like Paytm is booking tickets now, helping us for booking tickets now. So what is the Paytm's value of supply? What is their commissions related value of supply? Sir, if at all domestic flight is booked, fare into 5%, base fare into 5%. Sir, I booked the ticket on discount for 3,000, but actual fare is 5,000. Now multiply 5% on base fare, not on the actual fare. Base fare into 5%. International means 10% of base fare. International means what, sir? 10% of base fare. Very easy one, sir. But this is also asked in questions. Again, rule 32(4), sir. This is also important. Life insurance. On insurance, policy premium will be collected. No? For insurance businesses, what is the value of supply? That is the question, sir. Sir, I took a policy only for risk. That means the policy get matured only on the expiry of that person. Okay, during his period of life, he will not get anything. Only on his expiry, only on accident, health insurance, these things are on life. Okay, then what is the value of supply? Means total premium paid will be the value of supply. Okay, sir, when policy is for both risk and savings. Policies for both risk and savings, sir. That means if you take any life insurance policy, most of the policies are with risk and savings. Okay, the policy like on attaining the age of 60 or expiry of the policy holder, whichever things happen, the policy will get striked and the sum assured will be paid to the nominees or to the policy holder itself. So there, if he expires, he is getting in risk coverage. Okay, if he is not expired at the age of 60 also is getting, which is called savings. So in such case, what is the taxable value, sir? Because savings part we cannot tax. Then Here they inserting a condition, sir. The savings part, if at all, it is communicated to the policyholder at the time of payment of premium. When, sir? At the time of payment of premium. At the time of payment of premium. Premium payment time. At the premium payment time, it is confirmed to the, it is told to the policy holder. Okay, then total premium minus the amount which is kept aside for savings by the insurance company will be the value of supply. Let's say 20,000 is collected, but out of that 8,000 is kept for savings. Then what is the taxable value? 12,000 is the value of supply. Next one, sir. Single premium annuities, sir. That means single premium annuities means what, sir? Here there will be a policy, but for that premiums will not be paid yearly or monthly. What a time I will pay the whole amount, which is called as the single premium annuity. Sir, in that case, what is the value of, in this case also, even though savings part is there, that is not communicated. Sir, second case I said like communicated. Here that is not communicated. Then what is the value of supply? 10% of that single premium paid will be taken as the value of supply. Next, sir, other cases. In other cases, okay, that means other cases means it is for both risk and savings, but how much is for savings is not communicated to the policyholder at the time of payment of premium. Then if the premium paid is for first year, okay, then out of the premium 25% will be taken as value of supply. If the premium paid is for subsequent years, then not 25%, only 12.5% will be taken as the value of supply, sir. Okay, only 12.5% will be taken as the value of supply. Next, sir. Next one is also important, sir. This insurance, sir, once again I am repeating. Policy only risk. Total premium is value of supply. Policy with risk and savings. And the savings part communicated to the policy holder at the time of payment of premium. Then from the premium collected, reduce the savings part. The net amount will only be the value of supply. Third one. Single premium annuity, sir. And the savings part is not communicated to the policyholder, then 10% of the policy premium paid will be taken as the value of supply. Okay. Fourth case, sir, other case. Okay, it may be for both risk as well as savings, but the savings part is not communicated. Then for first year premiums 25%, for second year on or subsequent year premiums it is only 12.5% will be taken as what? Value of supply. Okay, na sir. Next, margin scheme or for second hand goods. Sir, I'm a car dealer. Car deco, car trade, these advertisements you might have seen, no? I mean, I'm such second hand car dealer. I'll buy second hand car and I'll sell the car. Okay. Then in such cases, sir, there are two options, sir. If I am taking ITC, then I need to pay GST on my sale value. If I sell the second hand car for 5 lakhs, on 5 lakhs I have to pay GST. Sir, why this scheme has been introduced means most of the car sellers to me, second hand car, someone is selling, they are unregistered persons and selling to me. They will not charge GST, so I will not have any ITC. Okay, so that's why here most probably without ITC benefit, without ITC option is only beneficial. Okay, if at all I am claiming ITC, then I have to pay tax on my actual sale transaction value only. If I am not availing ITC, I bought second hand car, on that GST is there, but still I didn't avail ITC. In such case, the option to take value of supply is margin. Margin. What is margin? Margin means, sir, I purchased this car for 5 lakhs, sold for 7 lakhs. 7 lakhs minus 5 lakhs, 2 lakhs is there, no? That is my margin. But understand, sir, I sold for 7 lakhs, purchased for 5 lakhs, but in between I incurred cost 1 lakh. This 1 lakh, forget. We are not finding out here profit. We are finding out what? Margin. Selling price minus purchase price. Okay, that is called as value of supply. Sir, there might be a case purchased for 8 lakhs, sold for 6 lakhs. Loss, sir. Negative value of supply? No. Okay. Say ITC not available, sir. Then selling price minus purchase price is the value of supply. ITC available, sir. Transaction value. Actual sale price is the value of supply. But here, when we can take this, sir, only when positive value, then you can take selling price minus purchase price as the value of supply. Okay, sir, here for value of repossessed asset means me being a bank financed a car, financed a car, and I mean like on hire purchase system. Okay, forget about that, sir. I'm a person who sold a car on hire purchase system, sir. That guy purchased. Then he is not paying installments. So I am taking back my car. I am purchasing it now. Now reacquiring it now. What is my purchase value? What is my purchase cost? Means my actual price minus 5% reduced for each quarter use. That will be the value of repossessed asset. Next, the last ones are under rule 32. Value of vouchers. Vouchers. Sir, vouchers will be there, no coupons, vouchers. For that, what is the value of supply? Means if I give coupon, to what extent it is considered as money value? Okay, sir, let's say I'm buying 5,000 worth clothes. I gave a coupon. They reduced 1,000. What is the money value got reduced? 1,000. No? So it is the value of coupon is 1,000. That only take as value of supply. Okay. Sir, next one, sir, rule 33, sir. Pure agent concept, sir. Sir, this pure agent concept is like, sir, me being a GST consultant, I am filing GST, I am making GST filing services to my client. Okay. Then along with GST filing, sir, since that is the last date, my client GST also paid by me. My client GST also paid by me. Sir, for what I hired actually, for what I have been appointed actually to file his GST returns, to assist him in GST calculations, I have been appointed. But along with that, I from my pocket, okay, me from my pocket itself, I paid the GST liability of my client as well. So, okay, let's say tax of client paid by me 40,000 and my consultancy charges 10,000. Now I given a value invoice for 50,000 because I need to collect tax part also. No, sir. Now whether tax has to be levied on 50,000? No. Why, sir? For the 40,000 GST which I paid on behalf of client, I am acting as a pure agent. If any amount incurred as pure agent, such amount shall not be includable in the value of supply. The amount which is incurred by me as pure agent shouldn't be addable in the value of supply. That means on 50, I am collecting 50 because 40 for the tax I paid and 10 for the service I offer. Only 10,000 is value of supply, 40,000 need not to be includable. This is what rule 34 said, sir. Next, rule 34 is a simple one. Rate of exchange. If at all, no questions are actually in books, but if at all, rule 34. If the good is given in dollar value or if the transaction is in dollar value or some value, how we need to convert into Indian rupees to find value of supply? Means for goods, the value notified by CBIC will be taken. Okay, on the date of time of supply, the rate given by CBIC will be taken. Okay, for service, sir, not the CBIC one, gap, generally accepted accounting principle. That means the standard, whatever the rate suggests, that rate only will be taken. The last one, sir, rule 35. Value, if at all, 1 lakh rupees includes of tax, then what we'll do, sir? 1 lakh into 100 by 100 plus tax rate. That only will do, no? Sir, in the second set of rules, 3 are very important, sir. Currency exchange, 4 currency exchange, insurance, okay, aid travel agent, margin scheme. Okay, these 4. For you, quick recap. Again, I'm giving it's marathon, I know, but again, one more time to my satisfaction. Currency, sir. Option 1, RBI reference. Okay, one of the currency being exchanged is Indian currency. RBI reference rate available. Bank rate and RBI reference rate difference into number of units of foreign currency value of supply. RBI reference rate not available. Okay, not available. Okay, then in such case, what, sir? RBI reference rate not available. Then number of, okay, Indian currency, gross value of Indian currency into 1% is the value of supply. Next case, sir. None of the currencies is Indian currency. Exchange is happened. Dollar into pound. None of them are Indian currency. Then convert both of them into Indian currency. Multiply both of them into 1%. Whichever is lower is the value of supply. And again, then slabs is also there. Other option. Up to 1 lakh, 1% or 250 a year. 1 lakh to 10 lakhs. Okay, 0.5 percentage plus 1000. Okay, 10 lakhs above means 0.1 percentage in excess of 10 lakhs plus 5500 or 60,000, whichever is lower. This is currency one. Sir, there once you exercise option 2, you cannot withdraw it until the expiry of that particular year. Insurance or not. Only risk, total premium value of supply. Risk plus savings, and the savings part communicated to the policy holder. Then what is the value of supply, sir? Total premium minus subtract savings part, that is the value of supply. Third one, sir. Single premium annuity. You will pay premium only once, and the savings part is not communicated as well. Okay, then in such case 10 percentage will be the value of supply. Fourth case, sir, other case, that means it has savings and risk but not communicated. Then first year 25 percentage, subsequent years 12.5 percentage will be taken as the value of supply, sir. Third one, sir, paid travel agent. Domestic 5 percentage on basic fare, international 10 percentage of base fare. Next, last one, sir, this second hand goods. In with respect to second hand goods, sir, what is the value of supply? ITC available. Then their actual sale price transaction value only value of supply. ITC not available. Then they can opt margin scheme. What is margin scheme? Sale price minus purchase price is the value of supply only when the value is positive. Okay, na sir? Then we'll do only very few questions, Amma, because I need to cover more topics also. No? Only very few questions. That also one value of supply question, one insurance question, one currency exchange question. These 3 or 4 questions I'll solve. Okay. Thank you, ma. Okay, ma. So one workbook will discuss like 7.9 question, ma. Like only rules related questions I'm discussing, because the other questions are quite easy. You can answer on your own. I mean, you can understand on your own. 7.9 I'm showing them. Here the question is asking, like they are given some expenditure and they are asking us to find the value for the payment of GST as per rule 30. Rule 30 means what? Cost plus 10 percentage. So cost means how to arrive. Such cost arriving is based on CAS 4. CAS 4, cost accounting standards 4. So these type of questions are like, there are certain like chances of asking in CMA exams are high, because CAS 4 is related to cost accountants, no? So that's why. Okay, so expenditure. Sir, direct material cost per unit includes of IGST. Sir, cost never includes IGST, because IGST we can avail as ITC, no? So that's why this should be out of GST. I mean, excluding GST, we need to find out. Direct wages need to be added. Other direct expenses need to be added. Indirect materials need to be added. Factory overheads need to be added. Sir, but administrative overheads 25% only related to production capacity. That only 25 needs to be added. Selling and distribution, because it's not related to production, so it will not be added. Quality control, yes, quality is a production issue. If a good is not up to the mark, then it is because of the production issue. So that's why quality control needs to be added. Sale of scrap, if any is there, it needs to be reduced. So by doing all this, we'll be arriving the value of supply. Sir, 944 after GST 800, wages they taken. Okay, direct expenses taken, indirect materials taken, factory overheads taken. Okay, selling and administrative overheads 25 taken. Selling, you can see 150 not taken. Quality control 25 taken. Sale of scrap reduced. Then you got 1455 on the 10% margin added, because rule 30 says like 10% has to be added. So next, 7.10, sir. X Private Limited, a money changer, has exchanged US dollar 10,000 to Indian rupees 74 per dollar. Wants to find out the value of supply with respect to rule 32 sub rule 2 clause B. Sir, clause B means what? Sir, two options are there, na there. One is slab rates one is the other one. Sir, B means nothing but the slab rates one. Determine the value of supply. Sir, what are the slab rates there? Up to 1 lakh it is 1 percentage, na. 1 lakh to 10 lakhs it is 0.5 percentage. Now here it is how much, sir? 10,000 into 74 means it is like 7 lakh 40,000, sir. That means 1 lakh to 10 lakh, that is 0.5 percentage. So how to calculate, sir? Here 7 lakhs on first 1 lakh it is 1,000 rupees, sir, because 1 percentage, no. On subsequent 6 lakhs, multiply it with 0.5 percentage, which is 3,000, sir. Total value of supply is nothing but 4,000, sir. You can see the answer here also, sir. Okay. Sir, not 7 lakhs, no, 7 lakh 40, no, so that's why 6.4 lakhs. So then it is 3,200, 4,200. This is the answer, no, 7.10. Next 7.11, sir. Sir, you can see UB and Sons is an 8 travel agent. Compute the value of supply during the month based on the following details. Base fare. Sir, on which fare we need to calculate? Domestic 5%, international 10% on base fare na. So 1,900,000 into 5%, 3,16,880 into 10%. You can see 5%. Here it is 10%. Next, sir. The next question is about what, ma? Life insurance. Sir, life insurance. Again, okay, you can see here. Arihant Life Insurance Company, gross premium 180 with respect to life insurance policies, out of which 100 have been allocated for investment on behalf of the policyholders. Compute value of supply of life insurance, okay, in the following case. If the amount allocated for investment has been intimated to policyholder at the time of supply. Sir, total premium collected how much, sir? Here 180 lakhs. And the amount of investment is intimated to the policyholder. That means how much here it is 100 lakhs. If it is intimated, then what is the value of supply? Gross premium minus amount allocated for savings. That 100 lakhs subtract. So value of supply is 80 lakhs. Second case, sir. If the amount allocated for investment has not been intimated by insurance company to policyholders at the time of providing of policy. If amount investment is not allocated, then it will come under what, sir? Others category. Then since we'll assume like everything is a first year one, okay, everything is first year one, so 180 lakhs into 25% will be taken as the value of supply. Third one, if the gross premium charged is only towards risk cover, then total 180 lakhs will be taken as value of supply. Okay, sir, here you can see 180 minus 100, 80 lakhs, 25% of 45 lakhs, and the third one 180 lakhs. Next one, sir, coupons, sir, that are redeemable for food products retail outsold. Coupon 900, sir, but whereas it is redeemable for 1000 rupees, sir. What is the value of supply, sir? Which rule says, sir? Rule 32 only, sub rule 6 says, sir. What is the value of supply, sir? Here the value of supply will be 1000 only. The value for which it will get okay, the value for which it will get redeemed, sir. Next, a pharmaceutical company supplies drug intermediates to its own unit, sir. A pharma company supplying to its own unit, sir. Okay, that means what? They are distinct persons, nothing but related persons, for conversion into formulas. Okay, the drug intermediate is exclusive to this company and there is no market sale India of drug invent. Goods of like and kind and quantity are also not available. After conversion, the finished product is sold from the said unit itself by the company. How will the value of supply this drug intermediate be determined under GST laws? Sir, pharmaceutical company sending intermediate to another unit of pharmaceutical company. This intermediate is further processed, sir. Sir, when supplier and recipient are related and they are not principal and agent, then we need to go to which rule? Rule 28, na, sir. What rule 28 says? Like option 1, option 2. Option 2, when it will come for goods, when the goods are sold as such. Here it is not as such. So option 2 gone. Option 1 says like open market value. Here if you could see market sale in India, the drug intermediate is exclusive to this company. So they are not selling to anyone else. There is no open market value. There is no market sale in India. Okay. Like and quality are also not available. So then both the A and B are also not available. Sir, if at all recipient is related, then we can take transaction value. That information is also not available. Then what is the option we have, sir? Rule 30. What rule 30 says? Cost plus 10% or cost into 110%. That is only the answer. Sir, next questions are again forex related question. $1,000 at 74. RBI reference rate 74.6, sir. Simple, sir. Difference how much, sir? 0.60 into 1000. How much, sir? 600. 600 is the value of supply, sir. Okay. $2,000, sir, sold to Meenavati at the rate of 74.5, sir. RBI reference rate not available, sir. Then what we need to do, sir? 2000 into 74.5. Convert into Indian currency and multiply it with 1%, sir. How much, sir? Here it is 1,490, sir. When we go to the slab rates one, you know, here how much, sir? 1000 into 74, no? So 1000 into 74 means it will be 74,000, sir. Up to 1 lakh. That means into 1%, which equals to 740. When we go to option 2. Here the total is $2,000 into 74.5, sir. That means it comes to 1,45,000 something, sir. So 1,49,000. So 1,49,000 means in excess of 1 lakh 0.5% up to 1 lakh 1%. It will come to 1245, sir. Sir, this question, normal general question only, sir. I am not discussing this. Sir, this question is about the pure agent question, sir. Okay, this is also I am not discussing much, but you can understand that one simply. Sorry, not that question, sir. 7.16 is the pure agent related question. Okay, we'll be sharing our materials anyhow in Telegram group. This pure agent question also try, sir, because not a tested. Okay, that question is also. Okay. Thank you, guys. We'll meet you with the next chapter. So now we are into the topic supply. So supply here, sir. So supply means, okay, before going into the topic, we'll be discussing few definitions are very quickly. Goods means every kind of, okay, goods means what, sir? Every kind of movable property. Only if it is movable, it can be called as good. It has certain inclusions and certain exclusions. So what are exclusions, sir? Exclusions are money and securities. So that means goods means every kind of movable property. If it can be moved from one place to another, then it is called as good, but excludes money and securities. So money and security can never be called as what, sir? Can never be called as goods. Okay, money includes what? Money includes not only the currency, it even includes the legal, okay, the legal tender, okay, legal currency, okay, DDs, checks, all cash and cash equivalent. Securities means shares, debentures, bonds, options, futures, all these are excluded from the definition of goods. However, it includes actionable claims. So what are actionable claims? Actionable claims means claim to any debt. Okay, if any debt you can claim, okay, which is unsecured, you are having a paper, with that paper you can claim a debt, okay, that is yours, okay, then it is called as what? Actionable claim. One example is what? Lottery ticket is an actionable claim, so it is a good. Okay, inclusions, actionable claims: growing crops, grass and things attached to land. Growing crops, grass and things attached to land, but agreed to be severed before supply. Agreed to be severed before supply. So the what is the definition of goods, sir? Goods means if it is movable, it is good. Excludes money and securities. Includes actionable claims, means lottery ticket and all, and even growing crops, grants, but which are agreed to be separated. Severed means what? Separated before the time of supply. Next one, service. Service means anything other than goods, money and securities. Anything other than goods, money and securities is called as what? Service. Sir, if there is a building which is sold, building is mobile? No. Is it money? No. Is it service security? No. Then what it is, sir? It is service only. It means anything other than goods, money and securities. Okay. Service even includes transaction in money, transaction in money for separate consideration, for separate consideration, for converting in, for conversion in one form to another. So directly money is not a supply, but for converting, sorry, if you went to bank and took DD, on DD value no GST, on money value there is no GST because both are money. But for giving money and getting DD, you need to pay certain DD charges to the bank na, for converting money in one form to another. Sir, I have Indian rupees, I want dollars. I went to bank and given Indian rupees, and the bank is providing me dollars. In such case, on dollar value no GST, on rupee value also no GST because both are money. But there is exchange commission which is taken by bank na, on that commission is called as what? Service. Even transactions in facilitation of securities is also called as what? In facilitation of securities is also called as service. Is also called as service. Next, taxability. Sir, even facilitation of securities is nothing but what, sir? Like buying and selling shares. The stockbroker services is also called as service. Taxability of securities, sir. Forward contract. Is it a supply? Is it a good? Means if it involves delivery of underlying, sir, both forward contracts and goods, futures. Delivery of underlying commodity. If it involves delivery of underlying commodity, then it is supply. Okay, sorry, then it is good only. It is to be treated as supply. Okay, if it is no delivery, only settlement, margin settlement. Okay, then it is not goods. If it is not goods, then there is no supply at all. Okay, forward contracts and futures, sir, you need to check whether the delivery is sorry whether how the contract or futures is getting closed, whether by way of delivering the underlying commodity or just by settling the or by margin settlement. You need to check. If it is by way of delivering the underlying commodity, then it is supply of goods. If it is only margin settlement, then it is supply. Okay, if it is only margin settlement, then it is not a good itself. Interest rate swaps. Okay, these interest rate swaps are not goods. Okay, these are securities. Okay, these are securities. That means excluded from definition of goods and service. Okay, extending loans and advances. So loans and advances are given for a consideration of interest. Okay, okay, even though it is a transaction in money, but there is separate consideration interest involved now. So it is a service only. But this service is exempted. This service is what? Exempted. So loans and advances, by way of offering loans and advances, if there is any interest and discount collected, such interest is a service, but it is exempted. Sir, here you need to understand, if interest, okay, is a independent transaction. So sorry, if offering loans is an independent transaction, that means it is not incidental to any transaction, then interest is exempted. However, if offering loan is an incidental activity, offering loan is what, sir? It's not an independent activity, it is an what? Incidental activity. What, sir? When it can be called as incidental activity, sir? Okay, a supplier sold a bike to recipient. A bike to recipient. Okay, on this bike actually 1 lakh rupees, sir, but he financed it. Okay, and agreed to collect the money in installments. For that, he is charging 1.2 lakhs. That means in this 1 lakh, only 1.2 lakh, 1 lakh is only goods value, whereas 20,000 is nothing but what? Interest only, na. But still here interest collection, offering loan is not the main activity. It is incidental activity. Main activity is what? Supply of bike. In such case, this interest is also taxable. So the exemption on interest is available only if it is an independent activity. If it is an incidental activity, then exemption is not available. Sir, here there is a clarification regarding short-term lending of securities, sir. Let's say there is a lender, there is an intermediary, and there is a borrower. Okay, so this borrower has some shortfall of securities, so he approached intermediary. Intermediary approached this lender, so this lender given securities to intermediary, and this intermediary given securities to borrower. Okay, since this borrower is having shortfall of securities, he need to maintain certain level of securities as per RBI guidelines, but he has shortfall. To cover up that shortfall, to fulfill that shortfall, he is lending the security. I mean, he is taking the securities by way of borrowing. Okay, now this borrower has to pay intermediary lending charges plus commission for intermediary, and intermediary now give the lender lending charges, and from this lender this intermediary will also collect commission. So now the question is whether this lending charges or lending fee collected for short term borrowing of securities is a service. As the clarification says, like it is a service only, lending fee. Sir, whether the intermediary charges, intermediary collected commission, whether that commission is a service, yes, that is also a service. And to go further, sir, this lending fee service, this short term lending of securities covered even under RCM 9 subsection 3. That means on these lending charges, GST is not paid by lender being the supplier. It is paid by whom, sir? Borrower himself. He is the recipient, lender is the supplier. It will be paid by whom? Recipient only. Next, business, sir. Business, sir. Okay, you will already know business means, so not much important to know it much more deeper or further. Business means any trade, commerce, manufacture, okay, profession, vocation, adventure or wager, any other activity for a monetary, whether or not for a monetary benefit or not. Okay, it can be called as what? Business. Even the incidental to above are also called as business. Irrespective of volume, frequency, it can be called as what? Business. Next and the third points are from here important. Okay, admission to premises. Admission to premises, that means park collecting entry charges or theater collecting entry charges is also called as what? Business. Next one, sir. Okay, collecting membership fee by an association. If an association is collecting some membership fee from its members or collecting certain charges from its members, then that is also called as what? Business. Okay, the business of totalizator means a race organizer. His activity is also called as what? Business. Okay, next one, sir. Consideration. What is consideration, ma? Consideration means anything which is paid or agreed to be paid or agreed to be paid, which is already paid or agreed to be paid. For what, sir? For supply of goods, services or both. For supply of goods and services or both, if anything is paid or agreed to be paid by recipient or a third person. Okay, so the consideration need not to be paid by the only recipient. It can be paid even by a third person in money or otherwise. So the consideration also need not to be paid only in money form. It can be paid even in any form other than money also. So consideration means which is paid or agreed to be paid. For supply of what? Goods and services or both. By a recipient or even by a third person in money form or otherwise, but it excludes what, ma? Subsidy given by central government and state government. If at all any subsidy is received from central and state government, that shall not form part of consideration. This you will understand better in value of supply topics. Next ones are here. Any amount paid for forbiddance to act or for tolerating an act. Okay, that means someone is saying me like he'll give me 5 crores for not taking classes in YouTube especially. Okay, then the amount which I am getting is for forbiddance to act. For by taking 5 crores I am not taking classes now. For forbiddance to act, if any person is paying, that is also called as what? Consideration. Next definitions are related persons means employer employee, if they are partners. Okay, if there is controlling authority, okay, controls or at least greater than or equal to 25% voting power, then they are related persons. Okay, if they are part of family, related persons. If they are acting as a sole agent, related persons. Okay, if they are controlled, okay, if two entities controlled by a common person, okay, if A limited, B limited are controlled by C limited, then both AB are also related persons. If they are together controlling a person, then also they are called as what? Related persons. Related persons means if they are officers and directors of each other business, if they are employer and employee relationship, if they are partners, if they it is having control or ownership greater than 25%, if they are family, if they are acting as sole agent, if they are two or more controlling, okay, two of them are controlled by a common person or together controlled jointly, then they are called as related persons. Now Bucks contract, sir. What is Bucks contract means? Bucks contract means it's a contract. Sir, I'm not telling you the exact definition, I'm telling the concept here. Is a contract involving supply of both goods and services. Okay, it involves both supply of goods and services in relation to what? in relation to an immovable property. In relation to what? An immovable property. So in relation to an immovable property, okay, if any contract has been executed which involves both supply of goods and services, then it is called as what, ma? What? It is called as a works contract. Okay, let's say, sir, I want to construct a house. Okay, instead of me buying cement, iron, sand, everything, and even okay, entering into contracts with the laborer, I just I just entered into a contract with a contractor and said him I'll give you 70 lakhs, construct me a house. So he took 70 lakhs and he only supplied the cement, iron and the bricks, everything, and his persons only constructed even the house. Then he is supplying me service, construction activity, and he supplied me goods as well, the bricks, the paints, everything, no. So then that is called as what? Works contract. Why? Because it is in relation to immovable property. It is called as works contract. Works contract means a contract involving construction, fabrication, installation, okay, modification, repairs, alteration, fitting out. So this like in this way the definition will go. But in simple, okay, to understand what is works contract, it's a contract which involves supply of both goods and services in relation to what, ma? In relation to construction or in relation to an immovable property, it is called as works contract. Okay. So now I am into the section 7 of CGST Act. Sir, in supply chapter there are only two sections, sir, but along with there are schedule 1, schedule 2, schedule 3, and there are lot many clarifications issued to know whether it is a supply or not. Okay, lot many. There are lot many clarifications also has been issued here, sir. Okay, so now what is called supply? Understand, sir. Section 7, to call it as supply. First we'll be discussing 7 subsection 1. Here there are clause A, clause B, and there is even clause C. 7 subsection 1 clause A says like to call it as supply, it should be carried out by the transaction should be carried out by a taxable person. Who, sir? Taxable person. Who will be called as a taxable person, sir? Taxable person means a person who is registered or who has the liability to register. He is not yet registered, but he has the liability to register. He is also called as taxable person. Okay, and the transaction should be in relation to goods and services or both. Okay, next it should be for a consideration. The transaction should be for a consideration and it should be in the course or furtherance of business. It should be in the course or furtherance of business. So carried out by a taxable person, involves goods and services or both, for a consideration, okay, and in the course or furtherance of business. And last one, it should be an activity called supply, which includes, it should be one of those activities included here. So whenever it is like inclusive, that means they are not giving a circle to it. I mean, they are not closing it, it's open ended. Okay, they cannot clearly define what is supply. So that's why they are giving inclusive definitions. They are saying or they are giving examples only. So what are those inclusions, sir? Supply includes sale, transfer, okay, barter, exchange, license, lease, rental, and even disposal. So if all these 5 conditions are satisfied, then it is called as what, ma? It is called as supply. So what are those 5 conditions, sir? It is carried out by a taxable person. It should involve goods and services or both. It should be for a consideration. It should be in the course or furtherance of business, and such transaction is a activity listed here such as sale, transfer, barter, exchange, license, lease, rental or disposal. Sale and transfer are one and the same, sir. Whereas barter, okay, goods and services are exchanged for equivalent value, sir. When it comes to exchange, it involves exchange of goods and services. But in addition to that, there is even monetary consideration. License, you know, okay, taking like mining license, spectrum license, lease. Okay, what is the difference between lease and rental, sir? Lease generally long term, rental short term. Disposal means when you are scrapping your capital goods or when you are scrapping your assets or selling your assets, then it is termed as what? Disposal. If all these five conditions are satisfied, then as per 7 subsection 1 clause A, it is called as what, ma? Supply. Now 7 subsection 1b says like, okay, I'll write down beneath, sir. 7 subsection 1b, little important. 7 subsection 1b says like, forget about 1a. In 1a you discuss the 10 conditions now. Now 1b says like, if at all there is an import of service, if at all there is an import of service for a consideration, import of service for a consideration, then it is altogether what? Supply. You need not to check whether it is a taxable person or not. Okay, in the course or furtherance of business, so nothing need to be checked. If it is an import of service for a consideration, it is supply, irrespective of in the course or furtherance of business. Okay, whether it is related to your business or personal purpose. If at all it involves a consideration, it is called a supply. But there is an exemption given, sir, here. There is an exemption given. Sir, by this definition, what we are understanding, if it is if there is consideration, even for personal purpose also it is supply now, because irrespective of business. But the exemption says like, where supplier is located in non-taxable territory and there is a import of service, and such import of service is made by, okay, such import of service is made by, okay, made by central government, state government, union territory or local authority, okay, or by any government authority, or by an individual unregistered, or by a charitable entity covered under section 12A or 12AB. If recipient is any of these persons and they are individual unregistered, sir, and this is other than for business. This service is imported for other than for business. Supplier in non-taxable territory. From there, there is an import of service to a central government, state government, union territory or local authority, to government authority, or to an individual who is unregistered and receiving those services for other than business purpose. And if it is a charitable entity and this service imported is other than OIDR, what is OIDR, sir? Online information data access and retrieval service. If at all it is automated, OIDR means such service can be performed only through digital interface. Only when IT is there, such service can be provided. And most of those services are automated. Then such service is called as what? OIDR, online information data access and retrieval services. So supplier is providing a service which is import, recipient central government, state government or government authority or individual unregistered other than for business, and charitable entity covered under 12A or 12AB, and the import of services other than OIDR, then these services are exempted. Hence there is no, it is a supplier but it is not taxable. Sir, let's say I took a design, okay, for construction of my house. I took an architect design from Dubai, architect design. So such architect provided me a service now by giving me plan. That is import of service. I paid consideration to him for a consideration. Even though it is for personal purpose, what it is called as per 7(1)(b, it is supply. But when it comes to exemption, sir, I am an unregistered individual, okay, and I'm importing service which is other than for business purpose, and architect service is not even a OIDR service. Hence it is what? Exempted. So this is about what, sir? 7 subsection 1b. So 7 subsection 1b clearly says like, if it is an import of service, okay, if it is an import of service, okay, other, if it is an import of service, don't bother about business or not. If there is consideration, it is supply as per 7 subsection 1 B. Now 7 subsection 1 C says like, okay, even though no consideration transactions, even though there is no consideration, still they can be called as what? Supply. These are covered under schedule 1. Where these are covered, sir? These are covered under schedule 1 of CGST Act. So now we need to discuss what, sir? Schedule 1 of CGST Act. We need to discuss schedule 1 of CGST Act. Okay, what schedule 1 says like, sir, there are certain transactions which will be treated as supply even though there is no consideration. First one, sir, between principal and agent. Sir, where a principal supply goods to agent and agent supplying those goods to customer. Now the question is, customer is paying consideration to agent, is there? So this goods, okay, but whereas agent is not paying anything to principal. So now the question is, the transaction between principal and agent is supply or not? This can be determined, okay, based on a clarification issued. This clarification says like, invoice is the determining factor. Which is the determining factor, sir? Invoice is the determining factor. If at all this principal issues an invoice in the name of agent, okay, first invoice, and agent again issues another invoice to the customer in his name. This invoice is issued in his name. Whose name, sir? Agent name. Then two invoices are issued. No. Then the transaction between this principal and agent can be called as what? Supply, because invoice is issued by principal to agent and agent also giving directly invoice in his name, no? So then the transaction between principal and agent is supply even though there is no consideration. But if at all the principal is issuing invoice directly to customer, then okay, then it is to be assumed like principal only supplying goods directly to the customer. In this case, okay, in this case what happens means, principal to agent no supply, okay, whereas principal to customer it will be treated as supply, okay, in this scenario. Whereas in this scenario, principal to agent is also supply, agent to customer is also supply. So invoice, here two invoices, two supplies, principal to agent and agent to customer. Here only one invoice, so the supply is between only principal and customer. Sir, here there is one more clarification also, sir, about delectatory agent. Whom, sir? Delectatory agent. So what is this delectatory agent? This delectatory agent will bear the credit risk. That means if the ultimate customer defaults, okay, the risk will be paid by this delectatory agent, not by the principal. Since delectatory agent is bearing risk, he will be charging extra consideration for that. Okay. So now, sir, the first part is linked to the second part. Principal, there is a delectatory agent and there is a customer. The same scenario, sir. Principal supplied goods to DCA, but DCA not only goods, because he is even bearing the credit risk. Na? I mean, he is offering credit. DCA will offer credit and bear the credit risk. Okay, so along with goods, he is even giving loan extension kind of service. Offering credit is nothing but what, sir? Loan extension service only, na. So now we need to check based on how the invoices has been issued. Okay, scenario 1, principal to DCA invoice raised and DCA to customer also invoice raised. In this situation, in the previous example, what we said, sir, there are two supplies involved. I said, na, this is scenario 1. Okay, what are those, sir? Principal to DCA invoice there. Okay, it is a supply of what, sir? Goods. Next, in between DCA to customer, there is goods as well as loan extension. DCA to customer, there is supply of goods plus loan extension service. Sir, but what is the main supply here? goods is the main, loan extension is incidental activities. So the whole together it will be treated as what? Supply of goods only. Supply of goods only. So principal to DCA is also supply of goods, whereas DCA to customer involves both goods supply as well as loan extension. Together it is treated as what? Supply of goods. But alternate case, sir, if principal directly issues invoice in the name of customer, then this is situation 2. In this case, principal to DCA, there is goods. So it's a supplier. No, it's not a supplier. But DCA to customer also it is not a supply as per previous example. Why? Because the supply will be treated as in between whom, sir? Between principal and customer. But DCA to customer there is loan extension service, sir. Sir, in scenario 2, principal to customer will only be treated as supply of goods. That means principal will only be considered as directly supplied goods to customer, since invoice is raised directly by principal to customer. So the supply of goods is also made by whom? Principal. But DCA to customer is even offering loan extension. Then for such thing invoice can be issued. No, this is exempted because I already said in the beginning of the chapter, sir, when any interest or discount is collected by way of offering loans and advances, if it is an independent transaction, then only exempted. Otherwise, taxable, I said. In this case, sir, DCA is supplying goods and loan extension. So only loan extension is not incidental. So it became taxable. But when it comes to scenario 2, DCA is not supplying goods. Who is supplying goods? Principal only supplying goods directly to customer. So DCA to customer, this loan extension service, okay, is an independent transaction. So it is exempted. Okay, sir, understand. DCA is not considered as supplier here. Who is considered as supplier? Principal for goods, because invoice is raised by principal Whoever is raising invoice will only be treated as supplier. In scenario 1, 2 invoices, so 2 suppliers, 2 supplies. Okay, but here only 1 invoice so only between principal and customer supply of goods. But DCA is offering loan extension. No, further taxability means it is exempted. This is the first one, sir, between principal and agent. Next one, sir, second one. Permanent transfer or disposal of business assets on which ITC has been claimed. Permanent transfer or disposal of business assets on which ITC has been claimed. So that means, sir, A Limited purchased 10 laptops. On this ITC at 1.8 lakhs, GST component is there. This 1.8 lakhs is claimed as ITC by A Limited. Okay, now what A Limited is doing means, it is donating these 10 laptops to a school, or they might be damaged. Okay, donation, or it may be damaged, or they may be transferred for personal use. Okay, in all these cases it is considered as what? Disposal or permanent transfer. But on these assets which were disposed or permanent transfer, already ITC claimed. Yes, since ITC claimed, giving this donation, giving this damage or lost, or this personal removal will also be treated as what? Supply. Will also be treated as supply. If at the time of purchase I claimed ITC, then subsequently, even though it is not sold, it is lost, or it is transferred for personal use, or it is donated, these 3 instincts will also be called as what? These 3 scenarios will also be called as what? Permanent transfer or disposal. Since already ITC claimed, this is also has to be treated as what? Supply. Third one, sir. Okay. Supply of goods and services are both between related persons. If in between related persons, if any goods and services are both are transferred, okay, sir, A Limited, B Limited are related persons, sir. Okay, from A Limited, if any goods are sent to B Limited without any consideration, still this is called as supply only. This is taxable. So even though without consideration, if any goods and services are supplied to related persons or distinct persons, who are called as distinct persons, when a person is having multiple registrations, then each of such registration has to be treated as a separate person, which is nothing but distinct person. Let's say X Limited is having one registration in AP, one registration in Telangana. Okay, but they are linked with the same PAN number. But this AP registration and Telangana registration has to be treated as distinct persons. That means nothing but separate persons. So when any goods or services are supplied between related persons without consideration, then that also has to be treated as what? Supply. However, here there is a proviso. What is this proviso, sir? When employer providing any gifts to employee, these gifts are not covered in employment contract. Okay, other than those which are covered in employment contract. So generally employer has to give salary now. Other than that salary, he is giving gift also. But it is not mentioned in your offer letter or contract of agreement, contract of employment. In that there is no clause like employer has to give gifts. So this is without a contract, employer is giving gifts to employee free of cost. Okay, if the aggregate value of gifts in a financial year is less than or equal to 50,000, then it is not a supply, even though it is between related persons without consideration. If the aggregate value of gifts in a financial year for a single employee is less than 50,000, then it need not be treated as supply. This is the proviso which is given here. Okay, the last fourth point, sir, import of services. Sir, here also, sir. 7-1. Here also, import of service. Import of service. Sir, what it is saying means, import of service without consideration. With consideration means already supply, which is mentioned where in 7 subsection 1b it is already mentioned. With consideration means it is already supply. Here without consideration there is import of service, and if such supply is from, such import of service is from related person, from whom? Related person, and if it is in the course or furtherance or business, if it is in the course or furtherance of business, sir, import of service, even though no consideration, if it is from related person in the course or furtherance of business, then it can be called as supply. So even though there is no consideration, what should be there? The supply should be from a related person and it should be in the course or furtherance of business, then it is called as supply. Sir, I want to construct my factory building. For that, my brother in UK is providing a design. Brother in UK is providing a design. Sir, and I didn't pay any consideration to my brother. In that case, without consideration only, I imported the designing services now. Okay, from whom I imported my brother, related person now. And this is in the course or furtherance of business only. Since this is for my factory building, so hence it has to be treated as what? Supply. But in the same case, if I imported the design for my personal house, then without consideration from a related person, but not in the course or furtherance of business, no, it cannot be called as what? Supply. Okay, so by this we completed what schedule 1 also. What schedule 1 is saying? Principal to agent, supply. If at all there is an invoice given by principal to agent in the name of principal and agent is issuing in the name of customer. Next, permanent transfer or disposal of business assets on which ITC is claimed is also supply. Third one, supplies between related persons or distinct persons, both goods and services, is also a supply even though there is no consideration. Fourth one, import of services, even though there is no consideration, but in the course or furtherance of business and it is from a related person, then also it can be called as what? Supply. Next, there is one new section introduced here, sir. 7 subsection 1 clause A. 7 subsection 1 clause A. Sir, this is previously there in schedule 2. To give it much more validity, okay, legality, it was introduced in 7 subsection 1A. Sir, there is an AOP. It is supplying certain goods to members, and from members it is collecting share of cost or certain amount from members. So this transaction is a supply only, and it is supply of goods only. This supply of AOP providing goods to members, and for the goods provided it is the cost reimbursement or collecting the share of cost is a supply only, and it has to be treated as what? Supply of goods. This is what given in 7 subsection 1a, which is a new point, sir. Okay, sir, actually what happened here means in one particular case the high courts, I mean a particular high court has ruled like AOP and members are the same because of principles of mutuality. The members collectively is called as AOP, so members and the group are same. So if me giving goods to me, can it be called as supply? So by taking that logic, one particular high court said like AOP giving goods to members for share of cost or reimbursing the cost is not a supply. It has been ruled. Okay, but to nullify that judgment, to give this part much more validity, they included it here 7 subsection 1 clause A. Okay, next one, sir. 7(1)(a). Sir, I am not discussing this detailedly. If at all you needed, you go and check the schedule to clearly. 7(1)(a) says like if it is a supply, then it has to be categorized as either supply of good or supply of service. Either it has to be categorized as what? Supply of good or supply of service. So this categorization says like, sir, if it involves transfer of ownership of goods, that means title, then it is what? Supply of goods. Okay, if title not transferred, sir, title not transferred, only what? Possession. Sir, someone asked me on rent, okay, my mobile, okay, sorry, or my car. Okay, someone came to me and asked like he want car on rent for 5 days. So I given my car. I am not transferring the title just because he took for 5 days, he will not become owner, not title, I am not giving. But possession I given. Okay, since he is using the car, possession I given. So this is what? Supply of service. This is what? Supply of service. Why? Because title is not given, but possession is given. Whereas composite supplies such as food and beverages except alcoholic liquor and works contracts which involves both supply of goods and services, these also has to be treated as what? Services. Even other things are, even that ownership is going to be transferred or title is going to be transferred at a later date, still it can be called as what? Supply of goods only. Okay, it need not to be like the title has to be transferred today itself. Even if it is going to be transferred after a certain period of time, still it can be called as what? Supply of goods only. Next, or repairs, supply of service, lease, supply of service, rent, supply of service. Okay, forbiddance to act, tolerating an act, that is also supply of service. Okay, next one, sir. 7(1)(a) done. Now 7 subsection 2 talks about negative list. What is negative list, sir? There are certain transactions covered here. These transactions will not be considered as neither supply of goods. Okay, these are covered under schedule 3, negative list. Neither supply of goods nor supply of services. Neither supply of goods nor services. What are those, sir? First one, sir, funeral, burial, crematorium services. Funeral, burial, crematorium services, including transportation of deceased. Including transportation of what? Deceased. These are not supply of goods and services. Next, supply of land and building where entire consideration received after completion. Where entire consideration received after completion of building. Sir, when the if at all the consideration is received before the completion, then it will be classified as works contract and it is a supply of service. Where the whole consideration received after completion. Sir, there is a house which is constructed 10 years back. Now that house is sold. whether it is covered under schedule 2, 3 or not. Yes, it is covered under schedule 3. Why, sir? Because the entire consideration is received after completion only, na. So it is also covered under negative list. It is not a supply. Third one, sir, actionable claims. What? Actionable claim. Sir, in goods you said actionable claim, na? That means it is a supply, no? So you might have asked me like that. But actionable claims, except betting, gambling, lottery, all the other actionable claims are covered under negative list. That means betting, gambling, lottery are still taxable supplies only. Other than that, if any actionable claims are there, such as like bills of exchange checks, they are not supplies. Actionable claims other than betting, gambling, lottery. Okay. Next, services provided by MPs, MLAs, or any persons who are in constitutional positions. Their services are also not, I mean, their activities neither supply of good nor supply of services. Where any services provided by employee to employer in the course of employment, this is also not a supply. In the course of employment, if employee is providing any service to employer, this is also not a supply covered under schedule 3. The last one, sir, the services provided by Supreme Court, High Court, and any court or tribunal. So these services are also not supplies. These are also not supplies because why, sir? It is mentioned in schedule 3. It is mentioned in schedule 3. So what are those covered under schedule 3, sir? Funeral, burial, crematorium, land and building, where the entire consideration is received after completion. Actionable claims other than betting, gambling, lottery, the services of MPs, MLAs, and any person who is under a constitutional position, and where the service provided by employee employer in the course of employment, and the service provided by Supreme Court, High Court, or court or tribunal, these all are covered under negative list. Other than this, sir, the goods are warehoused, sir. Goods are warehoused in customs place. Okay. See, understand this, sir. Goods imported, sir. After imported, these goods can be kept in warehouse. By filing a yellow color bill of entry, we can warehouse these goods. So once these goods are warehoused, okay, X actually imported these goods and warehoused. Then X sold these goods to Y, and the goods remaining in warehouse only. Y sold those goods to Z. Okay, now the transaction between X and Y and Z are not supplies because the goods still didn't cross the customs frontier. Until the goods cross customs frontier, how many ever supply sales are happened when the goods are lying in warehouse? They are not supply of goods nor supply of service. Okay, next, even high seas sales, sir. High seas sales means what? When the goods are in the transit only. At that time itself they are sold. That is also not a supply. Only when the goods cross customs frontier, then GST Act is applicable. It will be called a supply. So total under negative list there are 8 points. 8 points which will be treated as neither supply of goods nor supply of services. So by this we completed section 7, sir. Now we can discuss about section 8. Sir, number of times section 8 is being asked, sir, even in final level. Okay, composite and mixed supply. Very, very, very important, sir. Composite supply. What is called composite supply? Two or more goods, services, or both, okay, supplied as a bundle. Supplied as a bundle in conjunction with each other. Okay, in conjunction with each other, and they are naturally bundled. And they are what? Naturally bundled. And one of them is a principal supply. One of them is what, sir? Principal supply. Then you can call it as what? Composite supply. Two or more goods and services are both supplied as a bundle which are connected with each other, and they are naturally bundled. They are what, sir? Naturally bundled. They are not. What is naturally bundled, sir? There are certain tests given, sir, to call it as naturally bundled. Like same price, okay? For various components, sir, like if you are buying a mobile, for charger one price, for mobile one price, for cable one price is not there now. It is determined as with, I mean, it is shown with single price now, so they are naturally bundled. They are advertised generally as a package. They are not available so separately. They are generally advertised as a package, naturally bundled. The persons in that industry generally will sell them as a package. They are not sold individually. They sold as a package. Even the customer perception is also when he is expecting a okay, even the customer perception also they will be as a bundle only. Then we can call them as naturally bundled. So whether it is naturally bundled or is decided based on customer perception, the industry practice, the price, how it is being declared, how they are advertised, how they are packed. Okay, so how they are internally connected. Okay, all these factors decide whether it is naturally bundled or not. When two or more goods and services are both supplied as a bundle and they are conjunction with each other and naturally bundled, and one of them is a principal supply. Sir, here one more thing, sir. If at all five goods are bundled and supplied, and out of them one should be principal. What is principal supply, sir? One of them should be having a predominant nature. The supply which is having predominant nature is called as what? Principal supply. Predominant nature is called as principal supply. Let's say example of mobile charger, cable and the back pouch, everything is supplied as a package. Now generally the industry it is selling like that now, and they are advertised with as a single package only now, single price only there now. Customer is also expecting them as a package only now, so it is naturally bundled, sir. But out of those four, which is principal supply? Mobile is the principal supply. Why, sir? For mobile we are buying mobile, those are incidental, so that is the predominant nature. When it comes to mixed supply, sir, two or more goods and services are both supplied as bundle, and it is not a composite supply, and it is not what, sir? It is not a composite supply. Then it is called as what? Mixed supply. Okay, again here also two or more goods and services are supplied, but it is not a composite. Why it might not be composite? Because they are not naturally bundled, or one of them is not a principal supply. All of them are equally, okay, all of them are equal. There is no such thing like one principal supply. In such cases, we cannot call it as composite. It is what? Mixed supply. Sir, how the composite supplies are taxed? Composite supplies are taxed at the rate applicable on principal supply. So the rate applicable on principal supply, which is having predominant nature, will only be levied on the total bundle. Let's say I purchased goods, sir. For that goods is providing delivery as well. So goods supply and transit. Okay. But on the total bundle, it is naturally bundled now. On goods value only, goods is the principal supply. The rate applicable on goods will only has to be levied on the total bundle. Okay. Whereas in mixed supply, highest rate applicable on goods and services in the bundle, highest rate applicable on goods and services in the bundle has to be levied on total bundle. Has to be levied on the total bundle. The highest rate applicable has to be levied on the total bundle in the case of mixed supply. Sir, by this we even completed section 7 and 8 also, sir, but there are certain clarifications, sir. I am discussing only the important ones, sir. Printing, sir. Printing. So with respect to printing, if it is for books, pamphlets, brochures, okay, where content is provided by recipient, okay, where supplier prints content using his paper, whereas the content, prints content using his paper, whereas the content is supplied by the recipient. In such case, it has to be treated as supply of service. It has to be treated as what, sir? Supply of service. Okay, whereas when it comes to card boxes, pre-printed card boxes, napkins, okay, pre-printed card boxes, napkins, okay, envelopes, okay, here content is not main, sir. Here the good itself is main, so this will be supply of goods. This is called supply of goods, man. This is supply of goods. Next, sir, government will issue license to start a liquor shop. Okay, so for this license, this guy needs to pay some license fee. Now the question is whether license is a supply. This license fee is chargeable to GST. Okay, the council has clarified this. License fee paid for issue of alcoholic liquor. Okay, but for sale of alcoholic liquor, if any license is granted by state governments, such license fees or such issue of license is not a supply. It is not a supply, hence it is not taxable. However, this clarification is applicable only for license fee related to alcoholic liquor, sir. Other licenses are supplies only. Next, where a person given a donation to a temple, NGO or charitable entity. This temple kept his name board. Now the question is whether keeping this name board, since he donated, is a supply. I mean, why it is called a supply means, sir, by keeping his name board, his name is being promoted now, he is being advertised now. So why can't we take it as an advertisement service? That is the case. Okay, here the clarification says like there is no quid pro quo. Okay, there is no quid pro quo. What is not quid pro quo, sir? Just because I gave donation, there is no obligation on temple to keep a name board on it. Okay, it is on there. Okay, just to tell the generosity of the donor, they are keeping a name board. Otherwise, there is no obligation on the temple to keep the name boards now. So there is no quid pro quo, hence it is not a supply. Hence it is not a supply. Okay. Sir, next. I am showing them in the material, sir. There are certain amendmented points given here, sir. I mean, recent ones. I am discussing them. Prerequisites provided in terms of contractual agreement, sir. Obligation to restrain related. Okay, where any consideration is received for tolerating an act, for obligation to refrain or obligation to do, whether they can be called as supply or not. Okay, the gist of all this clarification, this is you cannot call, okay, sir, let's say on road a bike came and hit my car. Okay, so okay, both two cars got hit, but it is mistake of one guy. Okay, so this car guy paid damages to me. Okay, so is it tolerating an act? Whether the damages paid by him has to be considered as supply because he hit my car now with his car. Okay, an accident has happened now. So just to cover up the damage only is giving me now. So whether it can be called as tolerating an act, sir, to call as tolerating an act and to call the damage money received as supply and to make it taxable, the clarification is saying like there should be an explicit or implicit contract must be there to pay damages. Sir, do I agree with that car person that to come and hit my car? No, there is no such contract now. If there is no such contract, explicit and implicit, if any damages, fines, penalties or anything is levied, that is not a supply. There should be a contract either explicitly or implicitly, then only it can be called as supply. So, different cases, sir. Liquidated damages. Okay, no agreement to refrain, then it is not a supply. Agreed by the parties to pay late payment or early, then it is a supply, sir. Next one, sir. Check dishonor. Sir, my customer gave me a check, sir. Okay, but the check bounced. Okay, the check I presented into the bank, but and the check bounced, sir, because there is no enough money in the customer check. Since the check got bounced, I I levied penalty on my customer. Okay, he gave me 1 lakh check which got bounced. So I levied him 5,000 rupees as penalty because he is giving me a check without having balance in his bank account. So now the question is whether the check bounce charges I am collecting now 5,000, that can be called as supplier, or is it for tolerating the act of check bouncing? No. Okay, here also there is no explicit and implicit contract. That 5,000 we are collecting just to warn the customer not to do such kind of things once again. There is no explicit or implicit contract to agree that check bouncing or to tolerate that check bouncing. So it is not a supply. Next, penalty is imposed by violation of law. Sir. If any government is imposing any penalties or fees, it is also not a supply because there is no explicit contract to tolerate. Okay, so if a guy is riding a bike by drinking more water mixed with some other things, okay, he drank water and he is riding a bike on road and he is going like this. Okay, so for this act, for tolerating this act, whether government is levying penalty, no. Okay, if it's not okay to the government, just by paying the fine or damages, you can go around. Okay, or you can go the way you like. Okay, they are not saying like that. They are just to control you, they are levying the penalties and fines. So there is no explicit and implicit contract there to tolerate the act. Okay, so it is also not a supply. Sir, again, bonds will be entered by an employee, with the employer, like he will stay for 2 years or 3 years. But without staying for 2 or 3 years, if the employee leaves the organization, he is breaking the bond. So he needs to pay the bond amount now. So when such bond amount is paid, whether such bond amount paid is called as supply. Here also tolerating an act, employer is tolerating earlier termination or earlierly employee leaving the organization, whether the bond amount needs to be considered as supply. Okay, here also the same point, sir. The same point is mentioned here. What employer is not agreeing is okay. If an employee is being terminated or if the employee is leaving the organization, that is not accepted by employer. He is not tolerating such act. This bond value is not kept to compensate the loss. Okay, this is kept just to retain the employee. It will be like the employee feel like he needs to pay the bond amount now if he leaves the organization within the period. So to retain the employee for a period only, he is keeping that bond amount. Otherwise, the bond amount will not compensate his loss. There is no explicit or implicit contract, so it cannot be called as what? Supply. Next, late payment for surcharge or fee. Okay, sir. Here there is no explicit contract, but there's the clarification is saying like there is implicit contract. What? Sir, I took an internet connection, sir. Okay, and I didn't pay the payment by due date, so they levied late fee in internet connections and electricity connections, these type of connections. If at all they are levying late fees, then it is a usual practice in their industry, okay, that the customer delaying the payment for 1 or 2 days, and for the delay period they may be collecting late fee and late charges. So in this particular scenario, the late fee collected is for tolerating an act. There is an implicit contract existing there. So such late fee can be considered as supply only. Next and the last one, sir, cancellation charges. When you book a bus, okay, when you book ticket for bus, but later if you cancel the ticket, they will cut some cancellation charges now, even in railways also. Whether such cancellation charges has to be considered as tolerating an act. It's not tolerating an act, sir. It's a beautiful explanation, sir. What the explanation says means, if you book a ticket in bus, it is not only for transporting you from one place to another. It is for, okay, the service offered by the transporter is not only transportation, to provide you comforts, to provide you a seat, to provide you other amenities. Okay, so to provide all such amenities, initially itself he is reserving a seat for you. So he started commencing his service. He started commencing his service by reserving a seat for the passenger. But in the meanwhile, when the contract is cancelled, okay, till that point of time the seat is reserved now. That means a part service is already performed. No. So the cancellation charges collected are for such part performance of contract, not for tolerating an act. So the cancellation charges are for what? For the part performance of contract. What is such part performance of contract? Till the date of cancellation, the seat is reserved. No, that is a service offered by a transporter. So for such service, he is taking the cancellation charges, which is also called as supply only. So these are the clarifications, sir. Lot of clarifications are issued in supply chapter, sir, which making this chapter more lengthy by attempt, sir. But I covered almost all the important topics from supply. I'm saying here, sir, even final level also, institute is asking around 7-8 marks in an attempt from supply. But in one attempt, they are not asking. Okay, it's jumbling, sir. We are not sure whether they are going to ask or not. But if at all they ask, they are going to ask for 7 to 8 marks. And majorly, they are asking from composite supply and mixed supply, sir. Sir, why I discuss this question means, I mean, supply chapter also means, I seen the recent model question papers. In both the model question papers, there are questions regarding composite and mixed supply and from supply chapter, either MCQs or even the questions. Around 8 to 10 marks are there from supply chapter. So this is really important even at final level. So please go through this chapter. Coming to the questions part, sir, there is no numerical part involved here. Only case study based question. So if you revise theory and just go through the my okay other book also fine, or else my workbook also if you refer once, then it would be fine, sir. Okay. So then we'll be starting with the next chapter, sir. Chat.
Hello all. So now we are into the topic ITZIMA input tax credit. Sir, just a few basics you need to understand, sir. First, the manner of apportionment of credits. You need to understand here. Before understanding manner of apportionment of credits, first before that you need to understand when ITC is available. Okay, sir, there is a recipient and he is a registered person. He might have certain inwards. Inwards means what, sir? Purchases. So these inwards may be like inputs, that means raw material, these kind of, okay, inputs, goods. He may have an input service means any inward service is called as input service. And there may be a capital good purchase as well. Capital good means, sir, which is capitalized in books, of account is called as capital goods. So it may be input service or capital good. Okay, out of these three it can be any type of inward. On this inward there may be some tax suffered, and this tax may be, again it may be under the FCM or it may be under the RCM, tax paid. So you need not to bother about whether the tax is paid under FCM or RCM. If it is an inward to a recipient who is recipient, so this tax component is there na. This tax component can be availed by recipient as ITC. Sir, why to, I mean, with what is the benefit of taking ITC? Sir, this ITC can be adjusted with your tax liability on outwards. Tax liability onwards, outwards. Let me write it in another way. So this recipient, okay, he can claim ITC, no ma. This recipient can claim ITC. The tax on his inwards he can claim as ITC. Okay, this is his ITC. This recipient may again further supplying it these goods. Okay, he is again selling nothing but what, outwards. On these outwards there may be tax. No, to pay this tax, this ITC can be adjusted. Okay, so two things you need to understand. On your inwards, input service or capital good, you can avail ITC. Okay, the tax payment FCM or RCM, you can avail ITC. This ITC can be adjusted with what, tax on what, outward supplies. Okay, so this is the basic concept of ITC. Sir, first why ITC is introduced? ITC is introduced to eliminate double taxation. To eliminate what? Double taxation. Sir, how? Sir, let's say there is a supplier who supplied goods to recipient, he again being a supplier supplied back to another recipient. Sir, these goods are 10,000 rupees, sir. On this here 18 percentage, let's say 1800, already here it's tax, first time tax here, total 11,800 paid. This recipient again selling these goods to recipient, no, okay, then again it won't be, it will be taxed again, no, again, okay, so that's why it cannot be taxed double time. So what government intention is like, here 10,000 already taxed na, if this particular supplier, okay, this middleman, if he adds any other value addition, if he makes any value addition, only that has to be taxed, not the whole value. That means, sir, here he is selling for 12,000, sir. Now on 12,000, the tax would be like 3,000, sorry, 2,160. Okay, but already 10,000 taxed in first stage, na. Do we need to tax that wholly? No, only the valuation. That means how much? 2,000. 2,000 into 18% means 360. Only 360 has to be taxed. So how it is happening, sir? This 1,800 given as ITC to this particular supplier. From this 2,160 adjust 1,800, net 360 only tax, which is on value addition only, no. So in this way, through ITC, we are eliminating what? Double taxation as well as cascading tax on tax. Okay, this is the background behind, okay, ITC. Now we are going into manner of apportionment of ITC. Sir, manner of apportionment of ITC means, sir, here I said like ITC can be adjusted with the tax, na. Sir, here we might have interstate, intrastate. Interstate means IGST, intrastate means CGST and SGST. And additionally, we have even compensation charges. Sir, can they be adjusted in any way, or there is any manner for adjusting them? There is a manner of apportionment of credit. Sir, so then what is the manner of apportionment of credit, sir? Sir, let's say this side I am taking credits, and I mean vertically I am taking credits, and horizontally I am taking the tax payable. So IGST tax, CGST tax, SGST tax, and cess compensation cess tax. This way I am taking IGST credit, okay, CGST credit, SGST credit, and even cess credit. Sir, now can we adjust IGST tax with IGST credit, ma? Can we adjust? Yes. Can we adjust? Can we adjust IGST credit with CGST tax? Yes. SGST tax? Yes. But compensation says no. Sir, I'm again striking of the cess, sir. CGST also cannot be adjusted with cess. SGST also cannot be adjusted with cess. Cess also cannot be adjusted. Cess credit cannot be adjusted with IGST tax, CGST tax, SGST tax. That means only cess credit can be adjusted with cess payable. Clear? Cess can be adjusted, only cess can be adjusted with what? Cess payable. Now coming to CGST credit, sir. Sir, can CGST credit be adjusted? CGST credit be adjusted with IGST? Yes. With CGST? Yes. Not with SGST. Can SGST credit be adjusted with IGST? Yes. With CGST? No. With SGST? Yes. But there is an order, sir, further. Sir, always a particular credit has to be adjusted first with that liability only. So IGST has to be first adjusted with what? IGST. But when IGST is adjusting with CGST or SGST, there is no priority. You can adjust with either CGST tax or SGST tax. So both of them given under the second priority only. Okay. Sir, here one more thing. Unless until IGST credit is completely utilized, unless until IGST credit is completely utilized, you cannot utilize, okay, CGST and SGST credit cannot be utilized, okay, not utilize, okay. So the rule is like, first IGST should become zero, okay, sir. IGST first with IGST, na, then either with CGST or SGST adjust. Only when it became zero, then you come to CGST or SGST. Okay, sir. CGST first with what, ma? CGST. Then with IGST. SGST first with SGST. Then only with IGST. Sir, now the question is, sir, let us say if IGST balance credit is there, to adjust with the tax payable, either with IGST first, okay, then with either SGST or CGST, no order, no.
Sir, now in a reverse situation, IGST tax is there, but enough IGST credit is not there. First, the available credit already adjusted, but still IGST tax is there. You are having surplus CGST credit and surplus SGST credit after adjusting with their respective tax liabilities. Then such CGST has to be adjusted first, SGST has to be first adjusted first, macha. Okay, which has to be adjusted first? CGST only has to be adjusted, then with SGST. So the order is this way, no, no. First, okay, with IGST taxable, first what? IGST, second what? CGST, then what? SGST. This is the order. Okay, this is the manner of apportionment of credits. I'm doing an example, sir. Okay, to give you some clarity, I'm having this inwards. Okay, so I'm taking an example. I'm having credits of, okay, I'm having opening balance of ITC, sir. I'm having IGST opening balance 2 lakhs. CGST also I'm having 2 lakhs. SGST I'm having 1 lakh. Okay, I'm having these balances. Credit. These are the credits. 2 lakhs, 2 lakhs, and SGST only 1 lakh. Total balance I'm having. Whereas the tax payable for me is IGST case 1. Okay, or else like let it be. Case tax payable here is 1,75,000. Here it is 1,50,000. Here also it is 1,50,000. So now what is the order, sir? First, okay, this is the tax payable now. First I am adjusting IGST, sir. How much credit I am having IGST? 2 lakhs now. So from 2 lakhs, 1,75,000 I adjusted here. What is the balance I am having? 25,000. That can be adjusted with either CGST credit or SGST credit. No, both. With anything we can adjust, no. But what I say is like you can see here CGST is having surplus credit. Then it is better to adjust with what? SGST adjusted. So I adjusted done. Now CGST. Okay. How much is there, sir? 2 lakhs. But what is the liability here, sir? 1,50,000 only. Adjusted. Still balance. How much is there, sir? 50K. Can it be adjusted with SGST? No. CGST and SGST can never be adjusted. Okay. SGST, sir. How much is there? 1 lakh. And adjust the total 1 lakh rupees. So what are the tax payables are now? Here it is 0. Here it is 0. Here it is only 25,000 rupees is the tax payable. So this is the manner of adjustment of ITC. Okay, this is from the section 49. Okay, this is from where? Section 49. This manner of apportionment of credits is. Now we are moving on to what, sir? Section 16 ITC. Sir, in ITC there are sections like section 16, 17, 18, 19, 20, 21. Okay, sir, 2021 are related to ISD, Input Service Distributor. Section 19 is related to job work. Okay, whereas 16, 17, 18 are relevant to ITC in various situations. Sir, ITC is one chapter where you can score how much, sir? 20 marks up to how much? 20 marks. So very important chapter. So it is necessary and it is important for you to put efforts on this chapter. Okay, this has that weightage. So now I'm starting with section 16 now. 16 subsection 1. What it says? Registered person. Who? A registered person is eligible to claim. Okay, a registered person. The tax component on his inward supply of a registered person. The tax on his inward supply. So tax means nothing but here input tax on his inward supply of goods, services, or both, including capital goods, can be taken as input tax credit, which will be reflecting in his, where it will be reflected, will be reflected in his electronic credit ledger. Registered person input tax on the inward supply of goods and services or both will be taken as ITC, which will be reflected in his electronic credit ledger. But this inward supply of goods and services or both should be in the course or furtherance of business. Should be related to what? Business. In the course or furtherance of business. That is what 16 subsection 1 said. You are a registered person. You have inward supplies. On that there is some input tax. You can avail it as ITC, which will be credited. Okay, which will be credited to your electronic credit ledger, provided those inwards are relevant to your business. Next, sir, 16 subsection 2, sir. Very important, sir. 16 subsection 2. Okay, you can do star mark or you can do this. Okay, whatever the marks you want to put, you can put. 16 subsection 2 is very important, sir. Okay, what 16 subsection 2 is saying, ma? 16 subsection 2 says like, notwithstanding anything contained in 16 subsection 1. Okay, you might have said like on your inwards ITC can be claimed on. Okay, the ITC can be claimed on your inwards, no? But notwithstanding subsection 1. So that means forget about what is said in 16 subsection 1. Maybe you can take, but only on satisfaction of what? 16 subsection 2 conditions only you can avail ITC. So what are the conditions under 16 subsection 2, sir? First one, sir, goods or services must be received. Only when the goods and services are received, you can avail ITC. However, there is an exception here, sir. Bill to ship to model is an exception. What happens in bill to ship to model, sir? Sir, in bill to ship to model, let's say there is a supplier, there is a head office and there is a branch office. Sir, this supplier, okay, this head office approached supply and asked to send goods. But this supplier sent goods directly to whom, sir? Branch office. Now, when it comes to invoice perspective, sir, this supplier will raise invoice to whom? Head office. Okay, whereas head office will raise invoice to whom? Branch office. Whereas goods are sent by whom, sir? By supplier directly to branch office. So here supplier is billing to head office, whereas shipment is made to branch office. So it is bill to ship to model now. Now head office is having only invoice. It doesn't received goods. So this exception says like what? Even though head office didn't receive goods, since it got invoice, it can claim ITC, assuming like the goods has been received. That's the exception. Otherwise, generally the goods and services must be received to avail ITC. Second condition, sir. Okay. Supplier filed his outward statement. Supplier should file outward statement, nothing but GSTR1, and they should reflect in inward statement of recipient. It should reflect in where, sir? Inward statement of recipient. That means nothing but GSTR 2A or 2B. So only when supplier reports a transaction in his GSTR1 outward supplies, okay, that will get reflected in the 2A 2B of recipient, then it will become eligible for ITC. Third one, sir. Sir, it's reflecting in GSTR 2A 2B. In GSTR 2A 2B. Sir, just reflection is not enough. This is an amended point again. Reflection in GSTR 2A 2B is not enough. It shouldn't be restricted. It shouldn't be restricted. Sir, there are certain restrictions has been introduced by way of section 38. That means a credit which is reflecting in 2A 2B, the inward which is reflecting in 2A 2B can be set as restricted. If it is restricted, then again ITC is not available. Three conditions done, sir. Then the fourth one, sir, the recipient should have invoice or any other tax paying document. Sir, what does it mean by tax paying document here? Means it can be a debit note, okay, debit note, or invoice issued by supplier or recipient. Sir, how recipient will issue invoice to himself? Yes, he can raise. There is a concept of self invoice he can raise. Okay, or based on bill of entry, or based on a document issued by input service distributor. So these documents must be there to avail ITC, and this document should contain GSTN numbers of supplier and recipient. This should contain place of supply, tax, and even the value of supply. These details must be there to call it as a valid document for claiming ITC. How many conditions, sir? As of now, 4 conditions, sir. First one, goods and services must be received. Okay, such transaction, such invoice should be mentioned by supplier in 1 and reflecting in 2A 2B. Second one, sir, even though reflecting in 2A 2B, it shouldn't be restricted. Fourth one, sir, a recipient should have invoice or any other tax paying document. Only when tax paying document is there, you can avail ITC. Fourth one, sir. Fifth one, sir. Recipient has to file return. Okay, recipient has to file return means nothing but he will be filing return, monthly returns, sir. GSTR 3B. Recipient has to file 3B. And the sixth condition is like payment of tax by supplier. Payment of tax by supplier to government. So all these six conditions has to be satisfied as per 16 subsection 2 to claim ITC. Six conditions. Once again, I am repeating, sir. Goods and services must be received. Exception bill to ship to model or reflect in GSTR 2A to B. Even though reflected in 2A to B, it shouldn't be restricted. Third one. Fourth one, invoice or any other tax paying document must be there with the recipient. Fifth one, recipient has to file GSTR 3B monthly return. Sixth one, okay, supplier has to pay the taxes to the government. If all these six conditions are satisfied, then it is an eligible credit. Here there are two provisos, sir. Proviso. So, okay, what does this proviso says? First one, sir, proviso 1. When goods are received in, okay, received in lots, batches or installments, then when ITC can be, okay, when goods are received in lots, batches or installments which are covered by a single invoice. Okay, sir, I bought 100 tons of goods with a single invoice, sir. 100 tons cannot be transported at a time now. So they came in multiple trucks like 20 tons once, 20 tons once, 20 tons once. But then when I can avail ITC? Sir, that also 20 tons came in April, another 20 tons May, June, July. So in 5 months, covered by one invoice only, but they came in 5 installments. Then you can avail ITC only on receipt of, avail ITC when, sir? Only on receipt of last lot or installment. Only on receipt of what? Last lot or installment. Next one, sir, proviso 2. So what proviso 2 says, sir? The recipient has to make the payment. Has to make payment to whom, sir? Supplier. Recipient has to make the payment to supplier within how many days, sir? Less than or equal to 180 days from date of invoice. Recipient has to make the payment to supplier within 180 days from date of invoice. If not, then recipient has to, okay, if not, if this is not done, then recipient has to reverse ITC, okay, reverse ITC, okay, at the time of filing return for month in which 180 days has been expired. Filing return for month in which 180 days expired, he has to reverse what? ITC. Okay, reverse ITC along with interest at a rate of 18% per annum from date of availment to date of payment by adding it to outward tax liability. Sir, reversal means nothing like reversal will be there. That ITC already utilized, okay, might have been utilized. So whenever there is a reversal means it will be added to your liability and you will pay that. Now, when you take, initially you take it as ITC. If it needs to be reversed, no reversal here. Nothing in credit ledger, no reversal kind of thing will be there. It will be just added to your liability and you will pay it again. Okay. So proviso 2 says like what? Recipient has to make the payment within 180 days. If he fails to do so, reverse the ITC and even calculate interest at a rate of 18% per annum from date of availment to date of payment. Okay. This is what 16 subsection 2 said, sir. Okay. Clear, sir, what 16 subsection 2 has been said? Now let me take you to the other sections as well, sir. Sir, next one, sir, 16 subsection 3, sir. What 16 subsection 3 says means, sir, a capital good has been purchased for 10 lakh rupees, sir. On this GST component is 1 lakh 80,000. So total for 11 lakh 80,000. Sir, the capitalization in books of accounts in income tax, let's say, in income tax, sir, for income tax books, the capitalization made is 11 lakh 80,000 or only 10 lakhs.
Sir, if 11,80,000 means what? You even tax part also what capitalized. Now in income tax you will be depreciating what? Depreciation on what? 11.8 lakhs. Okay, since you are claiming depreciation on 11.8 lakhs, in this case ITC is not given because on tax component also you are availing ITC. But if you capitalize only 10 lakhs, then in income tax you depreciate how much? Depreciation on 10 lakhs, whereas the 1.8 lakhs can be availed as ITC in GST. Whereas the 1.8 lakhs can be availed as ITC in GST. This is what, sir? 16 subsection 3. Next section, sir, 16 subsection 4. What does 16 subsection 4, sir? It talks about the time limit for availing ITC. Sir, again this is also amended. Okay, high chances of asking. Okay, I even mention where this time limit is linked in other places. Time limit of availing ITC. Okay, sir, let's say the invoice is related to financial year 22-23. Okay, financial year 22-23 related invoice. That time due to some reason you cannot avail ITC. Now till when you can claim ITC means 30th November of succeeding financial year. That means which years are here? Succeeding financial year means 22-23 means 23-24 na. In 23-24 November means what? 23. Or actual date of filing of annual return, whichever is earlier. So this is the time limit for availing ITC. Sir, this time limit is applicable even for issue of credit note also. This is the same time limit for issue of credit note also. This is the time limit. Next, for making amendments, corrections in GSTR 1 also, this is the time limit. Okay, so these three places this time limit has very much, okay, very impact so this can be asked in any place. Okay, this time limit, since it is an amended point, at ITC it can be asked, at a credit note issue time limit it can be asked, or it can be asked even at the time of amendment or making amendments in GSTR 1 time limit also. This can be tested there also. So by this we completed what? 16 section we completed. Sir, now without delay I am going into 17 subsection 5, sir, which is about blocked credits. Then we'll discuss the other parts. 17 subsection 5 is about what? Blocked credits. Sir, blocked credits means there are scenarios where input tax credit will be blocked. Even though it is your inward, it is used for the course or furtherance of business, still that ITC is blocked. When, sir? Okay, when there is works contract in relation to immovable property, works contract or any construction contract or purchase of goods, services. Okay, construction contract which involves goods and service for immovable property. Sir, to construct a house I took a one works con sorry I want to construct my factory building, sir, or my office building. For that I hired a contractor and paying him 1 crore. On 1 crore he might be charging GST na. Such GST I cannot avail ITC. Since why, sir? It is a blocked credit. But here there is an exception, sir. What is an exception means? Sir, to construction of my office building, okay, me Manideep, okay, for me a works contractor is providing service. Okay, he is charging from me 1 crore, and on this 18 lakhs GST, this 18 lakhs I cannot claim ITC. But this works contractor gave a sub works contractor is there. That means let's say painting or flooring, some part has been outsourced by the main works contractor to another works contractor for 20 lakhs. On this 20 lakhs actually 18% 3.6 lakhs charge na. This can be claimed as ITC by this works contractor because they are in the same line of business. Okay, next one, sir. Here immovable property excludes plant and machinery. So if at all it is a plant and machinery, then it involves construction of pillars or fixing the machine to walls
kind of, which involves certain construction activity also, that is plant and machinery. On that you can avail ITC. Again, there is a point, sir, which cannot be called as plant and machinery. Okay, mobile towers are not plant and machinery. That means to install mobile towers, any works contract is given or any contract is given construction, on that any input tax is there, that cannot be availed as ITC. Plant and machinery excludes mobile towers. And even pipeline installed outside the factory. Pipeline installed outside the factory premises, that also cannot be availed as ITC. First one, work contract related. Second one, sir, transport related, sir. I mean motor vehicles, sir. On motor vehicles. Okay. Motor vehicles, sir, you need to check whether it is designed for transportation of goods or passengers. Sir, if it is a goods transport vehicle, then you can avail ITC. There is no 17 subsection 5 restriction. Sir, if it is a passenger transportation vehicle, capacity greater than 13 including driver, and capacity less than or equal to 13, sir. If the capacity of that car, okay sir, capacity means don't like, sir, in a car we can sit 15 people, on that we can avail ITC. No, the design itself is for a capacity more than 13 passengers, then ITC is eligible. There is no 17 subsection 5 blockage. Whereas the capacity is less than or equal to 13, then okay, generally it is covered under 17 subsection 5, it is blocked. However, there are exceptions, sir. What are those exceptions, sir? If at all this motor vehicle is used by a driving school person for imparting driving skills, if at all it is you bought or purchased by a driving school person who is involved or engaged in imparting driving skills, or who purchased it for further supply. Sir, I am a car showroom guy. I purchased the car not for my purpose. No, I mean car means less than 13 only. No, not for my personal or business purpose. I purchased this car for what? Again for reselling. Then I can avail ITC. Third one, who is into the business of transportation. I purchased the car for what purpose, sir? To rent it, to hire it. Okay, then that in that case also I can avail ITC. Sir, one more thing. If on motor vehicle you can avail ITC, motor vehicle ITC available, then on that repairs and insurance will be there na, to that motor vehicle repairs and insurance. On that repairs and insurance cost also, if any GST is there, that also can be availed as what? ITC. Okay. Next, third one, sir, aircrafts and vessels. Sir, I purchased an aircraft or vessel. On that can I avail ITC, sir? On aircraft and vessels also, if it is for goods transportation, ITC available. If it is for passenger transportation, again, generally 17 subsection 5 will come, ITC not available. But there are exceptions, sir. What? Again, driving. But for aircraft and vessel, we cannot call it as driving, no. So, flying or navigation skills. Okay, for imparting flying and navigation skills, the aircraft or vessel has been purchased. On that ITC can be claimed. Second one, sir, that aircraft or vessel is purchased for further supply. Okay, you will be selling that aircraft or vessel again. Then you can avail ITC. Third one, sir, that is purchased with an intention for transportation or giving it on hire. Okay, in such case ITC can be availed. So these are the three cases, sir. Next, coming to others, sir. If you are an NRTP on your purchases in India, on your goods and services purchases within India, you cannot avail ITC within India. Sir, if you are bringing along with you, you are an NRTP. NRTP means what? A non-resident taxable person who occasionally involves in supply of goods and services, either on his own capacity or as an agent, occasionally, okay, and he has no fixed place of business in India nor residence in India, then he is called as an RTP. Let's say some BTS singer is coming to India to perform a show. Okay, such person is not having any usual place of business or residence in India, no, so he is called as what? NRTP. So when he is carrying any goods along with him while coming to India, on them he can avail ITC, but on the domestic purchases he cannot avail ITC. Next, is section 10% cannot avail ITC, composition scheme person, or if you are purchasing from composition scheme person, you cannot avail ITC. Next, where the goods are lost, destroyed, stolen. Okay, on these also are for used for personal consumption. In all these cases also you cannot avail what ma ITC. Next one, sir. Okay, sir, if tax is paid, okay, in a fraud case, okay, if tax is paid due to a fraud case, then such ITC also cannot be availed. So how many situations are as of now? Works contract or construction contract in relation to immobile property, ITC not available. Okay, but immobile property excludes plant and machinery. Plant and machinery excludes mobile towers and pipelines installed outside the factory premises. Motor vehicles are based on the capacity or for goods or passengers we can avail or not ITC. Aircrafts and vessels, NRTP. On domestic purchases, no ITC. From outside India he is bringing certain goods means ITC available. Composition scheme person, no ITC. Goods lost, damaged or stolen or used for personal consumption, no ITC. Okay, tax is paid on due to a fraud case, then recipient can avail ITC, yeah? No. Next one, sir, there are certain cases like here. Beauty treatment, catering, health insurance, rent a cab service. Okay, beauty treatment, catering, health insurance, rent a cab service. Okay, leave travel concession. Okay, on this, sir, if these are my inverts, beauty treatment is my invert supply, can I avail ITC? No. Catering, I took, sir, in my organization um, I'm celebrating some day or else celebrating some occasion, and for the employees we ordered food and the catering guy brought the food. On that ITC not available. Sir, I took health insurance on the health of my employees, on that I cannot avail ITC. I hired cabs to provide services, okay, to pick and drop my employees, on that ITC cannot be availed. Leave travel concession, I send my employees on tour, okay, and and me bearing the cost, okay, there is an exemption also in income tax if you remember, okay, on that cost also I cannot avail ITC. So on all these generally what 17 subsection 5, okay, blocked. But there are exceptions, sir. What are exceptions? If they are in the same line of business, same line of business. What is same line of business, sir? For example, a catering guy supplying food to another catering guy. Okay, sir, okay let's say X is getting married. Okay, in X marriage A is supplying food, okay, but A wants a special sweet which will be made by B. So B is a caterer who prepared sweet and supplied to A. A is again supplying it to what? X. Okay, so now A and B are in the same line of business, no? So A can avail ITC on the invoice given by B, but X cannot avail because, sir, even though it's for not marriage, for business purpose also he cannot avail ITC because only when they are in the same line of business ITC is available. Second one, sir, if at all it is necessary to provide the bundle, either composite or mixed, to provide bundle either composite or mixed, which is agreed in the contract, sir. Let's say I'm traveling in Vande Bharat train, sir. When I'm traveling in Vande Bharat train, they agreed to me like they will transport me from one place to another place. Along with that, they are going to provide me food in the meanwhile. Okay, in the transportation period. Okay, so they agreed to provide me what? Transportation as well as food. It's a bundle of service, no, which is either composite or mixed. Okay, generally it's a composite. Okay, it may be even mixed also. So in such case, railways to provide me transportation and to provide me food, they want food na. Such food contract they given to some other person who is outsourced person who is providing food to railways, and railways is providing me to me. Sir, now it became necessary to railways to provide their promised bundle of supply. They required an inward, okay, from outsider. So railways can avail ITC on the food which they purchased
okay, which they, I mean, the catering contract which they took to provide it to the passengers. Third one, sir, if it is mandated by a statute, if it is what? Mandated by a statute. Let's say, sir, if any state government said like to all the women employees working in night shifts, cab service has to be provided by employer. Then government said it made a statute, so that's why I'm hiring these cabs. Okay, on that cab part, if any GST is there, that also can be availed as ITC. These are the cases where our ITC get blocked. 17 subsection 5. Okay, the balance part will be discussing now. So balance part, it requires much more, okay, patience from you, and you need to understand very clearly, because those are the little critical issues. I try to cover the whole part from ITC, okay, either like capital asset, capital good reversal, or input reversal, or anything. I am going to cover everything, okay, but problems I may not be discussing everything, because very limited time we are having, no. So that's why I'm doing it very fast. Problems I may not discuss, but one or two on capital good reversal and on input reversal, because they are little complicated, no, I'll try to solve questions on them. Okay, so let us continue our discussion with input tax credit, so till 17.5 discussed, no. Now 17 subsection 1, it says like, when goods and services are used partly for business and partly for personal purpose or other purposes, then credit which is related to business purpose alone can be taken, said by 17 subsection 1. Now 17 subsection 2. What 17 subsection 2 says? When a goods and services are both are partly used for taxable purpose and partly for exempted. So these are inputs. Inputs when used for partly business, partly personal. Only to the business purpose you can avail ITC. Inputs or input services or anything, capital goods, if they are used for partly taxable and partly exempted, then you can avail ITC only with respect to taxable supplies. Okay, so now with respect to this, to avail the credit only with respect to taxable, only with respect to business purpose, okay, which was said in 17 subsection 1 and 17 subsection 2, there are two rules issued. Rules are like rule 42 and 43, which will help us on apportionment of credit with respect to taxable supplies. Sir, before understanding there, for the purpose of rule 42 and 43, the definition of exempted supply is different. For the purpose of rule 42 and 43, the definition of exempted supplies is different. I mean, it has much more coverage. The coverage scope is more wide than that of the normal transaction. Coverage and scope is wide. Sir, here, if you see, exempt supply even includes RCM supplies. That means if you are making any RCM outwards, they are also treated as exempted supplies only for the purpose of rule 42 and rule 43. Next, if you are a person who are along with business, okay, let's say there is a cost accountant, CMA, he is having his business, okay, consultancy, from that he is having 40 lakhs turnover, and is even into trading of shares. Okay, now his turnover of exempted supplies will be calculated as like, this trading of shares is there, no, take the total value of trade he made 2 crores worth trade into 1%, that is 2 lakhs. So that his exempted turnover will be calculated as how much, sir? 2 lakhs will be considered as his exempted turnover if he is into transaction in securities. Next, where any sale of land and building is there. Sir, understand with respect to land and building. Sir, land and building, land building, land always, land separately sold and land and building sold together. Land always covered under schedule 3, so it is not a supply. Whereas land and building, if the building is, okay, if the consideration is wholly received, wholly or partly received before completion, then it is a supply which is treated as works contract and supply of service. If entire consideration received after completion, then it is covered under schedule 3. Okay, sir, I am a contractor, sir.
I constructed buildings here. Let's say there are total 20 buildings constructed. Okay, I'm a contractor, real estate business. I used cement, iron, and all this. On this, I can claim ITC because I'm a contractor. Okay, for me, ITC is available. To whom it is not available? If a factory person, if a person constructing his own office or factory, he cannot avail ITC. But me being a person who is a contractor, I'll not constructing for my purpose. I'll be selling them. So I'm a works contractor. So I'll be into the same lane of business, no? So that's why I can avail ITC. So now all these I avail ITC, sir. But out of these 20 buildings, only 15 buildings are sold before completion. Okay, so these are taxable supplies only. So for taxable supplies related, you avail ITC. But when it comes to here, sir, the other five buildings are sold after completion. The other five buildings are sold after completion. That means these are covered under Schedule 3, not taxable. But you claimed ITC on the total, no? You shouldn't do that, no? So that's why what this definition is saying means these five buildings for which the consideration is received after the completion shall also be treated as exempted supplies. Okay, next one, sir. If any interest or discount, okay, I said this in the composition scheme also. If the consideration any exempted supply by way of offering loans and discounts and the consideration is in the form of interest or discount, such exempted turnover we are not including in aggregate turnover even in composition scheme, but here that needs to be includable in the turnover, exempted turnover, if it is to banks, NBFC, and financial institutions. Sir, understand the logic. Sir, banks will buy computers, banks will have rental expense. They may one of for that also they will do accounting. Even though interest is exempted, for that also they are using computers. I mean taxable inputs. They are using rented properties on which GST is there. So they are using the same computers, same buildings are used for making taxable and exempted supply. So they need to proportionate that. Such way interest and discount has to be added in the exempted turnover. But the same interest and discount need not to be added if it is other than for banks and NBFCs and financial institutions. Sir, I am a chartered accountant. I am having some 50 lakhs turnover from my profession. Other than that, I made an FD of 10 lakhs. On that, I got 1 lakh rupees as interest. For earning this 1 lakh rupees, did I use any of my resource, sir? My office, my computer, nothing, no. So why I need to reverse credit with respect to that FD interest also? Which is coming without any effort, no, just by depositing, no input is used, no. So for that reversal is not required. That's why interest and discount, if it is for other than banks, then it need not to be includable in the exempted turnover nor in the total turnover. If it is to banks, NBFCs and financial institutions, it needs to be included in the exempted turnover. So for 42, 43, exempted turnover includes RCM supplies, transaction in securities, okay, the value of turnover and securities into 1%, sale of land and building, okay, that also stamp duty value has to be taken, where entire consideration is received after completion, interest or discount which is exempted if it is to banks, financial institutions and NBFCs. Sir, other transactions in Schedule 3 need not to be added here. Other transactions in Schedule 3 need not to be added here. So that's why here mentioned. Okay, and even central excise duty, VAT, CST, if anything is there, that also need not to be added in the exempted turnover. And even transportation of goods by a vessel from the customs station of clearance to a place outside India, export freight, that also need not to be added in the exempted turnover. Okay, only these things has to be added in the exempted turnover. Sir, very remote chance, but they may ask or test even a question in this. Sir, I seen in the COVID exam 2020, an exam has been happened in online mode. In that attempt only, they asked the question interpreting this particular exemption as well. Okay, by considering what is our exempted turnover only, we can proportionate the credits. No, that's why exempted turnover includes RCM supplies, transaction in securities, gross value into 1%, sale of land and buildings, stamp duty value, with the entire consideration is received after completion, interest or discount if it is exempted, and it is provided by whom, sir? Banks, NBFCs and financial institutions. So now I am discussing about rule 42, sir. Rule 42.
Rule 42. Sir, what Rule 42 says means, first it says like take total input tax available. Take total input tax available. Call it as what? T1. Sir, we'll do a problem on this as well. Total input tax available as what? T1. From there, subtract the input tax which is specifically related to. From there, subtract the input tax which is specifically related to non-business or non-business related transactions. Okay. And second one, sir, we need to subtract the taxable, okay, the input tax which is specifically related to exempted supplies. Okay, first we are subtracting what, sir? Non-business related. Subsequently, we are subtracting what? Related to exempted supplies. Third one, sir, we even subtract if any blocked credits are there, that also needs to be subtracted. So, these three needs to be subtracted. So, inputs, sir, this is for only inputs and input service. For capital good reversal, there is separate rule 42. Inputs, input service exclusively for non-business. Exclusively for non-business. Subtract that T1. Next one. Input service exclusively for exempted. That also has to be subtracted. Call it as what, sir? T2. Then third one. Inputs and input services which are blocked by way of 17 subsection 5 also has to be reduced by way of T subsection 3. Sir, while taking total input tax available after checking 16.1, 16.2, 16.3, 16.4, the whole 16 section, if any input tax is available, take that, which is called T1. Sorry, T, not T1, which is called as what? T. From there, subtract input tax on inputs and input services which were exclusively relevant to non-business T1, which were exclusively relevant to exempted T2, which were relevant to which were covered under 17 subsection 5, nothing but blocked. You need to subtract all these three. After subtracting all these three, you will get C1, which is called as common credit. And this common credit will be credited to electronic credit ledger. Electronic credit ledger. This common credit will be credited to electronic credit ledger. From there, you need to subtract input and input service which is exclusively related to taxable. Exclusively related to taxable. T4. Subtract that. You will get the C2, which is called as what? Common credit. Common credit. Okay, this is not common credit, sir. Just the credit which is credited to ITC, which is credited to electronic credit ledger. This is the common credit. Sir, till here if you did not, the sum is done. Finding C2 itself is tough. If you found C2, then it is very easy. Within no time you can find the answers. Sir, what is the steps? Repeat along with me, sir. Take total input tax. From there, subtract the tax which is relevant to inputs and input services exclusively for non-business purpose, called as T1, subtract it. Then from there, T2 needs to be subtracted. What is T2? Input and input services, tax on inputs and input services exclusively for exempted, subtract it. Then subtract T3. T3 is what, your input and input taxes which were blocked specifically under 17 subsection 5. Reduce them, you will arrive C1, which is the credit you will take to electronic credit ledger. Okay, sir, this includes commons as well. We only subtracted exclusive ones. Common ones not at a portion, but you still took the total into credit. Sir, that means even though ineligible party is there, but still you did what? You claimed it as electronic credit. Then you are subtracting what? Input and input service exclusively for what? Taxable. So from there, sir, first in the C1 means what? C1 includes exclusively related to taxable supplies as well as common, which is taken to C1. Okay, C1 includes exclusively related to taxable supplies and even the common one, both taken as credit. From there, you subtracted taxable related. If you subtract taxable related, you are arriving only what? The common one, the common credit C2. But this credit is also already taken. In this common credit, there may be related to non-business, there may be related to exempted, but already availed as
ITC. Sir, if something which you cannot avail, already availed as ITC, if subsequently if it has to be reversed, then what you will do? You will add it to your outward tax liability. That means from common credit, certain part needs to be calculated and should be added to our outward tax liability. So which is related to exempted. Okay, common credit related to exempted. C2 related to exempted equals to C2 into exempted turnover divided by total turnover. Okay, proportionately, sir. C2 into exempted turnover divided by total turnover, you will get the D1, which is the common credit relevant to exempted turnover, which will be added to tax liability, outward tax liability. Next, if at all there is non-business related supplies also, sir, non-business thing has to be calculated only in the question. If they said like there are non-business related activities also, then C2 into 5 percentage will be taken as D2, which also will be added to outward tax liability. This is considered, or this is for what, sir? Non-business related outwards. Non-business related, if any inwards are used, for that we are using what? C2 into 5 percentage. Sir, we'll do a problem on this so that you will get. Sir, I'll take an example and explain, sir. Come take an example now. Sir, let's say BCCA is having 11th and 12th, which is exempted, CMA coaching taxable, and even certain charity also, which is non-business related. So now the input service, assume the faculty cost is same in all the stages. The faculty who are dealing are same. So the input service cost is same in all the places. Input service. So what is the input service, sir, here? Okay, total common for all the three, the input service came to here as 25 lakhs. Okay, so not, I'll directly take the tax on input services, which is common for all the three. Okay, some 10 lakh rupees. Okay, next, input goods, sir. Input goods means nothing but books or other things which were separate for all the three. Here the credit with respect to them is 1 lakh. Here it is 3 lakhs. Here it is some 50,000. And during the year there is even building construction by BCCA. Building construction by BCCA, on which for CMA coaching classes, okay, which incurred some amount on that input tax is 2 lakhs, and even for this intermediate one also they incurred some 1 lakh rupees. So now this is the case. So we'll arrive and we'll even consider like the BCCA exempted turnover is, I mean from 11th and 12th it is 45 lakhs in the preceding financial year, whereas whereas taxable turnover from CMA coaching is, let's say we'll take it as 1.5 crores. So total turnover means how much are 1.95 CR. Okay, we'll take that as the base. So first we'll take what? Total input tax available, which is nothing but T. Sir, ITC means total 10 lakhs, 1 lakh, 3 lakhs, 50,000 and 2 lakhs. Add everything, sir. 11 plus 3, 14, 14 lakh 50,000 plus 2 lakh 16 lakh 50,000 is the total ITC now. From there, what we need to subtract first? T1. T1 means what? Exclusively for non-business, no? Exclusively for non-business means what? This 50,000 na? Reduce that 50,000. Next, T2 you need to subtract. T2 means what? Exclusively for exempted na? What is exclusively for exempted? 1 lakh rupees. Okay, subtract this 1 lakh also. Sir, if any, next T3. What is T3? If at all any blocked credit is there. Blocked is also there, sir. What? This building construction related, if any input tax is there, that we cannot avail as ITC. So this 3 lakhs also has to be what? Needs to be reduced. So if you subtract all the three, what is the common credit C1 which will be reflected to electronic credit ledger, sir? 4 lakh 50,000. If you subtract, it will come to 2 lakhs. 12 lakhs. That means the whole 12 lakhs you availed as input tax. In that you know, sir, this 10 lakhs is from what? Common service. Whereas 2 lakhs is specifically related to what? Sir, 1 second. 14 lakh 50, sir, it is 17 lakh 50, sir. So here it will be 13 lakhs. Sir, out of this, 10 lakhs is common. Out of that, only a part can be taken as ITC. And this 3 lakhs is exclusively for taxable. So we can take that. But out of this 10 lakhs, only part we can take. But what we are doing here, the total 13 lakhs we are availing as ITC and we are reflecting it into the credit ledger. Next step, what we are doing, we are subtracting T4 exclusively for taxable. How much are exclusively for taxable? This 3 lakhs, na? Subtract that 3 lakhs also. You will arrive what? You will arrive 10 lakh rupees, which is called as what? Common credit C2. Common credit C2. Sir, in this common credit C2, there is a part which is ineligible. But what you did already, you availed it as credit. Now what you do? C2, out of C2, the exempted related D1 will be exempted turnover divided by total turnover, na? That is 45 by 150. Okay, 10 lakhs into 45 by 150. If you do this one, you will get an answer. This is the D1 which you need to add to outward tax liability. For non-business purpose, how much, sir? D2, that equals to 10 lakhs into 5 percentage, that equals to 50,000, which is relevant to non-business related. So this needs to be added. Okay, sir, this situation we need to do this application, this rule 42 we need to apply every month. Then at the end of the year, after the end of the year, we need to do this. Sir, till now we did monthly now for 12 months. But after the closure of year, we need to hold aggregately for the 12 months. Okay, for the 12 months, what is the total input tax? What are related to exclusively for non-business, exclusively for exempted? So the same statement. This is done initially monthly. After the whole year completion, you did for the whole year taking everything. Okay, and then find out. Let's say, sir, month wise, you for every month you will get D1 and D2 now. So find out the aggregate of D1 and D2 you found out for monthly. And for year wise also you do know. Calculate that year wise also and find out D1 and D2. Sir, if at all there are any differences, that means excess needs to be paid, but you paid shortfall. There is a shortfall in payment when you calculated monthly. Now pay the excess. Okay. If at all you paid excess, that means you reversed the credit excess. Then the other you can reclaim it as input tax credits. Okay, so it's not only monthly thing. Once the year is completed, you need to do that once again. This is about what? Rule 42. Now, sir, rule 43. Sir, very simple, sir, rule 43, but you should listen little patiently. Little bit patience is enough, sir. Rule 43. Sir, when a capital good is purchased, when a capital good purchased, it may be purchased for three scenarios, sir. Capital good purchased. There may be three scenarios. Completely for exempted or non-business. That particular capital good is used to be exclusively for what? Exempted or non-business. Then on this anyhow ITC not available. So don't claim ITC itself, first itself. At the time of purchase of capital good, exempted non-business, no ITC at all. No? It is purchased exclusively for making taxable supplies. Exclusively, sir, here. Exclusively for what? Taxable supplies. Then you can avail what? ITC. No issue with this. Third case, sir. It is for common use. Common use. That means for what? Taxable as well as exempted. Then also what they are saying? They are saying like claim ITC but denote it as A. What we need to do? Claim ITC but we need to denote it as A. Sir, this point you need to understand in all the capital goods rule 43 point. At the time of purchase itself, Baba, exclusively it is for what? Okay, exclusively it is for what? Making exempted supplies or making non-business supplies. Don't claim the credit itself. At the time of purchase, it is exclusively for taxable supplies. Claim ITC, don't denotions, nothing. At the time of purchase, it is for common purpose. Take ITC and earmark it. Okay, earmark it with like what? A. Earmark it with A. Remember, na? First point, sir. This is easy, sir. 20% provision done. Okay, this is the first one. Second step, sir. Machine purchased not now. I mean, capital good
already purchased, but now converted into already purchased. That time it is for what? Taxable. That time it is for exempted. Capital good purchased, that time it is for what? Exempted. Now it is converted for common purpose. Sir, what to do now? Sir, when initially it is purchased for exempted means you didn't claim ITC, no? Now it is converted for common purpose means now avail full ITC, avail the total ITC, avail and plus denote it as what? A. Avail total ITC on the invoice at the time of purchase itself. Okay, let's say 2 years back that capital good purchase. Now it is converted for common purpose. Still on the total value, whatever is the tax component, avail as ITC and denote it as A. But simultaneously, you need to do this, sir. What? Sir, for these 2 years, it is used exclusively for non-business exempted na. So what they are saying means number of quarters. So okay, for quarter 5%. For quarter 5%, calculate the ITC. Sir, let's say the machine have ITC of 1,80,000. So out of this 1,80,000, 1,80,000 into number of quarters already used. Sir, 2 years means how many quarters? 8 quarters into 5%. How much? 40% of 1,80,000. That means how much, sir? 72,000. Add this 72,000 to outward tax liability. Okay, this is the second step. Okay. When an already purchased capital good which is using for exempted purpose now converted into common purpose, two things you need to do. First, take the total 1,80,000 available as ITC and denote it as A. Simultaneously, till the point of time there is 2 years now. For the 2 years it is used already for exempted purpose. That means that part you cannot avail. So that part 1,80,000 into 8 quarters into 5%, 72,000 add to the liability. Sir, why 8 quarters? Why 5% means in the act itself, the rules are framed with an assumption like the capital good is having a useful life of 5 years. That means 5 years means 20 quarters na. 20 into 5 is 100% na. So here 1,80,000 already 2 years used means 40% already in exempted. Such 40% they'll not give ITC. That's why one hand they are saying like take 1,80,000. Other hand they are saying like reverse 72,000. That means effectively you are getting how much? 1,80,000 minus 72,000 only you are getting as ITC. But since it is converted for what? Common purpose, you need to denote it as what? A. Third one, sir. Third one is what? Sir, capital good already purchased. This also purchased 2 years back. But that time it is purchased for what? Taxable purpose only. That time it is purchased for taxable purpose only. Now converted into for common purpose. Now converted for what, sir? Common purpose. Capital good already purchased. Now converted for common purpose. Then, sir, initially if it is for taxable purpose means ITC already claimed na. Because if you remember the first one, when it is purchased exclusively for taxable, what we do? We can claim ITC. So even here also, at the time of purchase itself, if it is exclusively for taxable, you claim the ITC then itself. Now there is no ITC to claim extra even after conversion. So no ITC claim extra because you already claimed. But you need to denote it as what? A. You need to denote it as A. So the logic is whenever a machine or capital good is converting into or purchased for common purpose, it is coming to common use, denote it as A. Okay. So now all these things done now. So now take the aggregate of A. Sir, at several places we are marking them as A, no? Take the aggregate of A's. Okay. Then out of aggregate of A, subtract, reduce ITC relevant to capital goods whose useful life, okay, whose life 5 years expired. Whose useful life expired means nothing but 5 years. Sir, out of aggregate of A, okay, sir, from the beginning of my business, I will be denoting all my assets if they are using for common purpose as A. Okay, there may be 100 assets which are denoted as A. But out of these 100, for 30 assets already 5 years might have been lapsed. Now, from that 100, reduce the value or input tax related to these 30 assets, then you will array the value for only that 70 assets. No. So, that 70 assets, that means aggregate of A,
From that you are reducing the balance relevant to assets for which the useful life of 5 years is expired. Only the balance value for which 5 years is not expired you need to take and divide it by 60. Divide it by what? 60. Sir, what? Why we are dividing it by 60? Aggregate of A we are dividing it by 60 and converting into months. How 60 will convert into months means, sir, useful life of an asset how much, sir? 5 years. 1 year 12 months na. 5 into 12 how many? 60 months. So by dividing 60 we are finding out the monthly value of aggregate of A. So we'll arrive the monthly by dividing it by 60 we'll arrive monthly. Then the common, sir. Okay, for exempted what we need to do? TM into exempted turnover divided by total turnover. Sir, these are the turnovers of months. Exempted turnover of that month divided by total turnover of month. Sir, even rule 42 also I need to clarify this. This is not for financial year. This is for the exempted turnover of month divided by total turnover of month only. When we are doing it for the whole year, then we'll take the whole year. When we are doing it for month, then we'll take the monthly turnovers only. Sir, simple steps na. First, capital good purchased. Identify for exclusively exempted or exclusively taxable or common. Exclusively exempted, no ITC. Exclusively taxable, take ITC. Common purpose, take ITC, denote it as A. Next one. Sir, in this month no purchase is there. But previously purchased capital good now converted into common purpose. Previously it is exempted, now converted into common purpose. Then you, that time you didn't avail ITC, no. Now you can claim ITC, the full ITC you can claim, denote it as A. But simultaneously, for the period in which it is into exempted usage, calculate number of quarters. Okay, ITC into number of quarters into 5% has to be added to our outward tax liability. Next one. Sir, past only. In this month, no purchase. Previously purchased asset which is used till now for taxable purpose, now converted into what? Common purpose. That means already ITC available. Now just converting into common purpose. So no specifically claiming again ITC. Just denote it as A. Done. Almost half of the problem done. Now what you need to do? Aggregate all the A's. Okay. Take the total A denoted assets, capital goods related input tax and total that. From that, eliminate or reduce the input tax which is relevant to assets for which the useful life of 5 years is expired. Okay, then you will arrive the net figure, no, divide it by 60. By dividing it by 60 we are arriving a monthly value. So now from that monthly value you need to reverse, which will be added to your outward tax liability, TM into exempted turnover divided by total turnover. Sir, we'll do a problem on this. XYZ Limited is manufacturing company registered under GST in the state of Uttar Pradesh. It manufactures products alpha, beta and one exempt product gamma. Okay, so you could see they are manufacturing what? Alpha, beta, gamma. Alpha, beta, gamma. Okay, and one exempted product gamma. Okay, sir, initially alpha is what? Okay, initially alpha, beta are taxable, exempt product gamma. Okay, so alpha I am writing here as before 1st October taxable, exempted. From 1st October what happened, we'll see. From 1st October what happened, sir? While product beta got exempted, okay, exemption available to gamma was withdrawn. That means alpha remains same, taxable, but for beta taxability it converted into what? Exempted. Gamma, now exemption is withdrawn, taxable. So that means for alpha no change, sir. For beta taxable to exempted there is conversion. For gamma there is a conversion from exempted to taxable. Okay, then sir, alpha, beta, gamma. Okay, the turnover of alpha, beta, gamma in the months are like what, sir? 9, 10 and 6. Okay, we'll take the turnovers also. What are the turnovers, sir? Alpha 9 lakhs, beta 10 lakhs, gamma 6 lakhs. Okay, alpha, beta, gamma 10, 6 lakhs. Okay, sir, now see this, sir. Machinery you purchased 1st October for being used in manufacturing all the three products. All the three, sir. Now what, sir? Out of three, alpha taxable, beta exempted, gamma taxable. In October it's purchased, no. So it is for common use or specific use or common use.
That means you can avail 36,000 as ITC but denote it as what? A. So I am taking, sir, calculation of ITC plus aggregate of A. So see here. What is the machine purchased, sir? Machine U. Machine U, sir. Sir, machine U is for what, sir? Machine U, common purpose. So that's why ITC can be availed. What is the ITC that can be availed, sir? 36,000, na? 36,000. And it needs to be denoted it as what? A also. So A value also I am taking it as what? 36,000. First one. Second one, sir. Machine V purchased 1st October for being used in alpha and gamma. Alpha and gamma both are taxable, sir, now. That means exclusively for what? Taxable purpose only. That means on this 18,000 we can claim ITC but need not to denote it as what? A. Machine V, okay, specifically for taxable 18,000 will claim but no denotion of A. Third one. Machine W purchased 1st October for being exclusively beta. Beta is exempted, sir, now. You can see beta is what? Exempted now. So that means you cannot claim ITC. So 54,000, no ITC. Okay, machine. What is this machine, sir? Machine W. Okay, machine W exclusively for what? Specifically for exempted. Okay, specifically for taxable, specifically for exempted. So no ITC here. Okay, sir. Fourth one. Machine Y purchased on 1st October 4 years ago for rupees, sir, 4 years ago for being exclusively in manufacturing product of beta. Sir, that time it is for beta. That time it is taxable or exempted. 4 years back beta taxable only. But such machinery will also be used for now from 1st October for both beta and gamma. Sir, now beta got exempted, gamma got taxed. That means initially for what? Taxable. Now converted for what? Now for common. In such case, what is the ITC available? Sir, initially taxable means then itself the full ITC might have been claimed. No. So no, nothing, nothing to be claimed now again. Only it has to be denoted as what? 72,000 as A. We need to denote it as what? A. Fifth one, sir. Machinery Z purchased on 1st October 2 years ago for being used in manufacturing all the 3 products. Okay, Z purchased 1st October 2 years ago for being used in manufacturing all the 3 products. Sir, why we are saying this 3 years back product purchased asset details not for taking ITC? Because it was not purchased now, nor it was converted anything now. Okay, just to denote it as A, they are saying machinery Z. Machinery Y here. Machinery Z. Okay. No ITC, sir, but we need to denote it as what? A, because it is from there it is into common use, na? 54,000. Okay, we are denoting it as A. Sir, this denotion why we are doing? Sir, understand. Current month only if any purchase or conversion is done, we'll take ITC. But from that day onwards, from previously 3 years back claimed ITC also, if it is from common use, that has been denoted it as A from that point of time itself. That's why we are making it as what? A denotion only 54,000. Next, raw materials are all the 3 are related to raw materials only. Next, FGH that we can do separately. So I'm not doing anything extra here, sir. Okay. So what is the ITC eligible with respect to capital goods, sir? 36 plus 18, how much? 54,000. Na? Now even find out the aggregate of A. 36 plus 72 plus 54,000. Na? Okay, what is the total, ma? 1,08,000 plus 54,000 means 1,62,000 is the aggregate of A. Na? So then what we need to do for this, divided by 60, you will be arriving TM, and divided by exempted turnover divided by total turnover. If you do means you will arrive the amount which needs to be reversed for capital goods. Done, na? You can see here they took 36,000, 18,000. Next, for raw material also 42, 43. Raw material used for manufacturing alpha taxable, so ITC available. Raw material used for manufacturing beta, okay, ITC not available. Why, sir? It is exempted. Raw material used for gamma purchased on 15, sir, it is for taxable, ITC available. So that's why 27,000 and 18,000 also added. For 54,000, if this 27 and 18 related to raw material is added, then the total ITC is how much?
99,000. Sir, the total of aggregate of A, if you see 36 plus 54 plus 72, total how much, sir? 1,62,000 na? For us also 1,62,000 only came. Now what they are doing, 1,62,000 they are dividing it by 60. Okay, you can see here, if they divide it by 60, how much they came, sir? For month 2,700. Now this 2,700, what they are doing, 2,700 into exempted turnover divided by total turnover. Sir, what is our exempted turnover? Beta 10 lakhs, whereas total turnover is what? 15 lakhs. So here what they did means 2,700 into exempted turnover 10 lakhs divided by total turnover how much, sir? 19 plus 6, 25 lakhs na? They multiplied by 25 lakhs, so they got 1,018. This needs to be reversed, which is added to the outward tax liability. So that means total outward tax liability how much they are giving, sir? On turnover alpha taxable 9 lakh into 18%, 1 lakh 62. Beta exempted 6 lakhs into 18%, 1 lakh 8,000, plus our total outward supply 2 lakh 70 plus this 1,080, which needs to be reversed, 2 lakh 71,080. Whereas we are having the ITC of how much? 99,000, that is adjusted. So the total answer is 1,72,080. Okay, these are about rule 42 and rule 43. Now we are discussing about what? 17 subsection 4. Sir, 17 subsection 4 is for banks, NBFCs, financial institutions and banking companies. They can follow rule 42, rule 43. But understand from banks, financial institutions and NBFCs perspective, sir, they are having most of their income is by way of interest or discount. That means majority of their turnover is exempted turnover only. And on every input or every inward, they need to reverse ITC. So which might be very complicated for them to follow rule 42 and rule 43. That's why 17 subsection 4 inserted a provision for them. Instead of following rule 42, 43 and reversing, okay, they have alternate option also given. What is that alternate options are here? Banks, NBFCs, financial institutions, banking companies, if they opt for the first option, follow rule 42, 42 and 43. Input separate reversal, capital goods separate reversal. If okay, there is another option also, sir. Option 2, what it is saying means, take the total ITC from there, reduce inputs related to non-business. On non-business related, anyhow we cannot claim ITC, subtract that. Blocked credits, blocked means what, sir? Which are covered under 17 subsection 5 na? That also subtract. You will get a figure, no, balance figure. Okay, from that amount again you need to segregate the inwards. Okay, this total you arrived, no, subtotal. From this subtotal, the credit which is related to the inward supplies from distinct persons. Sir, SBI, okay, for Hyderabad we are calculating this, sir. For SBI Hyderabad, this is having inwards from others, outsiders or others. It is having even inwards from SBI Bangalore also. What I am asking you to do, from the total ITC, segregate this inward, which is, I mean, the input tax component, which is came from this SBI Bangalore. So write down that separately. ITC on inwards from distinct persons. On that, multiply with 100%. You will get an answer now. Sir, I am taking total ITC, I am having 50 lakhs, sir. Non-business related 5 lakhs subtracted, sir. Blocked credit also 5 lakhs subtracted. So I got 40 lakhs. Out of this 40 lakhs, let's say from this SBI Bangalore to SBI Hyderabad, there is some 10 lakhs. And the balance will be how much? 40 lakhs segregated into 10 and 30, na? 30 lakhs. On this 10 lakhs, which is an input from your distinct person, you can claim full credit, which is 100%. 10 lakhs into 100%, 10 lakhs. Whereas on the balance 30 lakhs, you cannot claim fully. You can claim only how much? 50%. That means only 15 lakhs. So total 10 lakhs plus 15 lakhs equals to, what is the ITC available to you, sir? 25 lakhs. That means to banks, financial institutions, this 25 lakhs. This is simple now. So they can follow this option, or they can follow rule 42 and 43. It is completely their choice. Sir, now we moved into section 18, sir. Subsection 1. It has 4 subsections, sir. A, B, C, D.
Sir, basically here what happening means you are currently in non-tax paying status. You are currently in what? Non-tax paying status. From non-tax paying status to you are converting into tax paying status. Sir, what does it mean by non-tax paying status to tax paying status? Means you are unregistered person previously, now you are getting registered either because of liability or voluntary registration. Unregistered to registered. Unregistered person means non-tax paying person only now. If you convert into registered person, tax paying status. Other, okay, these are covered under A and B. You can see, okay, this is for who person applied for registration within 30 days from date of liability. Next one, sir, who applied voluntarily registration. Next, C is again non-tax paying to tax paying, but when section 10 to section 9, sir, that means composition scheme to normal tax paying status. Composition to normal. Here, sir, registered person exempted to taxable. What he is doing? Exempted to taxable. Sir, understand here. He is already registered, but making exempted supplies. Already registered, but making exempted supplies. No, non-tax paying status only. No, but now converted into what? Taxable supplies. So exempted to tax. Okay. So now what is the provision means on the date of conversion? Sir, let's say 2 years back I purchased the capital good when I am unregistered. Now I am converting into now I am applying for registration. So my question is, on that capital good, can I avail ITC? No. First question. Second one, I have stock some 20 lakhs worth on the date I applying for registration. Okay. Okay, since I purchased those goods at the time of unregistered period, I didn't avail ATC. My question is, now the stock brought into my business only, no, which is registered. Now at the time of selling of this stock, I need to pay tax. So my question is, can I avail ITC on them at least? Okay, those points are discussed here. So when you are applying for, sir, this A and B both are saying what? Unregistered to, you are converting from unregistered to registered. But C and D, it's not like you are applying for newly registration. You are already registered. But what is happening? Non-tax paying to tax paying you are coming under C and D. But whereas A and B, it is only unregistered to registered you are converting. So what they are saying, sir, here, if you applied for registration within 30 days from date of liability, then you can avail ITC on inputs which are lying in stock, ITC on what, sir? Inputs which are lying on stock as on the day preceding to date of liability. Let's say from 1st December you got the liability to register, then on 30th November you might have some closing stock na, on such stock, okay, such stock related, if any input tax is there, that you can avail ITC. But there are conditions are here. For that inputs there should be invoice must be there, plus the invoice shouldn't be older than 1 year. Okay, the time of from the date of invoice 1 year not at expired. If from date of invoice already 1 year lapsed, means on that, even though invoice is there, you cannot avail ITC on that particular inputs which were brought into registered person. Okay, closing stock of unregistered person brought into registered persons. Okay, so the point is unregistered to registered. You applied because your threshold exceeded or because of 23 compulsory registration. Sorry, 24 compulsory registration. Now the inputs, and these inputs may be lying in any state, sir. Raw material phase, work in progress phase, or even in finished good phase. On these inputs, if there is any input tax component, such input tax can be availed as what? ITC. Okay. Okay, sir. On which day stock? What is the cutoff date here? The day preceding to the date of liability. But to avail ITC on inputs, you should have invoice, and invoice shouldn't be older than 1 year. Sir, voluntary registration also. What you can claim? You can claim ITC only on inputs. The same thing, sir. Inputs which is lying on stock on the day preceding to the date of grant. Voluntary registration here, date of grant. Here it is date of liability. Preceding to the date of grant. On that day, whatever is the stock, such stock related input tax you can claim, provided invoice must be there. Invoice shouldn't be older than 1 year. Now, a person converted from composition to regular.
or input same condition, sir. You can avail ITC stock on the day preceding to the conversion. Okay, let's say from 1st April is converting. Preceding to conversion means what? 31st March, na? Stock on the day preceding to conversion. On that inputs you can avail ITC, provided invoice must be there, should be within 1 year. Okay, even for when you convert from exempted to taxable also on inputs, you can avail on such stock on the date prevailing to the taxability. Okay, let's say from 1st August the goods are being taxed. 1st August preceding day means what, ma? 31st July. On 31st July, whatever is the closing stock, such closing stock related input tax you can claim as ITC, provided invoice must be there and it should be older than, not be older than, shouldn't be older than 1 year. Whereas coming to capital goods, you can claim ITC, sir, capital goods also. Let's say, for example, I am taking, sir, for both, sir, in both these cases, the concept is same. Example, a capital good purchased on 1st August 2021 for 15 lakhs. Okay, on this tax rate is 12 percentage, total ITC part that might be 1.8 lakhs. But that time you are into exempted supplies. That time you are making what? Exempted supplies. Now from 1st July 2023, it is converted into taxable supply. So now you wanted to claim ITC on this capital good. So can we claim? Yes, you can claim ITC on this capital good if it is brought into the taxability. Okay, sir. Now what you need to calculate means how many quarters is already expired in the exempted period or in the composition scheme period. 1st August 2021 means, okay, I'm taking 2021, 2022, 2023. In 2021, Jan, Feb, March, 1 quarter gone. Okay, already. Okay, April, May, June, that quarter not purchased, but it is purchased in which quarter? August means July, August, September, 1 quarter. October, November, December, 2 quarters. In 2021, it is used for 2 quarters. In 22, full year it is used 4 quarters. And 2023, sir, Jan, Feb, March, April, May, June. Again, it is used for how many quarters, sir? So total it is already used for how many quarters, ma? 6 quarters. Now, how much ITC they can avail means what is the total input tax available? 1.8 lakhs na into total number of quarters is 20 quarters. Sorry, the ITC they can avail is 1.8 lakh, 1,80,000 minus 1.8 into 6 quarters into 5 percentage. That means for all the quarters which is already used, for every quarter 5 percentage of ITC you need to forego, because for that useful life already expired in the unregistered or non-tax paying period itself, that you cannot claim now. For the period which is already lapsed, that period you need to forego. For the balance period only, proportionately you can claim ITC. 1.8 into 6 quarters into 5% means how much, 30 percentage. That means 30 plus 24. So 54,000 if you subtract means, now how much you can claim as ITC? 1 lakh. Okay, 26,000 you can claim as ITC with respect to capital good. So on capital goods, when converted from composition to regular or exempted to taxable, being a registered person exempted to taxable, you can claim ITC. But okay, not the full ITC you can claim. You can claim only proportionately after adjusting the credit with respect to the period which is already used. For the used period, number of quarters into 5 percentage calculate and subtracted, and the balance you can avail as ITC. I hope you are understanding everything clearly. Now coming up with the provision of 18 subsection 3, sir. What this provision says, sir? When there is sale, demerger, merger, amalgamation or change in constitution of business. Okay, this is nothing but in the case of sale, demerger, merger, amalgamation or change in ownership, nothing but transferred your business to another person, including death of sole proprietor, In all these cases, there is succession. When succession is happened, then from predecessor, the business is getting transferred to whom? Successor. That means a new entity is getting formed. So if ITC which is unutilized to predecessor can be transferred to new entity. Okay, sir, let's say A Limited merged into B Limited, sir. The unutilized credit of A Limited can be transferred to whom? B Limited. But in the amalgamation contract or in the amalgamation conditions, that B Limited, there should be a condition like B Limited not only be taking the assets of A Limited, it is also taking the liabilities of A Limited. It's not only taking what? Assets of A Limited, even the liabilities of B Limited. In such case, okay, the ITC can be transferred to B Limited. Sir, in case of demerger, what happens, sir? One company gets splitted into multiple companies. Demerger means one company gets splitted into multiple companies. Now here, A Limited is splitting into what? A Limited, B Limited and C Limited. No. Now let's say A Limited is having 20 lakhs as ITC. Now it is not forming into one company to transfer the whole 20 lakhs. It is splitting into three. I mean, the existing A is there and even it is being splitted into B and C. In such cases, the ITC needs to be transferred in the ratio of value of assets at the state level. Sir, I will show you this by way of this example. Okay. A company XYZ is registered in the two states MP and UP. Total value of assets is 100 crores. Okay. While it assets in MP and UP are 60 and 40. Total 100, but in MP 60, UP 40. It demerges a part of its business to ABC, XYZ. Now XYZ and ABC, two it became. Okay. So you can see XYZ, it is demerged into two. What are those two? XYZ and ABC. And XYZ has in two states, MP, UP. MP, the value of assets are like 60, UP 40 crores. Now you can see, as part of such demerger, assets of XYZ amounting to 30 crores are transferred to ABC. How much ABC got, sir? 30 crores. That means, okay, 30 crores in the state of MP, while assets amount to 10 crore only transferred in the state of MP. Sir, 30 crores from MP it got, 10 crores from UP it got. Overall, how much assets it got? 40 crores now. Out of 100, ABC got 40 now. But you shouldn't take it as like 40-60 ratio, because the ratio needs to be taken at what? State level. So understand, out of 60 crores in MP, how much given to ABC, sir, in MP? 30 crores. Okay. Even to XYZ, how much is there in MP? 30 transferred means 30. So that means here it is 50-50. Okay, 1:1 ratio. Whereas in UP, to ABC in UP it is given only 10 crores. Whereas XYZ retained how many crores, sir? 30 crores. That means here it is 75-25. That means 3:1 ratio only. So you shouldn't take at the overall organization level. You should take it at the state level. Okay, you can see further. Assets amounting to 40 crores at all India level are transferred from XYZ to UP. The unutilized ITC of XYZ in the state of MP shall be transferred to ABC on the basis of ratio of value of assets in MP. That means from MP, how much value transferred? 30 only now out of total 60. So how much to ABC it needs to be transferred with respect to rate of MP? 0.5 percentage. I mean 50 percentage, because 50 percentage of the assets are transferred now in MP. Next, with respect to UP, out of 40, 10 only transferred now. That means from UP only 25 credit percentage of rate will be given to ABC. So at state level, the percentage needs to be found out. Okay, you can see 0.5 and not the basis of all India ratio. And even to in UP also it is 0.4. I mean 40 or not in 40 by 100. Similarly in UP also it needs to be transferred in the ratio of 0.5, 25 percentage. Okay, na sir? Next one, sir. 18 subsection. Sir, we already discussed how to avail ITC when we shifted from non-tax paying status to tax paying status. Now this concept is about how we need to reverse ITC when we shifting from tax paying status to non-tax paying status. Sir, when we will be shifting from non-tax paying status to tax paying, you are a registered person. Now you are cancelling your registration. Either you yourself voluntarily or the proper officer cancel. Registered to unregistered. That means till now you are registered means on capital good you availed ITC, on inputs you availed ITC. But on the date of conversion, there might be some input still lying in stock. There might be, there will be capital goods. Okay, so with respect to that inputs and capital goods, you need to reverse
ITC. The same way, you are converting from regular scheme to composition. Your goods which are taxable previously now became exempted. In all these cases, the credit responding to inputs which are lying on the day preceding to shift. Okay, the day preceding to shift, that means registered to unregistered or composition to composition or to taxable. The preceding day, on such day the stock lying is there, no, on such stock, irrespective of whether they are in raw material stage, finished goods stage, or in work in progress stage, the tax component with respect to such input needs to be reversed. Sir, when we are availing ITC, that means when we are shifting from non-tax paying to tax paying, then also I said like on inputs we can avail ITC if they are lying in inputs. But I said two conditions. Invoice must be there and invoice shouldn't be older than 1 year. Here those conditions are not there, sir. If invoice is there, the corresponding invoice value on that tax will be there. No? Such tax needs to be reversed. No? Sir, if invoice is not there, then what to do? Open market value, take the particular goods open market value. In stock there will be there, let's say in stock mobile is there might be open market value for that mobile. Take that open market value, calculate tax, now reverse that. Reversing is nothing but, sir, again adding it to your liability and now pay. ITC reversal means there is no concept of reversing. You need to pay that again. Okay. So even though invoice is not there, take open market value as base, calculate tax and pay that now. If invoice is there, the tax component invoice, pay that now. Okay. This is with respect to inputs, sir. In all the three cases, with respect to inputs, you need to reverse the ITC. Reversing ITC is nothing but now adding it to your liability and paying that again. Okay. No clause of having invoice. Even though it is older than 1 year, no, nothing to be worried. You need to reverse. Capital goods, sir. With respect to capital goods, I'll take an example, sir, again. Let's say on 1st April 2021, a capital good is purchased for 1st April 2021, a capital good is purchased for how much, sir? 45 lakhs. Okay, sorry. I'll take for easy purpose. I'll take capital good. On this, the tax rate at 10%. So 4 lakhs has been availed as what? ITC. Now it has been shifting to tax paying to non-tax paying. That means from 1st June 2023, you are converting into non-tax paying status. That means you are cancelling your registration. So now how much ITC you need to reverse? On 1st April 2021, how much ITC you availed? 4 lakhs you availed. Now you need to reverse ITC. Why? Because you are shifting from tax paying to non-tax paying. Okay, how the reversal has to be made means, okay, what is the value of reversal is total 4 lakhs minus how many months used. Check how many months it has been used. Sir, how many months it have been used, sir? In 2021, already Jan, Feb, March is done now, so 9 months. 2022 whole year 12 months. 23 again 5 months. So total how many months are 9 plus 12, 21 plus 21 plus 5, 26 months it's used. No. So 4 lakhs into 26 by 60, because 5 years means 60 months, no? So 4 lakhs into 26 by 60, calculate that one. Okay, and that needs to be subtracted, and the balance you need to add it to your tax liability. Sir, why we are taking credit, then quarterly calculate the used period and subtract and avail ITC. When you need to reverse for used life, calculate it in number of months and subtract the proportionate credit relevant to number of months. Balance you need to pay it back to them now. Okay. Sir, next 18 subsection 6, sir. Availment of credit in special cases. What here they are saying, sir? Availment of credit in special cases. So this point, sir, I purchased a capital good. Sir, if at all you understood it, in GST they are not discriminating whether it is input, raw material or capital good. On both you are availing ITC. Na? Raw material is a current asset which will be consumed in 1 year, but whereas capital good, it has useful life, at least the assumption 5 years is there now, but still they are giving the ITC at a time. Why they are giving? They are under a notion or assumption that you are going to use this asset for 5 years. But what happening means, after 1 year or 2 years usage, you are selling that particular capital good. Now on sale of that capital good, how much tax needs to be paid? Capital good supplied or disposed. Then
sale value is there now for that capital good. Let's say the capital good initially it is purchased for 20 lakhs. On the tax component, okay, 2 lakhs has been claimed as ITC. Now this asset is being sold for 15 lakhs, sir. 15 lakhs is the sale value into 10 percentage means on transaction value basis you need to pay 1.5 lakhs. But that alone need to be checked. There is another option also has to be checked. What is that? Take ITC away, 20 lakhs minus 5 percentage of ITC into quarters used. Sir, let's say it is already used for 1 year. That means 4 quarters now. What you need to do? 5% into 20 lakhs into 4 quarters. That means 4 into 5, 20 percentage on 20 lakhs means, okay, 20 percentage on 20 lakhs means, sorry, it's not 20 lakhs, sir, 2 lakhs. Okay, total ITC 2 lakhs. 5 percentage on 2 lakhs into 4 quarters now. That means 2 lakhs into 20% means how much, sir? 40,000. If you subtract that, here you are getting an answer of how much, sir? 1 lakh 60,000. That means what you are doing on capital good, the ITC availed minus the proportionate credit till the period used has to be subtracted. The balance 1 lakh 60,000 or tax on transaction value 1.5 lakhs, whichever is higher has to be paid when the capital good is disposed, okay, or sold, okay, whichever is higher. So here 1.5 or 1.6, 1.6 is higher na, so such 1.6 has to be paid when the capital good is disposed. Okay, sir, by this we completed the ITC normal regular points. 16, 17, 18 we completed. Okay, now the points which are pending are related to job work section 19, 20, 21 which were relevant to IST. Together that also may take another 30-35 minutes, sir. Okay, for job work and IST, but they are also being here and there asking in the question. I don't want you guys to take choice of concepts in ITC again. It is better to cover all the topics from ITC. Okay, another 30 minutes means you will finish ITC. So now we are into the concept of job work. So, but job work is about section 19. Okay, in ITC 16 completed, 17 completed, 18 completed. Now job work section 19. But before that, we need to understand what is job work. So job work means any treatment or process undertaken by a person on goods belonging to another registered person. Sir, let's say, sir, I'm a car manufacturer, sir, but I need my doors to be crafted in certain manner. So instead of me being taking that job, I'll be focusing on the engine part. Whereas the doors manufacturing I given to some other person. So to such person, I will supply the iron metal. Okay, the capital goods which were required to make the door in the required form. So I'll be giving all the machinery and inputs to that particular guy. So on the inputs I given by using the capital goods I given, he'll be preparing the door in the way which I require. So that guy is doing what? Job work. That guy is doing what? Job work. He is doing a treatment or process. Okay, his treatment or process only na on the goods which I supplied. On goods belonging to another. So actually they are belonging to me. On them he is doing a treatment or process. So that is job work. Who is called job worker? The person doing job work is called as job work. So he is doing job work. He is called as what? Job worker. Okay. So registration requirement for job worker, sir. Sir, a job worker actually, job worker, here understand, sir, principal and job worker are in the same state, principal and job worker are in the different state. That means whether it is an interstate between principal and job worker or intrastate. Sir, actually a job worker is an agent. He needs to register compulsory. But actually there is an exemption here, sir. Okay, sorry. If he is making interstate supplies, he need to register compulsory. But for job worker, there is a relaxation given in section 23, which says like, if a job worker, sir, he is not supplying goods nor services. He is just what he is doing. He is doing treatment or process on the goods which I am supplying. As per schedule 2, such treatment or process applied on some other person's goods is classified as supply of service. So job worker is providing to me what? Service. Okay. So what 23 is saying means, if at all interstate supply is being made by a job worker, he is providing me service now, which is interstate supply. Still, he need not to register unless his turnover exceeds threshold limit. So he need to register only when aggregate turnover exceeds 22 subsection 1 threshold, that is 20 lakhs normal state, special category states 10 lakhs. Okay, in the case of interstate, sir, intra also the same thing, sir, only has to register when aggregate turnover exceeds 22 subsection 1. So job worker, the supplies made by him is what? Supply of service only. It is classified where, sir, schedule 2 classified it as what? Supply of service. Job worker part is nothing but supply of service. Now understand, sir, here you could see there is what? Principal. Here you could see what? There is principal. This principal, he is sending inputs and capital goods to job worker. Okay, can he send? Yes, only when I send those inputs and capital goods he can process. No, so he can send. Okay, sir, now my inputs I am sending to him now. Can I avail ITC? Absolutely, you can avail ITC. And even such sending has to be, okay, sir, I procured the inputs and again I may send it to job worker, or from my okay supplier itself I can say directly supply him goods directly to whom? Job worker. My question is, if the goods are instead of sending to me, they were sent directly to job worker, can I claim ITC? Yes, sir. 16 subsection 2, if you remember, goods and services must be received to claim ITC. But I didn't receive. Who received? Job worker received. But still I can claim ITC. Why, sir? There is a proviso there. Oh, sorry, there is an exception there which says like a person can claim ITC in bill to ship to model. Okay, sir, supplier bill, he sends invoice to me but goods to job worker, so nothing but it's bill to ship to model. Now I can claim ITC. Being a principal I can claim ITC when the goods are sent directly to job worker, provided okay I should have an invoice. Okay, sir, so here you can understand, from principal place of job principal to job worker they can be sent, or directly from principal to job worker also you can send. My question, sir, I am sending inputs and capital goods from me to job worker now, on that I need to pay tax? No, because you are not supplying to them, you are sending to job worker on applying a treatment or process on them, so without any tax you can send them to the job worker. Sir, what job worker has to do? Job worker has to return those capital goods after job work. Okay, both inputs and capital goods has to be returned by whom, sir? Job worker. Sir, you can see the arrows here clearly. Okay, arrows. So here above one is sent by principal to job worker, whereas the below one is like job worker sending back them to whom? Principal. Okay, after job work, if inputs, goods and capital goods needs to be returned by job worker, by within how much period, sir? Within what period? Okay, within 1 year the inputs has to be sent back. Okay, and even an extension can be granted for another 1 year. So this plus is there now, this is nothing but extension. Okay, whereas without tax, okay, and even capital goods has to be sent within 3 years period, sir, and extension of another 2 years can be granted. So even when job worker is sending back to me on these inputs capital goods, there is no tax, but on what there is tax, macha? On the value of service provided by job worker. So job worker may be providing service na for doing the treatment and process, that service component taxable. On the goods value, capital goods value, you need not to add. Sir, there is one clarification also. What does it mean? Sir, the goods sent to job worker, sir, I sent 5 lakhs worth of goods to job worker. He carried job work on that, and he used for carrying out the treatment or process, he purchased 20,000 worth material and used my raw material and purchased 20,000 worth material and treated and processed a finished good. He is sending back to me, he sent to me. Okay, now he raised a invoice to me for 1 lakh, sir. Okay, for the job work activity he did. Now the question is, 1 lakh taxable, or since he purchased 20,000 for okay for convert for making the treatment or process? No, what to do means, sir, that 20,000 goods he applied for treatment is his purchase. Okay, okay, it is his input to provide the job work outward service. Okay, on that job worker can avail ITC, we cannot avail, principal cannot avail ITC. Okay, so job worker has to return the goods within what period, ma? Within 1 year if you are inputs, within 3 years if they are capital goods. It can be extended for 1 year or 2 years. However, this time limit is not applicable to molds, dies and jigs. Sir, to manufacture them in a specific state, okay, in a specific shape, design, molds and designs or digs may be sent by principal. They need not to be returned. Okay, the time limit of returning is not applicable. Okay, but still the principal can claim ITC. Sir, there is one more option, sir. Job worker, instead of returning the goods to me, he can supply those goods to another job worker for another for some other job work. Okay, sir, he crafted the door in the way I want. Okay, the shape, design, everything. But he doesn't do painting. So for painting, it is sent to another job worker. That can be done second thing. Or else he can only directly supply to the or send it to the customer, but invoice will be given by whom? Me only. I mean, principal will only be giving the invoice, not the job worker. So job worker can return back the goods, or he can only directly send the goods to the supplier, I mean to the customer on behalf of us, or send the goods to another job worker for job working. Okay. So now coming to section 19, sir. Very simple, sir. Principal can avail ITC even inputs capital goods sent directly to the job worker. Inputs capital goods instead of being sent to, I mean, even first received by me and then sent to job worker, instead of that, they were sent directly to the job worker. In that case also we can claim ITC. Which provision said like that, ma? 16 subsection 2, if you read carefully, there is the proviso, no, bill to ship to model, that point. Okay, not proviso. There is an exception to goods and services must be received. So now see, where inputs, okay, this is extra point, sir. You can avail ITC, but the point now is very important, where the inputs and capital goods are not returned within the time period. Within the time period. Okay, they are not returned within the time period mentioned in section 143. Sir, this is nothing but this concept we discussed now here. This is section 143, sir. 143, job worker. 143. Okay. So 143 suggested certain time limits now. 1 year for inputs, 3 years for capital goods, along with that extended period, where inputs and capital goods within 1 year from date of sending, within 3 years from date of sending, or from extended time limits, they are not returned. Then, why I am stressing 3 times means it is such important point, ma. Have focus on it. It is deemed that such inputs and capital goods are supplied by principal to job worker. So if at all the job worker doesn't return the goods to me, it has to be considered as like principal supplied those inputs and capital goods to job worker. That means now the tax has to be paid. Okay, sir, tax will be paid. Since he doesn't return, we'll consider now it as what? Supply. But what is the time of supply? On which day we have to consider it as supply? On the date they were initially sent. Okay, sir, understand. Here there is the pain. Okay, now let's say 1 year already expired. Now it will not be assumed like the supply happened today. It will be considered as when the supply is made 1 year back itself. For capital good, 3 years back itself, the supply will be considered as made. Sir, okay, if you consider it as 1 year back or 3 years back, what's the problem? So the problem is, if the supply is considered as made 1 year back, you might have paid tax also when 1 year back itself, na? But did you pay? No. So from that date till the date of payment, you need to pay interest as well. That is the point. Okay. So when the capital goods and inputs are not returned within the time limit suggested by 143, okay, then those inputs and capital goods will be considered as supplied by principal to job worker. Okay, on the day when they were initially sent. Okay, so these has to be declared in GSTR 1. Okay, for the period in which 143 time limit expires. For the period in which 143 time limit expires. Okay, so let's say that is expired in July. So while filing July month GSTR 1, you need to mention these also supplies of that particular period, mentioning in this current GSTR 1. Okay, provisos are here. Sir, time limit now here. Date of supply from the date initially sent, I said now. Sir, let's say principal didn't send. They were directly received by job worker from the supplier. In such case, from when the time limit has to be checked? Date of receipt by job worker within that time period. Okay, within 1 year or 3 years, if you return, no issue, sir. Otherwise, it will be treated as what? Supply, and along with the tax, interest also has to be paid. Okay, this is about what, ma? Job work. So now we are into the concept what, sir? Input service distributor, sir. So for this there are section 20 and section 21, sir. The concept, sir. Sir, a registered person is receiving what? Input services. On this input services, there is tax component, but these services are not consumed directly by this registered person. These were related to these branches also. Okay, then the whole ITC may not be used by this registered person. He need to send it to those branches. Okay, sir, how can I send my ITC to some other person? Can I do that? Yes, if you register yourself as what? Input service distributor. My question is, sir, I am having capital good purchase also. On that credit also can be distributed? No. For good, input service distributor concept is not applicable because good is a tangible one. It cannot be apportioned between two branches, three branches. It will be there in one place only. No, good tangible one. We cannot half good here, half good there. Like that we cannot do. No, but service. Okay, let's say advertisement service, sir. Inward, which is applicable for all the branches. Legal service applicable for all the branches, including head office. So that's why only input services may be relevant to all the other branches as well. Such credits may be distributed to all those branches apportionately or proportionately. Okay, sir, to which branch I can send? Okay, sir, there is one person who is my friend. Can I apportionate my credit to him since he is my friend only? No. Okay, to whom you can distribute? Sir, I am a person who am having input services. I can distribute my credit only with other registered or unregistered who are linked with the same PAN, which are linked with my PAN. Okay, so my distinct persons only I can transfer the credits or I can apportionate the credits with my distinct persons. Okay, so distinct persons means they that registration's PAN number and my PAN number are same. So to them only the credit can be input tax can be apportioned. Okay, a registered person can apportion the two branches same PAN of ISD. So that means that branch also should have which PAN, sir? The same PAN of ISD. Sir, while distributing the credit, okay, while distributing credit, ISD should maintain what? Arithmetical accuracy. What is arithmetical accuracy? He shouldn't distribute more than which he is eligible. He has credit of 2 lakhs only, he couldn't distribute 5 lakhs. Okay, so arithmetical accuracy. So whatever is available only he should distribute. No, by way of calculations, he shouldn't distribute more. Next, ISD registration is a compulsory registration as per section 24. Okay, so ISD, sir, if you want to act as an ISD, normal registration is not enough. Okay, sir, this particular head office is having normal taxable surplus. To pay tax, you should have a separate registration. For to distribute credits, this ISD registration is a altogether different one, which is a compulsory registration. So through ISD registration, you cannot pay tax. You can only distribute the credits to your branch offices. Okay, so how the credit will be distributed, sir? Let's say to head office scenario 1, there is an input service, sir. Okay, it received an input service head office. It has actually 3 branches, branch 1, branch 2, branch 3. But this input service is exclusively for branch 1. Then the total credit has to be apportioned to what? Okay, credit transfer only to that particular branch only. If at all an input service is exclusively for a particular registered person, then the transfer the whole credit to that particular person only. So only to branch 1. Next scenario, situation 2, input service, okay, again received by head office. Okay, there are 4 branches, branch 1, branch 2, branch 3, branch 4. But this input service is relevant only to branch 1 and branch 2, not for all the 4, only relevant to what? Branch 1 and branch 2. Then only distribute to whom? Branch 1 and branch 2, sir. Sir, let's say this is 1 lakh. How could we distribute to branch 1 and branch 2 for, 1 lakh equally, na? Or which ratio we need to take? It needs to be apportioned based on the ratio of turnovers. Ratio of turnovers. Okay, in which ratio, sir? Ratio of turnovers. Ante, take turnovers of branch 1 and branch 2. Take turnovers of what? Branch 1 and branch 2, and in their ratios, okay, add. Let's say branch 1 turnover, preceding financial year turnovers we need to take, sir. Which years? Preceding financial years. Sir, let's say branch 2 not at all in existence in previous year. In preceding financial year, branch 2 is not at all there. Then, not the preceding financial year, the quarter in which both the branches are there, that quarter's turnover you need to take as base. If at all both the branches are there in the preceding year, then take the year's turnover. If at all they are not existent for the whole year, then they take the preceding quarter in which both branches are available, that quarter's turnover. Let's say branch 1 is having 15 lakhs, branch 2 is having 25 lakhs turnover, sir. Then distribute this 1 lakh in 3:5 ratio. That only na 3:5 ratio. Scenario 2. Done na? And again, head office is getting input service. Head office is getting input service which needs to be distributed to branch 1, branch 2, branch 3, branch 4, and this service is related to all. Okay, something like audit service, not only for one branch, it is related to all the 4. Then to which branch it has to be distributed? All the 4 you need to distribute. What is the ratio? Ratio of their turnovers. Their turnovers. So which year's turnovers? Preceding financial year. Sir, in preceding financial year, one branch is not available. Then take the turnover of the quarter, preceding quarter, in which all the 4 branches are working or in existence. Okay, in that turnover ratio you need to apportionate between the branches. Let's say in preceding turnover like 10 lakhs, 20 lakhs, okay, 30 lakhs and again 20 lakhs, then the ratio is 1:2:3:2. The input service related credit has to be distributed between the ISD. Sir, one more point. A month, let's say July month credit has to be apportioned by ISD within which month, sir? July itself. That means June month purchased, sir. ISD received a supply in June month. It will be reflecting to is in GSTR 2A, 2B na. Okay, sir, an ISD will generally file written in GSTR. Okay, an ISD will generally file in GSTR 6 na. Okay, so to him ITC will reflect, no, where it will reflect to him 6A. If it is reflecting means this credit, okay, when it will reflect, sir? By June month if he purchased means by in July month by 11th it will be distributed to him, no. So now ISD by filing GSTR 6 he will be apportionating, sorry, not by GSTR 6, okay, by filing GSTR 6 he will be apportionating the credit to, transferring the credit to branch. So by GSTR 6 13th of succeeding month na, so he'll file GSTR 6 by way of distributing the credits. Okay, then to branch offices, branch 1, branch 2, branch 3, branch 4, it will reflect in their 2A, 2B, 2A, 2B, 2A, 2B. It will reflect to all those branches to whom the credit is distributed by way of GSTR 6. Okay, so assume I am an ISD. I got input services, okay, which are reflecting in my 6A. Okay, now I need to distribute this to my branches, no. For distribution I will be filing GSTR 6. When I file GSTR 6, the corresponding credit which I distributed will be reflecting into the branches in their GSTR 2A or 2B. Okay, sir, ISD is in Telangana, branch 1 AP, branch 2 Telangana itself, branch 3 again Maharashtra it is there. Okay, scenario 1 again take. This ISD is having input tax which is CGST and SGST, which needs to be distributed between these 3, CGST and SGST. Sir, ISD in Telangana, branch in AP na, then CGST or SGST cannot be distributed as CGST, SGST. This needs to be distributed as what? IGST. Sir, now come to branch 2. Both are in Telangana na. So now you can distribute CGST and SGST as what? CGST and SGST itself. Okay. Sir, branch 3. Okay. Again Telangana ISD, but whereas the branch recipient is where Maharashtra. So in such case also again you cannot distribute it as CGST and SGST. You need to distribute it as what? IGST. Sir, if it is intrastate distribution, distribute it as like CGST and SGST only. If it is interstate distribution, then IGST. So here it is interna, that's why IGST. Here intrana, same CGST, SGST distributed as CGST, SGST. Here intrana, again CGST, SGST also distributed as what? IGST. Sir, now scenario 2, sir. ISD, again he is in Telangana. He got input tax, okay, which is nothing but IGST. Now needs to be distributed to branch 1, branch 2, branch 3. Branch 1 is where, sir? AP. Branch 2 where, sir? Telangana. Branch 3 where, sir? Maharashtra.
In all these cases, IGST will always be distributed as what? IGST, irrespective of intrastate or interstate, it will be distributed as IGST only. But if it is CGST, SGST, intra means same as CGST, SGST, interstate means it will be distributed as what? IGST. Okay. So now the other points are like, sir, what if ISD gets a debit note? Debit note increases what? ISD's input tax rate now. So ISD will also issue to the branches debit note. If at all, or else ISD got the credit properly only. But while distributing here, ISD did a mistake to one branch. The credit distributed is less than what actually it should get. Okay, I mean more amount has to be transferred to that branch. Okay, then also ISD can issue debit note to that particular branch. The same way, sir, if at all excess is distributed, then issue credit note. If shortfall is distributed, okay, less amount is distributed, you need to distribute more, then issue debit note. If excess distributed, to reduce that, issue credit note. Okay, that is the impact here, sir. Other than that, nothing more, sir. So we completed what, sir? Even ISD part also we completed, sir. Holistically we covered everything from ISD, sir. Only one thing, sir, 49 subsection 12 it merged. Previously it used to be called as what? Rule 86B. What does it say? It means when a registered person aggregate turnover, when a registered person aggregate, sorry, not aggregate turnover, sir, when a registered person's value of taxable supply, when a registered person's value of taxable supplies other than exempted and zero rated, where a registered person's value of taxable supply other than exempted and zero rated supplies is more than 50 lakhs in a month, then to him this 86B or 4912 now is applicable. What if it applicable? What happens if it is applicable? What happens means, if your liability is, let's say, 40 lakhs, liability 40 lakhs, you have ITC 42 lakhs. Generally what you do, you can adjust here now. Let's say both are IGST, you can adjust now fully. But if 86B is applicable, you cannot adjust your credit completely. Only 99% of the liability can be discharged by way of adjusting ITC. Balance has to be paid through what? Cash ledger. Okay, this 86B is saying what? When you are making a taxable supply other than exempted and zero rated supply in a month more than 50 lakhs, then you are not eligible to adjust 100% of ITC. Sorry, now you are not eligible to adjust 100% of your liability with ITC. Only 99% of your liability can be set off with ITC. The balance 1% has to be paid through what? Cash. Okay, it is here there are certain exceptions, sir, but I am not discussing much because it takes lot of time. Okay. Okay, so by this we completed what, sir? ITC chapter. Almost every provision we cleared, sir. We can discuss, sir. Sir, I need to focus you on certain basic problems first. I mean, generally the problems are asked like a person will have certain inverts, sir. Some are forward charge, some are reverse charge. On that, first you need to calculate ITC. Step 1, calculate what? ITC. Then the same person's related outwards will also be given. On outwards, calculate tax payable. Step 2. Okay, sir. Then with the liability you calculated, adjust the ITC. This is the basic format of question. In that, what they will do means, on your purchases they will mix blocked grades. They'll say like invoice not available. Some are FCM, some are FCM. So you need, while calculating ITC available, you should be cautious and calculate the ITC available. Then second step, they'll be giving your outwards. On outwards, calculate the tax payable, adjust the ITC in the manner we discussed. Okay, with the liability. Majority cases the sums will be in that way only. Okay, I think like I had given much, I mean enough clarity on ITC chapter ma in the limited time which I have. Hope it will be useful to you. So now we are into the chapter TDS and TCS. Sir, this chapter, sir, inter or final level, old syllabus, sir, inter old syllabus, this chapter is there, final this chapter is there. Okay, sir, at final level
This chapter is most frequently a question is being asked for 5 marks from either TDS or TCS. Even in inter level also they are asking sir old syllabus like 3 marks or 4 marks. But at final level you can expect it much more surely sir. TDS under section 51 and TCS under section 52. Very small concept sir. Almost like 15 minutes we can finish off this concept. But sure shortly you can answer a question. Okay, even without practicing a question also with this theory content itself you can answer the question. Okay, I mean even if you can just open and see the institute questions from TDS and TCS straight away. Okay, listen to this for 15 minutes, then straight away open those questions, you can answer them every question. Okay, okay, if at all there is a doubt I will be covering them sir. You only revisit the video and then go and answer the questions. Okay, I'll be providing everything to answer the question from TDS and TCS. Sir, TDS means when a supplier supplies goods and services to a person, this recipient will be making the payment na. At the time of payment he will be deducting certain amount as TDS and the balance will only be paid, not the full amount. So sir, when TDS is applicable, when the deductor, okay, deductor means the person who is deducting TDS is called as deductor. Sir, supplier will be making the payment or recipient will be making the payment or recipient making the payment? No. So recipient is called as what? Deductor. Recipient is called as what? Deductor. Okay, recipient is deductor sir. What he needs to do? Okay, who should be that recipients are central or state government department or central or state government establishment or local authority or a government agency or public sector undertaking or a society established by central and state government where they central and state governments having more than 51 percentage shareholding. Okay, recipients are central state government department, establishment of central and state government, local authority, government agencies, PSUs, or any societies established by central and state governments where they are having more than 51 percentage shareholding. Then TDS is applicable, then also not applicable sir. When the supplier, that means the deductees, his value of contract, not the payment sir. In several questions they'll give payment, not the payment. If the value of contract is greater than 2,50,000, that is also excluding GST and tax component. Excluding GST, where the value is more than 2,50,000, then what? TDS is applicable. Sir, here value means sir, if a person is supplying both exempted and taxable, you need to check only what sir? The taxable part alone you need to check. Only the taxable part alone should be more than what? Only the taxable alone should be more than 2,50,000 sir. Okay, taxable alone should be more than 2,50,000. Okay, taxable alone should be more than what? 2,50,000. Okay, so when it is more than 2,50,000, so the deductor should be government department, establishment, authority, a local authority, government agency, PSUs, and societies established by central and state governments where they are having more than 51% control. Whereas the recipient should be, the supplier should be, deductee should be any person where the contract value is more than 2.5 lakhs. Then TDS needs to be deducted. At what rate TDS needs to be deducted, sir? Intra means 1% plus 1 percentage. Inter means 2%. 1 plus 1, why sir? CGST 1, SGST 1. Sir, let's say, so there is a contract for 5 lakhs plus GST 90,000. Okay, total 5,90,000 is the invoice value, on which how much is the TDS to be deducted? Not on 5 lakhs TDS is applicable. On what? 5 lakhs only TDS to be deducted na? Okay, let's say IGST 2%, sir. Okay, on 1 lakh or 2% means 2,000. On 5 lakhs 10,000 needs to be deducted na? 4,90,000 plus GST another 90,000. So how much the deductor needs to pay? 5,80,000 he needs to pay. 10,000 he deducted as what? TDS. This 10,000 he deducted is what? TDS. Okay, by applying 2% as IGST. Sir, not on the whole contract value you need to deduct TDS every time. Okay, if contract value is more than 2.5, taxable contract value, TDS applicable. TDS needs to be deducted only on the amount which is going to be paid. If at all 5 lakhs contract, TDS applicable, payment is only 2 lakhs, on 2 lakhs only deduct TDS. Okay, so TDS if it is deducted by deductor, it will be reflecting to the deductee in his cash ledger, sir. Where it is reflecting, sir? Cash ledger, sir. It is better for us to reflect in cash ledger because the balance in cash ledger can be used for any purpose. Okay, there is no manner which I said in ITC for cash ledger. That manner is only for what? Credit ledger. Inter adjustments, interhead adjustments are possible in cash ledger. Okay, so TDS is not applicable in the following cases, sir. When okay, the contract is between one PSU to another PSU, TDS not applicable. When the contract is between the persons covered under ABCD, between them, I mean government department of state government to a central government department or one agency to another government, then TDS not applicable. If the supplies are non-taxable supplies, or they are RCM transactions, or they are covered under schedule 3, or if the supplier is unregistered, then TDS is not applicable. PSU to PSU within their government persons, non-taxable supplies, okay, exempted anyhow not there, RCM transaction schedule 3 and suppliers unregistered, then TDS is not applicable. Sir, there is a proviso. Okay, this proviso also, when this proviso comes, then also TDS is not applicable. Sir, let's say, sir, supplier place of supply in the same state, recipient is also same state, then what generally intrana TDS applicable, CGST and SGST has to be deducted. Supplier is in state A, place of supply in state B, recipient is also in state B. Sir, location of supplier here, place of supply different state, then what? Interna here. So inter means what? IDST, TDS is applicable. Next, location of supplier in one state, place of supply in different state, so then what? Inter. But recipient is also in the supplier state only, still what? Interstate, TDS is applicable. Now comes the last one, sir. Okay, supplier in state A, place of supply is also in state A, whereas location of recipient is in state B. Sir, the destination is in same state. Okay, let's say I am from AP, destination supplier is from AP, destination of such good and service is also in AP, but whereas recipient is not from AP, is from Telangana, then technically it is becoming what, sir? Location of supplier and place of supply same state, so it is becoming intra. That means CGST and SGST has to be deducted, but recipient is not in the same state, he is in some other state, so TDS credit cannot be given to him, so that's why in this case TDS is not applicable. Okay, sir, TDS needs to be deposited. The amount which is deposited as TDS needs to be paid to the government by 10th of succeeding month. Okay, whenever TDS is applicable, then the TDS applicable person has to file return in GSTR 7 by 10th of the succeeding month. Okay, okay, not only that one, sir. When TDS is deducted, the person deducting TDS has to give a TDS deduction certificate. What, sir? TDS certificate, deduction certificate to be issued in GSTR 7A to the deductee within 5 days from remittance to government. Sir, let's say I remitted on 9th. By 10th I have to remit. No, 9th I remitted. Then within 5 days from 9th means by 14th I need to give what? GSTR 7A. Sir, if not the GSTR 7A is not given within 5 days, then late fee applicable up to 100 per day or rupees 5,000, whichever is lower. Okay, but this 100 per day is applicable only from 6th day, sir. Okay, so this is about the TDS, sir. Very simple now. Okay, now coming to TCS provision, sir. TCS under section 52, which is tax collected at source. Okay, when TCS is applicable, when you are supplying goods and services through, okay, when applicable, when supplying goods, services or both through e-commerce operator other than those covered under 9 subsection 5. Other than those covered where, sir? 9 subsection 5. Okay, sir, 9 subsection 5 I discussed in chapter. If at all a e-commerce operator is covered under 9 subsection 5, then he will only pay the whole tax, no? Then why again TCS concept? To such e-commerce operator there is no concept of TCS. This is applicable only to a e-commerce operator, okay, who is not covered under 9 subsection 5 and is not acting as an agent to someone. He is doing it on his own, okay, e-commerce operator, and then the supplies are being made through, okay, to whom TCS has to be collected, I mean deducted through a supplier who is supplying goods and services through goods and services through e-commerce operator, TCS needs to be deducted. Okay, sir, what is the rate of TCS, sir? If it is intrastate, 0.5 plus 0.5% TCS needs to be deducted. If it is interstate, 1% needs to be deducted as TCS. Okay, sir, intrastate. Okay, on what value TCS needs to be collected, sir? Let's say in a particular month through Amazon, a supplier supplied 45 lakhs worth goods. Okay, but related to previous months or preceding months and current month, there are certain returns. Okay, sir, general night is through e-commerce operator we purchase means we'll be returning them. So those returns will be next month also. So in the current month supplies he made, reduce the past months or even the current months returns he made. Okay, there are up to 10 lakhs worth returns. Okay, subtract them, and Amazon is charging a commission of sir, supplier 45 lakhs plus GST he made. Okay, Amazon collected 45 lakhs plus GST. On that 10 lakh rupees needs to be, sir, let me say like, okay, let me take it as like, this is total GST plus value of supply. 40 lakhs is the value of supply we'll take. Okay, whereas the GST on it is like, let's say 5%, sir, 40 lakhs into 5%. 50,000, so 40 lakhs means 2 lakhs. So 42 lakhs are total. Out of this, 2 lakhs is GST, na? Okay, 42 lakhs. From there, subtract returns, na? Then charges which are made by Amazon commission. Amazon is charging a commission of 1 lakh rupees. Subtract that, and even subtract the GST component which is already included, 2 lakhs. Okay, you'll arrive at net value. How much, sir? This is 13 lakhs. If you subtract from 42 lakhs, you will get 29 lakhs, na? This is the net taxable supply value on which TCS needs to be collected. On this 29 lakhs only TCS needs to be collected. Okay, minus returns, minus e-commerce operator commission, total supplies. Okay, if GST is included, that also has to be subtracted. If it is intra, 0.5 plus 0.5. If it is inter, then 1% TCS needs to be collected. Okay, so to whom TCS is applicable? TCS is applicable to an e-commerce operator. To an e-commerce operator who is not covered under 9 subsection 5. Why? Sir, e-commerce operator generally Zomato, Swiggy or Amazon, Flipkart, the payment is routed through e-commerce operator, na? So he collects the payments from customer. While giving the payments to the supplier, he will collect this, he will deduct this TCS part and will pay to the government. Okay, so but this e-commerce operator has to act as an independent person. He shouldn't be acting as an agent. Okay, irrespective of value, sir, there is no value limit given here. Okay, on the TCS needs to be deducted. 0.5 plus 0.5 intra, 1% in the case of interstate. Okay, next, TCS needs to be deposited within 10 days from closure of that month, mean 10th of the following month. GSTR rate has to be, okay, when TCS is applicable, you need to file which return, ma? GSTR rate by 10th. TCS credits, if any, I mean to the supplier, the TCS which I deducted as e-commerce operator will be reflecting to him in his, where, sir? In his cash ledger. Okay, sir, next, I already filed GSTR rate. In that GSTR rate, if I filed any omission or mistake, and such discovery is other than in the process of scrutiny, audit or investigation, not at that time, I myself identified there is some mistake in GSTR rate, then such can be rectified by 30th November of following financial year or date of filing of annual return. Sir, this is already discussed. ITC time limit only. The same thing here also came. Next, what they are saying, sir? The details which the e-commerce operator file in GSTR rate, na, which will be matched with the GSTR one of supplier. Sir, I said like that guy through Amazon, he supplied 45 lakhs, I mentioned. Whereas in his GSTR one, he is showing only 30 lakhs. I am showing how much here? 45 lakhs. Na? That means it will be matched with what? GSTR one. So that supplier, they will be sending a notice. Your e-commerce operator mentioned that he made sales for you through his platform 45 lakhs. But you, idiot, reporting only 10 lakh, 30 lakh rupees in your GSTR one. So that mismatch will be communicated to them. Okay, and if any shortfall of tax, that particular supplier has to make the tax payment. Okay, sir, if at all the tax payment is not paid, I mean TCS collected is not deposited within 10 days, then 18% per annum interest is applicable, sir. Okay, sir, next, the one more thing, sir. The deputy commissioner, who, sir, deputy commissioner can issue a notice to e-commerce operator. Why he will be issuing notice? Issuing notice to furnish details of goods and services supplied by that e-commerce operator. You, Amazon. So, deputy commissioner will send a notice to Amazon asking Amazon to, okay, give a detailed report of the goods and services supplied through you. Give a detailed notice, I mean, give detailed report of it. And what are the goods lying with you in your godowns or warehouses? All those details I want. So that notice can be given by deputy commissioner. So when this notice is given, then e-commerce operator has to reply to this notice to deputy commissioner within 15 days. Sorry, e-commerce operator not replied, then there is a penalty up to 25,000 is also applicable. So this is the concept of what ma TDS and TCS na. Very simple, no? Okay, just to open the book and solve 3-4 questions only, small questions, solve them, definitely you will get 5 marks. Okay, you can trust me, no? Okay. Hello all, now we are into the topic called assessment and audit. Okay, so assessment audit ma very easy chapter only again. So here and there, like, it's not like I cannot say like it's a compulsory question, but majority of the cases, like, there is a question from assessment and audit chapter as well. So what is called assessment? Assessment means determination of tax liability. Sir, here assessment and audit chapters are there. Okay, so when we compare both assessment and audit, at least from assessment or audit, okay, there is a question. So we can say like at least 6 marks we can expect either from assessment or from audit, sir. Okay, come in, even including audit chapter. Okay, we'll be discussing now together assessment and audit. Assessment means what? Determination of tax liability. Arriving a person's tax liability, how much is the tax, how much is the interest, how much is the penalty, how much is the fee. That process of arriving tax liability is nothing but called as what, ma? Assessment. Okay, now we are starting with section 59, self-assessment. What this provision says, sir, every registered person shall himself assess the tax payable. On his own, he should assess his tax payable. Sir, what is meant by assess? Assess means calculating, determining. Okay, on his own, he has to assess the tax payable for a tax period. What is tax period, sir? Tax period means a month or quarter based on the frequency you will be filing the return. Okay, which is self-assessment. Then only he can file return under 39. What return will be filed by under return 39 ma? 3B. Okay, so what is self-assessment? Every registered person shall determine, okay, shall himself assess. Okay, himself assessing means what? Determining the tax payable, by him. Okay, tax payable by him for a tax period. So for a tax period, let's say for Jan month, what is the tax payable he will be arriving? That process is called as self-assessment. Only after that he can file a return. Next concept, sir, section 60. What is section 60, sir? Section 60 is about provisional assessment. 60 is about what? Provisional assessment. What the section 60 says here, sir? Provisional assessment means arriving the duty or calculating the duty on provisional basis. It's not final, provisional. But when we can go for this provisional calculation, determining the tax liability when tax payable person is unable. Okay, what? He is unable. Unable means what, sir? He cannot do that. What he cannot do? He is unable to determine value of taxable goods, value, or either rate of tax. So he is unable to determine two things, sir. One is value. How we will determine value, sir? Either by section 15 or by using rules, no? That process he applied and he is unable to determine his value. Then, or he couldn't find out rate of tax. Why can't he find out rate of tax? He might have checked in the classification, but this is a new entry and he has confusion regarding under which particular HSN code this item or good will fit. Okay, if he has such situation, he is unable to determine value or rate, then he will go for provisional assessment. So how it goes, see here. Taxable person is there na. First, he will applies to the proper officer in GST AS7001. He applies to the proper officer to carry out provisional assessment along with stating the reasons, and he will even attach the documents required. Okay, so not just filing the AS7001 and asking him to go do provisional assessment. For provisional assessment, which reason either you cannot determine value or unable to determine or unable to determine rate or both, that reason you need to specify along with that documents. Even he also has to calculate the provisional duty, no, provisional tax, no. For that he needs certain documents. That documents has to be attached. Then PO may ask for additional information. This is not like mandatory to ask for additional information. If required, PO ask additional information by way of ASMT02. And to that, okay, to that what the taxable person has to do, taxable person has to give a reply, and the reply will be given in what, ASMT03. Okay, once the reply is given, not more than 90 days from date of application, that means within 90 days from date of application, proper officer has to issue provisional assessment order. How this provisional assessment order is issued? By way of ASMT04, he will issue the provisional assessment order. This order should state value or rate of tax. A question has been asked to know why the taxpayer applied for provisional assessment, he is unable to determine value or tax. So through provisional order, that provisional value or tax rate has to be suggested. Okay, should be mentioned in the ASMT04. And a bond needs to be exercised. Bond has to be given number, because it is not the final one, it's only provisional one na. So when compared to the final one, there might be difference. Okay, the provisional tax determined is less than that might be of the final assessment order, no. So to safeguard to secure their tax dues, the government may ask you to provide you a bond. So when bond needs to be executed, the bond value also has to be mentioned with, and the bond needs to be executed through ASMT05. Okay, we'll make an application, he'll ask for additional information, we'll provide that, he'll give provisional assessment order stating the value or rate of tax along with the bond value to be exercised. Okay, then the final assessment order has to be passed within 6 months from date of communication of provisional assessment order. Okay, sir, now once the provisional assessment order given means, then he cannot relax. Okay, he need to give a final assessment order within 6 months from the date of giving the provisional order. But however, this can be extended, this time period of 6 months can be extended if he is AC or DC for further 6 months. If he is commissioner, overall up to 4 years, that means initial 6 months, then ACDC 6 months. Other than that, this 1 year he can further extend for another 3 years. Okay, if tax under provisional order, okay, tax under provisional assessment order compared with the final assessment order is lower, that means provisionally you paid 5 lakhs, but final order says like 7 lakhs has to be paid. Shortfall of 2 lakhs is there na. Shortfall difference 2 lakhs has to be paid along with 18% interest from the due date when it needs to be paid. So that means, let's say see, sir, in Jan 2023 there is an invoice for 25 lakhs. On this, rate is not known. Invoice for 25 lakhs, rate is not known. Provisionally it is assessed at 25 lakhs at 12%. Okay, Jan 23 means actually the due date for payment of tax regarding this is what, February 20th na. Now final order has been given in December 2023. Okay, now on 16th December 2023 you are paying on 20th December, let's say. So actually it has to be paid by when, 20th February na. But final order says like the tax rate has 18%. That means shortfall only, no, 6% you paid less, no. So this 25 lakhs into shortfall, how much, sir? Into 6%. Interest needs to be calculated from February 20th. Actual date of due date to actual date of payment. Due date is February 20th. Actual date is 20th December. Till this point of time, you need to calculate interest at 18%. Okay. Sir, next. Where if it is higher, okay, provisionally you paid higher, then difference is refundable and interest will be paid by the GST department, I mean government, at a rate of 6%, where refund is not given within 6 months, within 60 days from date of application. Okay. Next concept, sir, scrutiny of returns. Okay, scrutiny of returns under section 61. Sir, you need to understand the flow, sir. Here, a registered person filed return. Okay, only when return is filed it can be selected for scrutiny. If return itself is not filed, what he will be scrutinizing? Okay, he will selected for scrutiny. Scrutiny means nothing but here itself it will be explained. Will be taken selected for scrutiny by proper officer. For what he will take as scrutiny? To verify its correctness. To verify its correctness, whether the values you reported, tax rates you mentioned, ITC you availed, ITC you adjusted, okay, these are correct with respect to information available with him. Okay, with the information available with him, he'll check whether whether the return you submitted is correct or not. If any discrepancy is found, that means he found out like there is some differences, some tax short paid or erroneous refunds are there, then he will issue notice seeking explanation within 30 days from service of notice. Okay, so whenever I found assume me as a proper officer, I found a discrepancy, then what I will do, I'll give you a notice. You're a taxpayer, I'll give notice to you and I'll ask you to give a reply, okay, an explanation within 30 days from the service of notice. Okay, if at all possible to me, proper officer, he has to even quantify the tax, interest and penalty also. What is the tax to be paid, what is the interest to be paid, and what is the penalty, everything also has to be mentioned in that particular notice. Then if once the notice is given, okay sir, you will understand the order, okay, this sequence. Then once the notice is got, then what the registered person can do, sir? Either he can accept discrepancy, sir, he can accept such discrepancy and pay tax, interest, penalty. That's it. Case closed. If he is not accepting, then he will furnish what? Explanation. Then the explanation to the proper officer is either acceptable, then no action. Sir, proper officer has some doubts or reasons. So he communicated by way of notice. You given an explanation to the notice, proper officer convinced, that's it, the case, job done now. So no action. Whereas if it is the explanation given by the taxpayer is not acceptable to proper officer, in such case what to do, sir? The following 4 recourses are available. Okay, this is an important point, sir. When the explanation given by a taxpayer is not convincing to the proper officer, what are the recourses available to him means what? He can go for audit. Audit under section 65. Okay, audit under section 65 is a departmental audit. Audit under section 65 is what? Departmental audit. That means department people go and do audit, or else they can go for special audit. Special audit means, okay, a chartered accountant or cost accountant will carry out this audit, who is notified by commission, nominated by commissioner. Or they can go for inspection, search or seizure proceedings. They can go for what, ma? Inspection, search or seizure proceedings. If that is also not, then they can go for 73 or 74 proceedings. What is 73, 74, sir? 73, 74 are nothing but demand and recovery proceedings. Demand and recovery proceedings. So what are the recourses available, sir? Go for audit under 65, department audit. Go for audit under section 66, special audit, by a chartered accountant or cost accountant nominated by commissioner. Third one, sir, go for inspection, search, seizure. And the fourth one is like you can go for demand and recovery proceedings. Okay, this is about what, sir? Scrutiny of returns. Next section 62, sir. Assessment of non-filers of return. Sir, self-assessment, provisional assessment, scrutiny. When scrutiny will be made? When a return is filed. If return itself is not filed, then they'll not verify. Okay, they'll just leave. Then nobody will file returns. No. Then in such case, what can happen means, notwithstanding to the provisions contained in demand and recovery. If at all you are initiating 73, 74 provisions, then fine, go with that. Other than that, if you are not going with 73, 74, where a registered person fails to file return under 39 or files a final return under 45. Sir, return under 39 means what, sir? GSTR 3B, either monthly or quarterly, it has to be filed, but it is not filed, or a final return has to be filed, which is also not filed, plus, okay, that means, and a notice under section 46 has been issued. What is this notice, sir? When a person default in filing returns, within 5 days from the due date, a notice will be issued by the department or the portal to the taxpayer to file the return within 15 days. A notice under section 46 is issued to furnish return within 45 days. Sorry, not 45 days, sir. Here it is within 15 days, not 45. This is within 15 days. Okay. Within 15 days. And the taxable person fails to file even after such notice. You are a taxable person, and what happens, sir? You even fail to file return even after such notice. Okay. What happens, sir? Initially you didn't file 3B or didn't file final return. Plus department side, they reminded you and issued a notice also under 46. They at least now file the return within 15 days. But even after that notice also you ignored. Okay, then the proper officer can initiate best judgment assessment. Proper officer can initiate best judgment and issue a best judgment assessment order. Sir, how he will carry out best judgment assessment? With the, by taking the information available with him. Sir, what information he might have? GSTR 1 data, 2A data, e-way bills data, and any information obtained during the inspection sets. Okay, during those process, if any information is obtained, considering all that information, he'll be passing a best judgment order in form assessment 03. Okay, in assessment ASMT 13 will be giving you the assessment order. Sir, what is the time limit for passing the assessment order by proper officer? Means the time limit for passing assessment order is 5 years. 5 years from when, sir? From his birthday, na? From date of filing of return, from date of invoice, from when means to which that particular tax due is related, or to which the particular return is not filed. For the annual return due date for such financial year till 5 years. Let's say, sir, it is relevant to you not filed return of for Jan 2023. That means which financial year, sir? 22-23. What is the due date for financial year 22-23 annual return, sir? 31st December 2023. From here 5 years means 31st December 2028 is the last date for passing the assessment order in this case. Okay. Next one, sir. Proper officer will withdraw assessment order, sir. He can withdraw what? Assessment order. It can be even called as deemed withdrawal of assessment order. When, sir? When an assessment order is issued to the taxpayer, when an assessment order is issued to the taxpayer, and that after, sir, return not filed within due days, notice given, still sleeping, assessment carried out, still sleeping, assessment order given, that time he woke up. Okay, that time he woke up and then realized like, oh no, this best judgment assessment cannot be carried out to me because here the liability is more or the tax payable is more. Then he woke up and filed the return within 30 days. Then filed the return within how many days, ma? Files the valid return within 30 days. Files valid return within 30 days from service of assessment order and paid interest or late fee. Then the assessment order which is passed by proper officer will be considered as withdrawn. Okay. Sir, the process of reminding the taxpayer regarding filing of returns is given. Sir, if suppose this is the due date of return, okay, this is the due date of return, prior to 3 days. Before 3 days itself, the message will be sent by the portal to the registered mobile number 3 days before itself. Okay, then once the due date is over, a mail is sent to the registered person saying like, Ray, the due date is already went, you are sleeping, woke up and filed returns, or like that they'll send a mail. Then even after that mail also he didn't responded, then within 5 days from due date they will issue a notice under section 46 to file return within 15 days. They'll issue a notice under section, which section of 46 to file return within 15 days. Even after such notice also return not filed, then we'll go for best judgment assessment. That's only now we discussed. Now section 63 amma. 63 is for assessment of unregistered persons. Whom? Unregistered persons. Sir, unregistered person, why sir tax liability not there na? Not for everyone ma. Okay, again here also section starting with notwithstanding 73 74. If contrary is said in 73 74, we are not disturbing that. Okay, we are just following this project. If you want to go for 73 74, then go for that. Okay, taxable person, he is a taxable person liable to register but fails to register. That means he has liability but escaping, not registering, and whose registration got cancelled but he is still liable to pay tax. Sir, his registration cancelled, sir, but he has liability, he needs to pay tax. Registered, not registered, liability is there. Registered, registration cancelled, but he has the liability to pay tax. In that cases, the proper officer proceed to assess under best judgment assessment. Okay, what recourse will proper officer take, sir? Best judgment assessment. Okay, before assessment, okay, before assessment, a notice to taxpayer and summary will be given. This thing happened to you in assessment 14, and a taxpayer will be given 50 days time to reply. At least will you be registering and paying the tax due, or else we need to continue with best judgment assessment. Asking like that, he'll be giving what? He'll be giving a notice. Okay, thereafter, even that notice also not replied, then thereafter order passed, okay, which will be uploaded in electronically by way of DRC 0C. But sir, if any order which is adverse to the taxpayer, I mean the person, means an opportunity of OBH has to be given. OBH means what, sir? Opportunity of being heard is called as OBH. Okay, you need to listen to that person, why he didn't register or why he cannot pay tax. Such opportunity of being heard has to be given. Even after that, even after that the taxpayer didn't comply, then you will be giving the assessment order. Sir, what is the time limit for this order, sir? Same, sir. Due date of filing of annual return to which the non-payment related, from there within 5 years. The last one under the assessment, sir, section 64, summary assessment. Sir, when can summary assessment be initiated? Means when the proper officer has evidence. Proper officer has what? Evidence that taxpayer has incurred a liability to pay tax. Proper officer has evidence. That means he might have got some document from customs authorities or from the recipient books or from your supplier books or from some data. He got an evidence that you are escaping tax liability and you have the liability to pay tax, and he has sufficient grounds to believe that what? Delay in assessment may adversely affect the interest of revenue. That means if still the proper officer waits and holds for some period of time, means this guy may run away, or he might close his business and sell his overall stock, and he'll say like nothing is there with me. It's like that he might say. So if the proper officer has evidence that there is tax liability and not paid, and has sufficient grounds to believe that delay in assessment may adversely affect the interest of revenue, then he will initiate summary assessment only after taking the approval of or permission of additional commissioner or joint commissioner. Okay, so a proper officer cannot initiate a summary assessment on his own. He need to take permission of whom? Additional commissioner or joint commissioner. Okay, then he will pass a summary assessment order in assessment 16. Okay, and then this assessment order can be withdrawn anytime. This assessment order can be withdrawn by AC or JC. By whom? AC or JC. AC means assistant commissioner, JC or joint commissioner. When he can, sorry, AC means additional commissioner in sir here. Additional commissioner can be withdrawn by additional commissioner or joint commissioner either on his own motion or because of an application filed by the taxpayer. An application is filed by taxpayer within 30 days stating that need not to do summary assessment, he will be paying the taxes or something, he given a written declaration or something, then the summary assessment order can be withdrawn. Or on his own motion, if they thinks like instead of going for summary assessment, it is better to go with 73-74 demand and recovery proceedings. In such case also they can withdraw summary assessment. So if you see here, sir, there are total self-assessment, provisional assessment, okay, scrutiny of returns, best judgment assessment for non-filers, best judgment assessment for unregistered, and the last one is summary return. Self-assessment means calculating a person's tax liability on his own. Okay, provisional, when you can go for provisional, value or not determinable, unable to determine value or rate of tax, then you will go for provisional assessment. Third one, sir, scrutiny of returns. When a return is filed, then to check, to verify the correctness of details provided in the return, scrutiny will be taken. Third one. Fourth one, sir, best judgment assessment for non-filer of returns. Just because you didn't file return, they will not go for best judgment assessment. You didn't file 3B or final return, plus they issued notice under 46 and given 50 days time to file return. Still you didn't file, then they only go for best judgment assessment. Sir, under best judgment assessment for unregistered person, section 63, what does it saying, sir? It's saying like a person has liability to register but not yet registered, or else a person who is whose registration is cancelled but they having liability to pay tax. Such person tax liability can be arrived by way of best judgment assessment. Last one, summary assessment. When you can go for summary assessments, are proper officers has reason to believe that there is tax liability to the taxpayer. Okay, there is evidence that there is tax liability to a taxable person, and there is sufficient grounds to believe that delay in causing assessment, delay in assessment may adversely affect the interest of revenues. In such case, he can initiate summary assessment. Okay, so we discussed this assessment chapter, sir. Now we can move to the topic audit. Sir, assessment, more than assessment, audit is much more important, sir. The questions from audit are much more frequent. I checked, sir. Actually, I said in the introduction, now again repeating, our institute is not following a particular trend in the IDT paper. Okay, I cannot surely say like from this chapter there is a question, there is a question. Okay, we are expecting in this way. Most probably there are questions from these chapters. That's why I am targeting these chapters. Okay, 65, audit by tax authorities. Okay, audit by tax authorities. Who can audit, sir? Commissioner or any officer authorized by commissioner. Commissioner or any officer authorized by commissioner will carry out audit for a financial year, part of a financial year, or even for multiple financial year. Okay, for 6 months they can carry audit, for a whole year they can carry audit, for 2-3 years also they can carry audit of whom? A registered person, where audit can be carried out at his place of business or office. Okay, commissioner or officer appointed by commissioner can carry out audit of a financial year, part financial year, or multiple financial years of a registered person's data, returns and other information at his place of business or office. Okay, when the audit will be considered as commenced, audit will be considered as commenced when the records and accounts asked by the proper officer are made available by the taxpayer. The records and accounts made available or the actual institution of audit at place of business. Authorities came to my office today. Then today or the day when the records are made available. The officers came today, but I didn't provide any books. Whatever the book they asked, I said like not there, not there, not there. Okay, I made them available only on 5 days afterwards. Then what is the date of commencement of audit? that whichever is later among these two, whichever is later, either the date of making the records available or date of actual institution of audit at place of business, whichever is later. Sir, what is the time limit for completion of audit, sir? Audit should be completed within 3 months from commencement. However, it can be extended by commissioner for another 6 months. For another 6 months. Okay. So now, proper officer and his team, what they will do in audit? They will verify books of accounts, returns, statements. Okay. They'll verify books of accounts, returns, statements, everything. And they will check the correctness of turnover, exemptions claimed, deductions claimed, rate of tax used, and if any ITC availed or utilized. Okay. They'll check the correctness of those turnover, exemptions, deductions claimed, ITC availed, utilized, or rate of tax, and record the observations. Record the observations. So after that, sir, proper officer will, okay, to registered person, okay, what has to be done by the registered person to proper officer? What are the duties of registered person when carrying out an audit? Means he should facilitate what? Verification. Sir, if he says like everything is logged, then verification cannot be done. Na? So he should facilitate verification. Okay, he should provide information. Whatever is the data returns asked, that has to be provided. And render assistance. Okay, they should help him. If at all there is a software is being used to generate reports, to download reports, if they ask for any help, the registered person needs to help them. Okay, so then proper officer informs discrepancies to registered person. Registered person will give reply. Then the proper officer finalizes the findings after considering the reply. Okay, the reply given by applicant registered person will be considered, and considering that he will give a final audit order. If audit results, the final audit results, tax not paid or tax short paid, or if there is any erroneous refund, then they can initiate 7374 demand and recovery proceedings. Sir, once again to revise, who can do audit here, sir? Commissioner or any other officer appointed by commissioner. Okay, audit of whom, sir? Registered person, where at his place of business or office. Audit for which period? Any part of financial year or a financial year or multiple financial years. Okay, what they will do? Okay, what is the date of commencement of audit, sir? Date of making available the books and records, or date of actual institution of audit in the place of business of registered person, whichever is later. What is the time limit for completion of audit, sir? 3 months, but it can be extended for another 6 months by commissioner. Okay, what they will do in audit? The proper officer and his team will verify the correctness of books of accounts, returns, statements, and the completeness of turnover, correctness of turnover, exemptions, deductions, rate of tax, ITC availed and ITC utilized, and they'll record observations. Okay, and while doing audit, the registered person should help the proper officer. These are his duties. What? Facilitating the verification, providing the information asked, rendering, okay, assistance. These things has to be carried out. Okay, then the proper officer, if any discrepancies are there, he will communicate to registered person, he will give a reply. With this reply, considering that reply, okay, proper officer will issue a audit report. Okay, if the audit results ultimately communicates like there is tax not paid, short paid, or erroneous refund, then the option is to go for section 73 or 74 demand and recovery proceedings. So the last concept here, sir, what? Special audit. What ma? Special audit. What is special audit, sir? An officer not below AC. Not below AC means here, sir, assistant commissioner only. Not below the rank of assistant commissioner. He is carrying what ma? Scrutiny, enquiry, or investigation of a registered person. He is carrying scrutiny. He took return and verifying the correctness, that thing he is doing. Or he is carrying out an enquiry or investigation. In that process, okay, he identified like regarding to the nature of business, complexity of transactions, and interest of revenue. 3 things, sir. Nature of business, complexity of transactions, and interest of revenue. Considering all these 3, if he is of opinion, okay, if he is of opinion, when, sir? regarding to the three, sir, nature, complexity, and interest of revenue. If he is of opinion that value not declared correctly or ITC availed is not within the time limits. What? Value not declared correctly or ITC is not availed within the permissible limits. Then what can do, sir? Then what happens means with approval of commissioner, this officer, sir, this is the first sequencer, then this is the second sequence. Okay, with approval of commissioner, he will issue directions to the registered person. When he will issue directions, when the proper officer, I mean assistant commissioner, is okay based on such inquiry inspection, he regarding to the nature, complexity, and interest of revenue come to a conclusion that the value is not stated correctly or ITC availed is within not within the limits, then he may ask the registered person to get his books of accounts audited, but only with the prior approval of commissioner. To get his books of accounts records audited by a chartered accountant or cost accountant, whoever is nominated by commissioner. Sir, to this audit, this chartered accountant, cost accountant, the fees also will be paid by whom, sir? Decided by whom, sir? Commissioner only. So now this chartered accountant, cost accountant, fees also paid by commissioner only. Time limit, sir. Within 90 days, the audit has to be completed. An additional period of another 90 days can be given by assistant commissioner on application made by the chartered or cost accountant. Okay. Okay, when any audit findings are there, before using it adversely to the taxpayer in any proceedings, registered person shall give an OBH. Okay, there should be given an opportunity to him to explain, okay, why that happened or what such thing happened. Such explanation has to be taken on material gathered in audit. Okay, on conclusion of audit findings, that will be informed to registered person. Okay, if the special audit results in deduction of tax not paid, short paid, or erroneous refund, then 73 and 74 proceedings can be initiated. Okay, sir, 74. Okay, special audits are 64 and 65. Okay, tax authorities is 65, special audit is 66, sir. Okay, 65 you can see commissioner or officer or authorized by custom. 66 chartered accountant or cost accountant. But can he start directly? No. AC, not below the rank of AC, will give directions to registered person to get his books of accounts audited by a chartered accountant or cost accountant. When during the course of such okay scrutiny, inspection, investigation, or inquiry, he has okay he came to that like based on the nature of business, complexity, and interest of revenue, he considers like or he came to opinion that value is not determined properly or ITC is availed more than the permissible limits or more than the limits actually, then he may issue directions to the registered person with the prior approval of whom? Commissioner, to get the books of accounts audited from a chartered accountant or cost accountant who is notified by a commissioner. Audit has to be carried out within 30 days. Another extension of 30 days will be granted. Okay, sorry, 90 days. Another extension of another 90 days. Before okay audit finalization, an opportunity of being heard has to be given to the registered person. Okay, if at all the audit results in tax short paid okay or not paid, erroneous refund, 73 74 can be initiated. Okay, this is about the topic what ma assessment and audit. We are starting now with FTP ma, foreign trade policy. Sir, without discussing customs, why you are going into FTP means, if you ask me, that means, sir, I am having already customs marathon in our channel, but that will be in Telugu. If you are a Telugu student, then you can follow that. But for other language students and particularly for this attempt, what I am saying means, sir, more than customs, FTP is more focused area in our exams. Because, sir, our syllabus is 30 marks, na sir? 30 marks. Out of this 30, including choice, it will be around 45 marks. It will be around 45 marks. So, not even 45, sir, because 6 marks MCQs out of 30 marks. Then from the balance 24 marks, they are giving 3 questions now. That means 36 plus 6, okay, total 42 marks they are asking from customs. Out of this 42 marks, sir, around 17 marks is from FTP only, whereas the rest 25 marks is only from customs. Sir, there are cases where even here it's becoming 22, okay, here it's becoming 17 also. So it is content wise also, it is better to discuss what? FTP. That's why I'm revising FTP. Usually student will have a notion like FTP is little tough. The terminology is little tough. Yes, terminology to understand it's little like it's those words are not familiar to us because it's not there even in inter level. That is the only reason. Otherwise, FTP you can easily score. Okay, you can trust me. Mark my words. Okay, follow this 1 hour or 1.5 hour part. Okay, definitely you will get good marks in FTP as well, ma. Okay, sir, FTP actually the whole FTP is divided into two parts. One is FTP intro part and the FTP schemes part. Sir, from this intro part of FTP only they are asking around 7 to 8 marks, sir. And from schemes again they are asking another 10 to 12 marks, sir. Okay, so schemes also we will discuss, sir. But we'll discuss this intro, very easy part, sir. This is like not much complicated also. Okay, so FTP, sir. When it comes to FTP, introduction part, FTP. So FTP, ma'am. Foreign, sir, I'm not writing short notes, sir, because it's take more time. Okay, to give it you faster, I'm doing it in the material itself. But here also, I condensed it very much, ma'am. You can find my material in Telegram group. Foreign trade policy is the 2015-20. And one more point, ma, this foreign trade policy is for this policy, this is the last attempt. In the coming attempts, like foreign trade policy 20 to 27, the another 5 years policy has been notified by central government, which is applicable from June attempt. So, which is applicable from December attempt. So, for this attempt only, this FTP is applicable. So, foreign trade policy 15-20 is notified by whom? Central government. Okay. Central government has the power to amend the rules, and central government is only the person who which will make provisions or facilitating the provisions regarding the trade. And here the goods for export and import are classified into three types: prohibition, restriction, okay, free trade, like that. So that classification is also done by whom? Central government. And central government is authorized to appoint DGFT. Sir, these full forms are also important, sir. MCQs are being asked. DGFT, Director General of Foreign Trade, for implementation of EXIM policy. Sir, FTP, you said why again EXIM policy? The earlier name of FTP is EXIM. Okay, EXIM policy, export and import policy. So FTP, okay, currently the policy is what? 15 to 20. It is applicable till 31st March 2023. Central government has brought the policy, and it has the power to amend the rules to make provisions regarding facilitating, to prohibit, restrict and regulate exports, and authorize to appoint DGFT. DGFT will notify handbook on procedures, nothing but like rules, sir. Okay, procedures will be notified by whom? DGFT. The various Ayat Niryat forms. Here ANF forms, sir. ANF means Ayat Niryat forms. So various forms, procedures, all those will be notified by whom, sir? DGFT. Objective, sir. For every foreign trade policy, the government will come up with a set of objectives and will even suggest the measures what they are bringing to achieve those objectives. Sir, here objective is generation of employment and increasing value addition, creating employment in India, creating value addition in India, and to make in and to to take it further, the make in India vision. Next, ease of doing and trade facilitation. Sir, ease of doing, the import and export procedure should be made much more easy. That is about in ease of doing. Okay. Next, encouraging e-commerce exports, because from 15 the e-commerce has a rapid growth. So that's why that one. And making Indian exports more competitive. Special efforts to resolve quality complaints and trade disputes. Sir, whenever the foreign ministries visit other countries, they'll try to enter treaties to how to resolve with these kind of disputes between their country and our country trades. Okay, so those are also objectives. And steps to encourage export through SCZ, EOU, STPs, EHTPs and
BTP. So what are the objectives, sir? Creation of employment, value addition to taking further Make in India vision. Ease of doing business by reducing the import and export procedures, encouraging e-commerce exports, taking further the making Indian exports more competitive, that means cheaper. Efforts to resolve quality complaints and encourage manufacture and export by SCZ, EOU, STP and EHTP. What are the measures taken, sir? The number of documents required for export import has been reduced to 3. Sir, for what it is? Ease of doing. Okay, instead of filing many documents, how many is there now? It has been reduced to 3. Sir, I even say what are those 3? Okay, what are those 3 documents, ma? Means bill of lading or airway bill, lorry bill or postal bill. Sir, bill of lading by way of ship, airway bill by way of aircraft, lorry bill when the goods are being exported in truck, postal bill, okay, when the goods are being posted. So any one document out of this based on the mode of transport, plus commercial invoice come packing list, invoice come packing list, it consists of the goods and their packing details as well. Shipping bill, okay, shipping bill or bill of export. So these 3 documents are enough for export. Even for import also, bill of lading, airway bill, lorry bill, commercial invoice and come packing list, bill of entry. So 3 documents are enough. What are those 3 documents, sir? Again I am repeating, what are those 3 documents, sir? Bill of lading or airway bill, next invoice come packing list or bill of entry in case of imports, whereas in case of exports, instead of bill of entry it will be shipping bill. Next, one more thing, sir, for making ease of doing business, 24/7 customs clearance, sir. Previously the customs officers used to work only in the working hours, but now 24/7 they work, but for the other than non-working hours they'll charge certain overtime charges. Next, single window scheme, sir. You need not to run behind that counter, this counter for getting your import documents to be verified or assessed. Through one place you submit your documents, everything gets done. Single window. Prior online facility, sir. Sir, previously we cannot file bill of entry before the arrival of the vessel. Once only the vessel arrives, then only you can file bill of entry, so which takes further more time to get your goods. Okay, so but now what is happening, sir? You can file bill of entry earlier than the arrival of vessel itself, so the whole assessment will get done before the vessel arrival. Okay, once the goods are unloaded, the just department person will come and check, and then that's it, done, you can take your goods. Okay, DGFT under the EDI initiative, sir. EDI means electronic data interchange, the website of customs, sir. Electronic data interchange initiatives provide the facility of online filing of application to obtain IEC. IEC means, sir, importer and exporter code. It will get detailed next. Features of FTP, sir. Exports and imports are generally free unless specifically regulated. Sir, free means no consideration, not like that. Free means you need not to take any approvals for making imports and exports generally. That means they are free. Next, export of imports or goods are classified into 3 types, sir. Free, restricted, prohibited. Free means, sir, no authorization, no permission required. Restricted means these goods can be imported, these goods can be exported only with a proper approval, permission of officer, I mean designated officer. That approval or permission is called as here authorization. Sir, various places in FTP will be referring authorization. Authorization is nothing but a permission or approval. So restricted goods also can be exported or imported only with an authorization. Prohibited means these cannot be imported or exported, sir, unless if it is by some special class of people like government. That in that cases, prohibited goods can never be imported or exported. Sir, next, to promote exports, okay, various schemes have been brought, sir, to promote exports, because exporters will expand our business capabilities, sir. Not only in India, they are taking our business and our products outside India. So to encourage those exporters, various schemes are there, sir, which we'll be discussing in the second part of FTP. Okay, but a brief of those schemes, sir, names only. Okay, advance authorization, duty free import authorization, status holder, remission of duty and taxes, EPCG scheme, entitlements to units of SEZ, EOU, etc. So various kind of schemes are there, sir. Next, administration of FTP. Okay, FTP, a policy is designed, but who will be looking into the administration, sir? Sir, FTP alone is not a policy. FTP, through FTP, they want to simplify the trade and the to make it easy.
the import and export procedures and to encourage exporters. Sir, for this they cannot set up a department separately. So FTP will work along with the customs people, since goods and services are involved along with the GST department, and since foreign currency is involved along with RBI. So FTP, that means DGFT, cannot work alone, because DGFT is just working by taking the help of customs, GST, and taking the insights of RBI. So only DGFT cannot run the foreign trade policy. It needs help. Okay. FTP is formulated, controlled, and supervised by the Office of Director of DGFT. Okay. In attached office to which industries are Ministry of Commerce and Industry. So this is also important, sir. Can ask an MCQ. It's not related to Ministry of Finance. GST, income tax, okay, customs, these are attached to Ministry of Finance because they are generating revenue. But FTP is to Ministry of Commerce and Industry because it is to encourage, okay, not just to generate revenue. FTP, okay. DGFT issues authorization for import and export. Authorization means what, sir? Permission. Grants IEC. What is IEC? Importer and exporter code. Sir, next, with respect to FTP, if any interpretational issue is there, then generally in law, I mean in GST or in income tax, what we do, will appeal that. Okay, there are appellate authorities, but in FTP, related to this policy, any interpretation conflict is there, the view given by DGFT is final. You cannot question that. How can you take that view? Okay, their interpretation is final. Next, CBSE is involved, sir. Why? Because GST is involved, no. Okay, and even customs are involved, no. CBSE comes under the Ministry of Finance, which will facilitate in implementing. Okay, only CBA, with CBSE help, FTP provisions can be implemented. Customs authority is responsible for clearance of import, export, and various examinations. Okay, only after proper export and examinations only they can give export promotions. No, I mean export promotion measures such as like those benefits. To provide that benefits, first export has to be done. Such clearances will be given by CBAC only. Okay, but while doing that, the procedures implemented or suggested by FTP will be followed by the customs authorities. Okay, GST authorities will also involve. RBI also works under Ministry of Finance. But why RBI is involved? Because foreign currency is there. Various regulations, whether they are collecting the export process within the time period or not. So all these will be checked through RBI. For that, insights will be given by RBI. So administration of FTP is not alone by DGFT. With the help of CBAC, RBI, only administration can be carried out in FTP. Components of FTP, sir. FTP, the whole policy. Handbook of procedures, sir. That means how detailedly, where to do, what to do, to whom you have to apply, what are the documents to be attached. All these will be there in the procedures. Next, appendices and ayat niryat forms. Various forms, their formats. Next, SION, sir. Standard input and output norms. Various times this question has been asked, sir. SION. Standard input and output norms. Sir, what is SION? SION is given by DGFT. Okay. CGN. Okay. DGFT, Director of, okay, FTP will suggest SION. What is SION, sir? To manufacture a particular product, what is the standard input? Let's say if 1 kg raw material is introduced, how much will be the finished good that will be produced from that raw material? Such, okay, based on industry averages, they'll find out that one. Okay, and they'll suggest certain norms. Those are called as standard input and output norms. So they are like, suppose they are into paint, okay, painting industry, paints industry. So what is the general input and what is the output? Okay, if they are into some other pharma industry, so what will be the input and output? So those norms are suggested. Standard input and output norms. Input, how much input is needed to produce an output, are mentioned in standard input and output norms. ITC HS coding. Sir, Indian trade classification of HSN, sir. This is nothing but HSN coding for goods. Schedule 1, Schedule 2. Import policies, export policies of what? Customs tariff act. No, that is only HSN. Indian trade classification, sir. ITC means not input tax credit. Indian trade classification of harmonized system. Okay. Next, sir. IEC. Sir, importer exporter code. Again, this is also various times asked, sir. It is mandatory if you are doing imports and exports to get an IEC code. It is a 10-digit code issued by DGFT. Okay, to get this IEC code, PAN must be their prerequisite. And one more simple thing is like, PAN itself will be allotted as your IEC. Okay, but you cannot say my PAN has IEC without any applying. First apply, give your PAN number. They will allot you IEC, which is nothing but your PAN number only. Okay, DGFT has decided to use PAN number as their IEC number. Okay, with the introduction of GST, even GSTN number will also be used. Previously, only with IEC everything is linked, but now with GSTN also it's getting linked, because even on imports, if any GST component is there, that can be taken as ITC, no? So that tracking, for the tracking, GSTN is provided. Credit flow and for refund, everything is being tracked. Sir, IEC, for IEC, if you want to apply for IEC, it should be done electronically through ANF 2A. Along with that, a digital photograph, copy of PAN and cancel check has to be submitted to get the IEC code. Okay. Export and import of restricted goods and services. Any good service export import of which is restricted. Restricted means what, sir? You can import or export them only with an authorization or permission. May be exported or imported only in accordance with an authorization. So under the trade classification, if a good is restricted, it doesn't mean it cannot be exported or imported. You can do that, but with what? With an authorization. In terms of a public notice, notification is issued in this regard. Every authorization, such authorization has to be given by way of a notice or notification. Okay, authorization is valid for prescribed period, sir. If at all I got a authorization to import or export and restricted good, means it's not lifetime, only for a period of validity, and such authorization shall include quantity, description, value. Actual user, only I can use that good, or any other, I can sell it to someone else also now. That also has to be mentioned. Export obligation. Since I imported this restricted good, is there any obligation kept on me to export any other good? Such obligation is there or not, you need to check. Minimum value addition. Suppose if it is a raw material I imported which is restricted. Okay, so if, do I need to any value addition and I need to export it back? Okay, such conditions. Minimum export and import price. What will be the price, for which price I need to buy and which price I need to sell? If any bank guarantee, letter of undertaking is required. So all these things has to be mentioned in the authorization. And authorization is not a right, sir. Okay, if at all DGFT denies your authorization, okay, we don't think like it's required for you, we cannot provide you authorization. If DGFT is said like that, you cannot go and appeal that, because it's not a right. If they feel like it is necessary for you, then they can grant you. If an authorization holder violates any conditions or fails to fill that export obligation, that means while giving authorization to me, I'm importing a raw material, sir. While giving authorization, they said like you need to do at least 2 times of this import as export, but I failed to do so, then I will be liable for action. Principles for imposing restrictions. Generally, what make them to insert these restrictions means because of protection of public morals, human, animal, plant life, or health protection, to preserve and to prevent patent trademark violations, and to national treasuries, artistic, historic, archaeological value, to protect them, and to trade off reasonable materials such as like nuclear, RDX. So these trading to prohibit, to protect them, restrictions will be provided. Okay, and even prevention of trafficking in arms and conversion of exhaustible natural resources. So to protect all this, generally authorizations will be issued. I mean, they are classified as restricted goods. Okay, we already discussed the documents for import and exports. Next, provisions related to import of goods. Sir, goods which are importable without any restriction may be imported by any person. Free goods classified as free, then no permission, any person can import it. However, if such goods are restricted, then actual user can only import unless exempted by DGFT. If in authorization it is clearly said like, oh, not only me, some other person also can import, then I can give the authorization to him, he can also import. But generally authorizations are given to a person specific. If I get an authorization, only I can import and only I can use. Import of second-hand capital goods should be allowed freely. Generally, import of second-hand goods are free. That means you need not to take any permission or authorization. However, second-hand personal computers, laptops, photocopier machines, air conditioners, diesel generation sets, okay, second-hand goods other than capital goods will only be allowed against authorization. Sir, what are these second-hand personal computers, laptops, photocopier machines, air conditioners, diesel generation sets, okay, and even second hand goods other than any other capital goods, these can be imported without authorization, cannot be imported without authorization. Okay, if any scrap waste generated during a manufacturing activity in SEZ, it can be cleared to DTA on payment of applicable customs duty. Sir, why duty has to be paid? Sir, SEZs are generally, if any supply is made to SEZ, will consider it as export. No. From SEZ also, if any supply is being brought to India, we'll consider it as something like import. And since the scrap is being sold in DTA, on that customs duty needs to be paid. Next, if any import of gifts, okay, if there are any gifts which are being imported, they are freely importable. In other cases, customs clearance permit from DGFT is required. And that means, sir, generally to import goods, you require customs clearance permit. But if at all it is a gift, then they are freely importable. Next, samples, sir. Sir, can I import samples? Okay, so I went to Australia and I checked there. I liked some raw material there, but I wanted to test it in my lab whether it is suitable or not. So I wanted to bring certain samples. Can I bring samples? Or even on samples also I need authorization or any payment of duties. Import of samples up to 3 lakhs can be made by all the exporters. That means further after processing I'll again do what? Export. Then in such case, I can import raw material up to 3 lakh rupees as sample without payment of duty. Okay, however, it requires authorization in case of vegetable seeds, bees, new drugs, samples of tea up to 2000 for consignment allowed without authorization. Sir, for this veg seeds, bees, drugs, because through them, sir, some other some through bees, some virus, this kind of can be brought into India. No, for that they want to regulate them. Okay, through beans, some plantations they might brought into India, which may adversely affect our atmosphere. To prevent them, they are making them as like what? Restricted drugs, samples of tea, bees, veg seeds. Okay, otherwise all the others can be brought without any restriction. But even these also up to 2000 there is no authorization. Passenger baggage, sir, even in this you might have already learned in the baggage chapter. Household effects and personals up to the limits can be imported. Samples are also freely importable up to 3 lakhs. Exporters coming from abroad are also allowed to import drawings, patterns, labels, price tags, bills, trimmer, embellishments required for export without an authorization as package. Okay, these things can be brought. Next, capital goods, components, parts, and accessories can be sent abroad for repairs, improvisation, testing, and can be re-imported without reauthorization unless they are restricted goods. So see this point. Capital goods, components, accessories can be sent abroad for repairs and even for improvisation or for testing, and can be re-imported without reauthorization unless they are restricted goods. Sir, first with an authorization, okay, I brought a freely tradable good into India, imported, but it needs some improvement. So I sent it back to their country and again I am bringing back. If at all there is no authorization required initially itself, now also not required, you can import that freely. But first place, if there is authorization, now even at the time of re-importation also you need to get authorization. Okay, even import on lease financing is also freely permitted. That means, okay, you are bringing a good from outside India, but that is also lease financing. That means you took it on lease, which is a financial lease. So you'll be paying installments. However, RBI should approve. If RBI approves, then lease financing is allowed. Goods already imported, shipped, arrived can also be cleared against an authorization issued subsequently. Sir, I am bringing a good along with me. I went to UK, I settled there for 3 years. Now I am coming back. So when I am coming back, I am carrying with me some goods, okay, to give as gifts or something. I am bringing those goods with along with me. When I came into the port, then the officer there denied me taking those goods along with me. Then he said like, this is a restricted good, you cannot take with you. So then what to do? I already purchased that good and I already bought to Indian airport. No. So what to do, sir? Then also in the port you can apply for authorization. Where goods are imported duty free, importer shall execute what? When imported goods are duty free, then bond, letter of undertaking or bank guarantee with customs before clearance, sir. Sir, when they will be giving you the free import, sir? Because you might be exporting. Okay, that will be processed and you will be again exporting. So in such cases, or you might be any holder of these schemes, advance authorization, EPCG or some schemes. In such case, they might be providing you free import. So since free import means you are not paying duty, why you are not paying duty? Because you said like you will export it, or you'll after processing you'll export it, but what is the certainty you will do that? For that, the government may ask you, I mean the government may ask you to, department may ask you to provide bond, letter of undertaking, bank guarantee. And next, sir, private, public and bonded warehouses are set up by DTA. Importer can warehouse the goods and can be clear in for home consumption without or with authorizations. Okay, this is the first part of FTPM. From this alone, there is 7 to 8 marks. Sir, need not to discuss extra anything. Okay, this content only being asked. Even you can check December 2022. I mean Jan 22 paper also. MCQs and 5 to 6 marks are there from this part only. Okay, half an hour only also, not even half an hour. Again revise one more time if needed. But this is very easy topic. You can easily score marks here. Now we are into the second part of FTP, foreign trade policy, sir. In second part of foreign trade policy, we are having various schemes. Even in the first part also, we have the introduction to the schemes, advance authorization, okay, duty free import authorization, okay, remission of duties and taxes scheme. Okay, next three schemes already done. Fourth one, EPCG scheme. Next about status holder. Okay, these schemes will be discussing in FTP. Okay, there is the concept of deemed exports here. First we'll understand this deemed exports, then we'll discuss about what? First we'll understand about the deemed exports, then we'll discuss about the other schemes, because deemed exports is there in the concept of FTP, separate concept, and even it is linked to other schemes also. So then if I am referring deemed exports, you will not understand now that point. Okay, so deemed export means, generally the definition of export means taking goods outside India. Taking goods outside India is called as exports as per the customs, the definition. Even as into the place of supply chapter also, it's the same definition. But deemed exports, when they will be called as deemed exports, these are not actually sent outside India, but these were sent to whom? Supplies to domestic entities only, who can import their requirements duty free or at reduced rates of duty. Sir, I'm a person, to me, the government given certain benefits, okay, because of my, okay, exports or something, okay, but government given me some benefit to import goods without duty payment or at a concessional payment, okay, or remission. That means after I'll get refund even though I pay initially. Okay, if I am such an importer, I'm an importer who can import goods without payment of duty, or even the pay can be claimed as refund, or at a low amount I can pay duty. Such importer I am. To me, if a domestic person is supplying goods, even though he is not sending outside India, but that domestic person is supplying goods to me, an importer who has the benefit of importing goods at a lower cost or lower rate or without duty, then the supply made by the domestic that person to me being an importer is called as what? Deemed export. Okay, sir, there are scenarios here. Okay, but this is one concept when we call it as deemed export. Okay, supplier, okay, supplying goods to whom, not to outside person, within the country only, but this guy who is receiving is what? Importer, and he has the benefit of importing goods without duty payment, or have the benefit of paying duty at a lower rate. So to such person, if any supplies are made, that is deemed export. Next, supplies to project or any purpose that involve competitive bidding, that also international competitive bidding. Sir, the government is accepting tenders from across the globe for construction or for one project. Me being a local one, even participated in the tender. So let's say for Mumbai port development, they are accepting tenders across the world. Okay, me being an Indian, okay, domestic person, I applied a tender for that one. Okay, I'm competing with whom? International people na. Okay, and finally the tender is awarded to me. Okay, so when the tender is awarded to me, I'm not exporting anything, but I outperformed the global participants, no, global suppliers. No. So since I outperformed them to encourage me, my supply is called as what? Deemed export. Next, supplies to infrastructures or projects of national importance. Here also competitive bidding might be there. These projects are of national importance. Okay, they'll bring heritage. Okay, to the national. Okay, country. Okay, such project. Okay, some dam or some road which is being constructed of national importance. Me being a person who got the tender. Okay, and again here also there may be international competitive bidding, then I outperformed all of them. No, so that's why even my supply will also be called as what? Deemed exports. Sir, here the logic is nothing but, sir, if at all me the domestic person is not available, then the recipient might have imported those goods. Since I'm available, okay, instead of importing, he is purchasing from me. So what I'm doing, because of my efforts, there are imports are getting down. Okay, so I'm manufacturing and I'm supplying a compatible good of that of import. So the persons are not importing, they are buying or taking my goods. So what I'm doing, I'm decreasing imports now. So always don't encourage only the exporter who is making export. Even encourage a person who is lowering our imports. Okay, a rupee saved is equal to rupee gained. That's why imports are, okay, me being a person not doing direct export, but I am helping in controlling the import. So my supplies are also called as what? Deemed export. So what are those, ma? Okay, these three categories are under that. Okay, supplies made to an advance authorization holder or DFIA holders. Sir, these holders are generally eligible to import without duty free. To them, if any supplies are made, even though they are domestically, that is also deemed export. Supplies to units located in EOU, STP, BTP, EHTP, export oriented units, software technological park, business technological park, electronic hardware and technological park. To them, if any supplies are made, they are also within the domestic country, I mean within India only, but still, okay, their imports are duty free, sir. Okay, again, if you are supplying to them, it can be called as what? Deemed export. Next, supply of capital goods against EPCG authorization. So to a person who is having EPCG authorization, he can import capital goods without duty. Okay, so now I am supplying capital good to that person. Okay, so I'm, instead of he importing duty free, purchasing from me na, that's why it is called as deemed export. Next, supply of projects are turnkey projects where international competitive bidding. Okay, any project are turnkey project, that means which is having lot of importance. Next, supply of goods to any project where imports are permitted at zero customs duty and involves international competitive bidding. Okay, there zero customs duty and involves international competitive bidding. That means generally in the tender allocation process, even an international person also can participate, but domestic person got the tender and he is supplying. Okay, he will be considered as domestic deemed export. Supply to any mega power projects against international competitive bidding. Same thing, mega power project. Next, national importance. Supply of goods to UN or international organization. UN bodies or international organizations, if you are supplying goods, okay, then you are not actually taking outside India, but still it will be considered as deemed exports. And even supply of goods to nuclear projects will also be considered as what? Deemed exports. Sir, okay, you do deemed exports. What are the benefits? Sir, a deemed exporter is also eligible for getting A. A means advance authorization. What is advance authorization? That means if, sir, understand, X supplying goods to a person who is exempted to pay, exempted from BCD on imports. If he is supplying goods to this person, this is called as what? Deemed exports na. So X is a deemed exporter na. So X is also eligible to get what? Advance authorization. What happens if he gets advance authorization? If at all X is having any imports, on that he need not to pay BCD. On that he also need not to pay BCD. That benefit is there. And since it is considered as deemed export, he is also eligible for duty drawback. Duty drawback. So this is about what? Duty drawback. Sir, next, before going further, we need to understand SIOM, standard input and output norms. I already said in first part, but again, once again, I am repeating detailedly. SION is short standard norms which define the inputs required to manufacture unit of output for export. Okay, for export, what is the quantity of input required to manufacture 1 unit of output? SION is notified by DGFT and is approved by Board of directors. Input and output norms are applicable for the products such as, to whom which are applicable, these are applicable, sir: electronics, engineering, chemical, food products, fish and marine products, handicrafts, plastic, leather products, etc. An application for modification of CN, because my production process is changed, then application for CN norms may be filed by manufacturer or merchant exporter to DGFT from time to time, issue notification for fixation or addition of CN. So based on the process change, because previously I used to do manually, now automated, maybe my process loss might be reduced or increased. So based on that, my CN will also change now. Such CN fixation will be, application will be filed by merchant exporter or manufacturer exporter, to whom, sir? DGFT from when? Time to time. Okay, and DGFT will issue the notifications regarding. So what are the basic requirements, sir, for fixation of CN? The basic requirements for fixation of CNs are technical details of the export products in appendix 33. That means how it is manufactured, those technical details. Next, a chartered engineer certificate certifying import requirements of raw materials in the format. Okay, whether it required any import material or only domestic material. Production and consumption data consisting of process loss, normal loss, abnormal loss, how the finished good will come, all those details has to be fixed, given to fix the CM. Okay. So now we are into the scheme advance authorization. What is advance authorization, sir? Through, sir, advance authorization is issued to an importer, okay, who is ready to make export. Not because you are an importer, they are giving advance authorization. You are an importer and who promised that you will be making exports. Okay, you may be a manufacturer exporter. That means you manufacture and export. You are a merchant exporter. You will not manufacture, but you have an associated manufacturing company. Through him, you will manufacture, merchant exporter. Or you will not directly export, but you are a deemed exporter. That means you will supply to an EOU, HTP, or another advance authorization holder, or you supply those goods to stores, to an aircraft or vessel which is into foreign voyage, okay, into international travel. Okay, so you are an importer who promised to make exports, being a manufacturer exporter, merchant exporter, deemed export, or any supply of stores to aircrafts or vessel. Such importer, if he has advance authorization, he can import goods without paying customs duty. If at all advance authorization issued, I went to DGFT and asked like, sir, I do export, sir. But to make export, I want raw material, sir, which is not available in India, or available in India but high cost, sir. So I'll import it from some other country. Please give me approval, sir, and some relaxation, sir. Then DGFT gave me advance authorization. With that advance authorization, what I can do, sir? With that advance authorization to export, to manufacture the export good, I need raw material. Na? That raw material can be imported from other countries without any customs duty. Okay, used for manufacture of export goods. But okay, sir, just I brought raw material for 50 lakhs and I am exporting 50 lakhs, then they will not give advance authorization. I have to make a promise like what? Sir, I will do more exports than what I imported. Okay, more than the import, I will do more export I will do. Okay, so how much more you will do? I said like, sir, I will do value addition of at least 15%. That means more than the import. Let's say for 1 lakh if I imported, at least 15% more than that I will be exporting. Okay, value addition, how to be checked, sir? Export price minus import price divided by import price into 100. Let's say I exported 2 lakhs, imported 1.5 lakhs, here also 1.5 lakhs. That is how much, sir? 50 by 1.5 into 100 na. 50 by 1.5 means how much, sir? 33.33% will come na. Okay, so that means what? I made value addition of, okay, 1.5 lakhs I imported, 2 lakhs I exported. That means value addition, how much I made? 33.33%. So to get advance authorization, I need to make value addition minimum of how much, sir? 15%. Okay, advance authorization given, sir. Today given me the authorization within, okay, by using this authorization, within what time I need to import? Within 12 months itself I need to import from date of authorization. For deemed export, sir, okay, if I am a deemed exporter, then 12 months from project execution or authorization I can import. Export obligation, sir, that means this value addition I promised, no, that valuation has to be made within export obligation within 18 months from date of authorization. I need to do those export. Okay, import materials are under actual user condition. That means by using advance authorization, I imported certain raw material now that has to be used only by me. I cannot give it to someone else. Okay, goods imported duty free under import authorization. Okay, by using my advance authorization, my Brahmastra, what goods I can import duty free? Inputs required, any fuel, oil, or catalyst to burn and to manufacture, and any spare parts which I will be supplying along with my outcome finished good. Okay, I am supplying a machine for which spares are also I am supplying. Such spares are importing from outside India. Such spares up to 10% of the total CF value of authorization. That means my advance authorization is for 1 crore. That means I can import 1 crore value without BCD. Out of 1 crore, 10% means 10 lakhs only. No, spare parts can be imported up to only 10 lakhs. Okay, advance authorization is granted based on what? Sion. Sion, why Sion, sir? Sion fixes the input required for a standard output. Okay, so based on that input, okay, based on those norms, my advance authorization value will be fixed. Sir, however, if Sion is not available, then also advance authorization is issued, but based on self declaration or by making a application to the norms committee, they'll fix the norms. Okay, shall maintain accounts. If I am an advance authorization holder, I should maintain accounts for a period of how much, sir? At least from 3 years from the date of redemption. After closure also for 3 years I need to maintain accounts. This is about what, sir? Advance authorization. Next one, sir. Duty free imports are under authorization. Duty free imports under authorization. Sir, what is the difference between the previous AA and DFIA? Sir, DFIA, you will not under AA. First itself, I am going to DGFT and saying, sir, I will do exports in the coming 18 months. Now, give me advance authorization, sir, so that I can import goods without payment of customs duty. That's what you asked. DFA is not like that. I exported already based on my performance. See, okay, you didn't trust me and given advance authorization previously. Now see, okay, what happening, sir? Now see, I'm a DFA hold. Okay, now see, I already made this much amount of exports. I already made this much amount of exports based on my performance, based on my exports. Check now, check my exports, and based on this, at least provide me DFA. Okay, by using this DFA, at least the coming imports I'll import without payment of duty. Okay, this is what post export facility to import units until, okay, post export facility, okay, to import units used in manufacture. So subsequently also use manufacture now. I'll be importing and I'll be using them for manufacture now. So them I can, okay, with that ZFIA, I got Brahmastra now. I'll take this to the customs department. Okay, take this. I can import goods without paying customs duty. Okay, export should be within 12 months from date of filing of online application. Okay, sir, I filed DFIA initially itself. DFIA I filed and said like what, I'll do export, then only you trust me. So by filing data DFIA application within 12 months, I need to file make exports. Then even here also I need to do what, value addition of 20%, sir. Okay, the point here is I got DFIA. By using that I got certain inputs now. By using these inputs again, what I need to do, I need to make export. Okay, while making export, here also value addition has to be made 20%. How to calculate value addition, sir? Export price minus import price divided by import price into 100. So here you need to do value addition of 20%, whereas under A 15% is enough. Okay, that is pre-import. Okay, that is like pre-export authorization. This is post-export authorization. Okay, here authorizations are issued only to products which are covered under Sion. Only to Sion. If Sion is there, then only DFIA. Sir, no Sion, sir, please DFIA. Nothing, they didn't even hear to you. Only when there is Sion, then they will give you DFIA. Sir, next, just you make export, it's not fine. I mean, it's not enough. Because if you make export, then foreign currency should come to India, na? Okay, so export relation should be in convertible foreign exchange to grant you DFIA. And one more point, sir, advance authorization is not transferable. If I got advance authorization, I cannot give it to someone to import without duty free. But DFIA is transferable. My DFIA, I can give it to someone else such person can import. Okay, can request for transfer. This transfer can within 12 months from export or 6 months from date of realization of export project. If I already realized the post exportation, I realized export projects are already 12 months happened from export, within 12 months I can transfer, ask for transferring this to another person. So this is about what DFIN. Next one, sir, remission of duties and taxes on export products. Remission of duties and taxes on what? Export products. All exporters are eligible for RODTEP scheme, sir. Remission of duties, taxes on export products. Remission of duties, taxes on export products. All exporters are eligible. Objective. What is the objective here, sir? Sir, through DFIA or through normal GST refunds or through duty drawback, or because due to, I mean, by inserting various provisions, they already trying to refund back the duties which are suffered in manufacturing of a export product at any stage. On a export product, if any duties are suffered and which were not refunded by way of duty drawback or by way of GST refund, if any is not at all if any tax which is not still not refunded, such can be refunded by way of RODTEP scheme, remission of duties, taxes and scheme, to refund taxes to exporter which are currently unrefunded either through GST refund or to duty drawback or through any other mode. Okay, okay, sir, how this will be refunded, sir? By way of issuing a duty credit. Duty credit, that means nothing but a script. Okay, in my or else something like a ledger will be there. On that ledger, how much I am eligible to refund will be reflecting there. Okay, see here, refund form of duty credit. Refund is by way of form of issuing duty credits, in the form of issuing duty credits. And credit, where it will get credit, sir? It will get credit in my credit ledger of customs account, not electronic credit ledger, sir, not GST. This is what FTB. In my customs account credit ledger, whatever is the duty credit, it will be reflecting there. Okay, in lieu of remission of duty tax for material used in export goods. Why it is being given, sir? I already exported. On those export goods, if at all any stage the tax is involved in that and it is not refunded by way of GST refund or customs duty drawback or in because of any other thing, then it will be remitted by way of issuing duty credit to me. Okay, how this duty credit value will be calculated, sir? For calculation of duty credit, okay, value of said export goods will be either FOB value of export good or 1.5 into market value, whichever is lower will be taken as base. To calculate duty credit, the base is the value of export good, which is FOB or 1.5 times of their market value, whichever is lower will be taken. On that, a certain percentage will be applied to arrive the relief or duty credit, and that means this duty credit will be calculated as a percentage of FOB. Okay, by applying that percentage, will be calculating what? Duty credit. Duty credits are used only for payment of what? BCD, not for anything else. Only for BCD payment you can use that duty credit balance, and these are also transferable. I can transfer my duty credit balance to some other one. But there are certain ineligible goods, sir. On these ineligible goods means ineligible goods exports. On this they will not give you remission of duty, taxes on export goods. RODTEP is not applicable. When, sir? When those goods are restricted or prohibited goods. Restricted means what? Prohibited means what? Only with an authorization permission if you can import goods, then restricted goods. Even with authorization also you cannot import, then they are prohibited goods. Transshipment. Transshipment means what, sir? The goods come from outside India to India in a vessel, but they are changing from this vessel to another vessel, then that is not, that is transshipment. On transshipment you cannot call it as exports. And next, export of imported goods in same form. Sir, you imported and not processing, you are exporting back under the same way, then okay, you will not be eligible for RODTEP. Okay, product subject to minimum export price or duty. If at all there is a provision stating like on this minimum export duty has to be suffered and minimum this much has to be kept as export price, or those duties are not eligible for RODTEP. Next, manufacture by DTA supplied to SEZ and FTZ. Okay, if at all a DTA is supplying to SEZ and free trade zone, you cannot call it as, okay, you cannot call it as like export, and you cannot, sir, generally if at all you are supplying to SEZ, GST says like it is zero rated supply only, but you cannot take that logic here to apply this scheme. Okay, only they should be actual export. Not if they send to SEZ or free trade zone, you are not eligible for RODTEP scheme. And next, if they manufacture is in EOU, EHTP or BTP, if the manufacturing is carried out in EOU, EHTP or BTP, then also not eligible for RODTP. If they are deemed exports or if they are manufacturing in a warehouse, bonded warehouse under section 65, in those cases also what RODTEP scheme is not applicable. Okay, sir, still we are having three more schemes, sir. Status holder, EPCG scheme and EOUs, STPs, BHTPs, that concept, sir. That also within like 20 minutes we can complete that one, sir. Have patience, sir. Yes, FTP little tough, but have patience, sir. Don't leave this. Okay, very important. You will definitely get valued for this time you spent in the exam. Okay. So now in FTPM, we are discussing about the EOU, EHTP, STP, and BTP units and the benefits associated to them. Okay. EOU means full form export oriented unit. EHTP means electronic hardware and technological park. STP means software technology park. BTP means biotechnology park. Export oriented unit, electronics hardware and technology park, software technology park, biotechnology park. Okay, sir, EHTPs are started with an intention to export of electronic hardware and software. STPs are formed with an intention to develop software exports. To develop what, sir? Software exports. Okay, sir. EOUs are administered by Ministry of Commerce and Industry. Who will administer the EOUs, sir? Ministry of Commerce and Industry. But whereas EHTP and STP are governed by Ministry of Information Technology. IT means not income tax. Here it is information technology. Okay. Whereas biotechnology units are started or parks are started on recommendation of Department of Biotechnology. So like this, for development of various types of industries in these particular areas and zones, these type of parks, EOU area, EHTP parks, STP parks and BTPs are started, sir. Okay. To start a unit in EOU, that person should have a minimum investment value of 1 crore in plant and machinery. It should have minimum investment value. How much, sir? 1 crore in plant and machinery. Only for whom, sir? EOU. However, for this also there are exceptions like handicraft or in those cases there are certain exceptions. But generally 1 crore should be there. Okay, in plant and machinery. However, this investment value, minimum investment value is not applicable for EHTPs, STPs and BTPs. Okay, next one, sir. Sir, can a trading unit be eligible to form as can a trading unit? That means like I am a retailer. Can I start a unit in EOU, EHTP, BTP or STP? No, I should be a manufacturer or I should be a service provider. Then only I can be there under the EOU, STP or BTP parks. Otherwise, I cannot be there. Okay. So trading units are not covered. Trading units are covered or not covered, Amma? Not covered under this scheme. Next, these units should be positive NFE, net foreign exchange. Positive net foreign exchange earners. That means rather than the foreign currency they spent, they should be earning more foreign currency. That means nothing but simple export should be more. That in that way they will be earning more foreign currency rather than the foreign currency which they spent. Okay, and this NFE will be checked not year wise, sir. It will be checked cumulatively in a block of 5 years. In a block of 5 years, we'll check whether it is a net foreign exchange earner or loser. Only foreign exchange losers, earners can be there in these areas. Okay, can set up a unit in these areas. And however, higher value can also be specified in some sectors based on the industry. Generally, this based on sector, they may even suggest an additional net positive foreign exchange earn. Okay, additional export obligation also might have been introduced. Next, sir. For supplies which are counted for net positive NFE means, sir, anyhow normal exports will be counted for net positive foreign earnings. Okay, other than that, Even these are also covered for calculating net positive foreign earnings. Supplies to A, DFIA, EPCG holders. If any supply made to advance authorization, duty free import authorization, or EPCG holders, then those supplies are considered as like foreign earners. Okay, sir, foreign currency not realized na, but still it will be considered as net foreign exchange earnings. Okay, it will be added to that. And even supplies in DTA also, where they are supplied for foreign exchange remittance from overseas. Sir, here there is a subsidiary company of US company. That company asked me one software. Me being a unit in STB supplied software to that unit, to that company, but the payment is paid by the holding company in US, that also in US dollars. So then that can be counted for foreign earnings. Next, supplies to other EOUs, EHTPs, STP or BTPs. Other EOU, STPs, okay, if any supplies are made, that also can be counted. Supplies to bonded warehouse permitted by customs. Okay, if any bonded warehouses are permitted by customs, they are also will be considered for net foreign earnings. Okay, supply of goods and services to organizations which are entitled for duty free import, such as like UN bodies, okay, any other international bodies, if they are authorized to import goods duty free and be from EOU, EHTP, STP, if any good and service is supplied to such person, that also will be counted for NFE. Next, if any supply of LPG which is produced in an EOU refinery to PSU for being sold to household domestic consumers. Sir, let's say in an EOU there is a gas fizzle. Okay, from that gas is being extracted, natural gas, which is sold to HPCL company. HPCL will be, what it is saying, sir? It is using that gas to sell to the domestic household consumers. No, so that also will be considered for NFE, net foreign earnings. Okay, so all these will be, even though these are not actually foreign earnings, but still it will also be added to NFE. Next, there are certain entitlements, benefits available to EOU, HDB, STP, BTP holders, sir. From here, these are the benefits. Okay, this is important, sir. Benefits, and even what will be counted for NFE. Okay, so these are important, sir. Benefits. What is the benefits, sir? BCD, IGST, cess on imports and exports are exempted. There is no BCD, IGST and cess. Okay. Next, they can retain 100% of their in their foreign currency account. Okay, external foreign currency account. Okay, that means that earnings need not to be brought or converted into Indian currency. They can maintain in the foreign currency account itself. That means they earned some 100 US dollars. That US dollars mandatorily need not to be converted into rupees. They can be maintained as dollars only in their external foreign currency account. Okay, next, bank guarantees at the time of imports are not required, and 100% FDIs are allowed to start a unit in EOU, HTP, STP, and BTP. Four benefits: BCD, IGST, cess on imports and exports are exempted. 100% FDI investments, that means foreign direct investments, are allowed. Bank guarantees are not required at the time of imports. Next, they can retain 100% of their foreign currency earned in their external foreign currency accounts only. They need not to transfer it to Indian accounts or convert it into Indian rupees. Next, okay, permitted exports. What are the exports permitted by them? All the goods and services are permitted except they are prohibited under Indian trade classification for harmonized system. Unless prohibited, they are. And next, SCOMET. Okay, SCOMET means special chemicals, any organisms, okay, any material, equipment, technology. These are generally permitted, but on satisfaction of subject to the conditions given. If any conditions are given, only on satisfaction of those conditions, these exports are permitted. Next, sir, permitted imports. Sir, any import is permitted unless it is prohibited. If it is not prohibited, import also can be made. Export promotion materials also, they can bring up to 1.5% of FOB. On this, there is no BCD. On imports of any good other than prohibited, BCD not there. Goods or capital goods from DTA or bonded warehouse subject to actual user condition. That means which they were brought, okay, and not prohibited, can be brought into the EOU, HTP, STP without payment of BCD or IGST. Even goods from DTA, sir, if at all the goods are brought from DTA, then first pay GST, then claim for refund. Pay GST, then only later claim for refund. So permitted imports means if it is not prohibited, imported, free, no customs duty. Okay. If it is okay, even other than the normal goods, even sample materials can also be brought up to, okay, which will be sent as export promotional material, which is used as then 1.5 percentage of FOB of exports of previous year can be brought. Okay. Next one, sir. Goods, capital goods from DTA can also be brought, sir, but on payment of GST initially, later they ask for refund. Whereas from bonded warehouses, without payment of IGST and BCD, they can bring the goods. And okay, EOUs, EHDPs are allowed to take the capital goods on lease from domestic or foreign leasing companies. Okay, based on applicability, sir. From DTA means with payment of duty, from other country means without payment of taxes, they can import them. I mean, leased capital goods also they can import without payment of duty, either without payment of duty if it is from other country. From DTA means with payment of tax, they can bring. Later they can ask for refund. Sir, is it possible to transfer any goods from one EOU, HTP, STP, BTP to another? Yes, it is permissible, sir. Allowed on payment of GST and cess. And plus, an intimation has to be given to development commissioners of both the transferring EOU and transferee EOU or EHTP and STPs. Okay. Next, unutilized material. If any unutilized material is relying with EOU HTP, it can be either transferred to another EOU HTP STP or can dispose in DTA by paying duties and taxes. Sir, unutilized material even includes scrap, waste also. Okay. Or it can be again exported. Okay. So EOU HTP schemes are benefits means no customs duty, no IGST, no cess on imports. Second one, sir, 100% FDI investment. Third one, sir, okay, need not to provide bank guarantee at the time of import, sir. Next, they can retain 100% of their foreign currency earnings in their external foreign currency account. Okay, which are supplies considered as NFE only, even though supplied within the within the country, supplies to AA, DFIA, EPCG holders, supplies to within the DTA, but whereas the remittance is made from overseas in foreign currency. Third one supplies to another EOU, STP, EHDP, BDP, supplies to bonded warehouse. Okay, supplies to an organization which is entitled to get imports duty free. Fourth one, sir, supplies from an EOU to a PSU which is supplying gas to household domestic consumers. Okay, sir, can scrap waste be transferred to DTA? Yes. Okay, on payment of applicable duties and taxes. Okay, can it be transferred from one EOU HDP to BTP to another? Yes, it can be transferred on payment of applicable duties and taxes on taking approval, intimating to the development commissioners of both transferring unit related officer and transferring unit related officers also. Okay, there are pending with two schemes. Just hold for another 15 minutes. So now we are discussing about the scheme EPCG. Okay, EPCG stands for Export Promotion of Capital Goods Scheme. Okay, EPCG stands for what, sir? Export Promotion of Capital Goods. Export Promotion of Capital Goods Scheme. Sir, this two schemes, EPCG and status holder, I'm not writing it again in the material because already it is cut short in the material itself, so I cannot condense it even in writing in the notes as well. That's why I'm discussing here itself. EPCG is okay generally, sir, under advance authorization, under duty free import authorization, you are entitled to import input goods duty free, not capital goods. Only inputs can be imported duty free, okay, without any payment of duty. But here under EPCG, okay, if you are an exporter and you want a capital good which has to be imported from outside India or a domestic procurement as well, so you can get this authorization, EPCG authorization, by getting this EPCG authorization, you can import the good, capital good, duty free, and even procure goods from domestic area itself, I mean domestically itself, but without payment of IGST or any other compensation cess. Sir, EPCG scheme allows import of capital goods without payment of duty. These goods may be for pre-production, production, or even for post-production. For what, sir? Pre-production, production, and even for post-production. Next, capital goods imported under EPCG are authorization or exempted from IGST and compensation. So not only BCD, sir, IGST and cess is also exempted. So, sir, capital good we bought na, it might be for production. That means producing the good. Pre-production, that means like cleansing the raw material or sorting the raw material, that one. And the last one is like post-production, packing these things, or if for anything the capital good is imported. On that there is no compensation says IGST and even BCD till 31st March 2023. Authorization holder can procure capital good within India as well. Then also GST and compensation cess will not be there. Sir, if you got an authorization, it is valid for 18 months. That means within 18 months from date of authorization, you need to import the capital good or procure domestically the capital good. Import of capital good is subject to actual user condition. Sir, what does it mean by actual user condition? Actual user condition means only the importer should use that. He shouldn't transfer it to someone else. But this actual user condition is only till the export obligation is completed. What is export obligation, sir? Sir, you are importing capital good without duty now. So they will keep an obligation on you. Since you imported it duty free, you need to make this much amount of exports. So that limit they are giving now. Okay, that exports we have to make, that is called as what? Export obligation. Once export obligation is completed, capital goods can be sold or transferred. That means till the export obligation is fulfilled, the imported capital good will remain in actual user condition. That means only importer can use. Once the export obligation is fulfilled, then it can be even used by whom, sir? It can be transferred to others as well. Okay, export proceeds. Okay, once we made the export, the proceeds should be realized in what? Convertible foreign exchange. Next, export to SEZ units, SEZ developers, okay, will be considered as discharge of export obligation provided payment is received in foreign currency account. Okay, if the currency is received in foreign currency, then in foreign currency account, then it will be considered as what? As export obligation fulfillment only. Even to co-developers, SEZ developers or co-developers, even it is realized in Indian rupees also, it is considered as what? To unit, SEZ unit means should be in foreign currency account, foreign currency in our foreign currency account. To SEZ developer or co-developer, then even though the realization is in Indian rupees, it will be considered as discharge of export obligation. Okay, sir, through EPCG authorization, you can import capital good without payment of duty. Okay, within 18 months from date of authorization, you need to complete this import. Instead of import, you can even procure domestically as well. Okay, on domestic procurement, there is no IGST cess. On import, there is no BCD, IGST and cess as well. Okay, you need to fulfill the export obligation. Until the export obligation is fulfilled, the imported capital good should remain in actual user condition. That means only you can use. Once the obligation is fulfilled, you can transfer it to someone else. The export, I mean, when you make exports, the realization should be only in convertible foreign exchange. Next, export to SEZ units will be considered as discharge of export obligation. That means considered as export only when the consideration, okay, when the payment is realized from foreign currency account. If it is to developer or co-developer of SEZ, then even the consideration, I mean the payment is in Indian currency, still it will be considered as discharge of export obligation. What are the capital goods eligible to import or procure domestically by having the EPCG means? Capital goods including capital goods in CKD, SKD, semi knocked down or completely knocked down condition. Computer softwares or softwares which are part of capital goods. Software, sir, that good will work only with that software. Okay, such software is also called as capital good. Spares, molds, dies, jigs, fixtures, tools and refactories. Spare parts, sir. Molds means, okay, to manufacture a good in a particular shape, we will be having molds, dies, jigs and fixtures and any other tools and refactories. And if any catalyst for initial charge plus one subsequent charge. Catalyst means something like batteries, sir. If anything like that are required, that also can be called as capital good. And capital goods for project imports which are notified by CBIC. So which capital goods are any capital good which can be either in CKD or SKD in SKD condition. Okay, it even includes computer systems and computer softwares, molds, jigs, fixtures, and even spare parts. Fourth ones are catalysts used for one charge and even for the subsequent charge, and any capital goods which were required for project imports. Sir, which exporter is eligible? Any manufacturer exporter with supporting manufacturer or a merchant exporter tied to supporting manufacturer. So any exporter is eligible, sir, here. Even a service exporter is also eligible. Sir, now we said export obligation now. So here they keep export obligation in two ways. Okay, both has to be fulfilled. The first export obligation is average export obligation. What is average export obligation, sir? In the preceding 3 licensing years, okay, the average of level of exports made by the applicant in the preceding 3 licensing years for the same and similar products has to be achieved within the overall export obligation period, sir. Let's say EO period, sir. EO period is, let's say, 6 years. Okay, before authorization, you are the preceding 3 years. Okay, let's say preceding year 1, preceding year 2, preceding year 3. The average of these 3 years is you are making 5 crores as export. 5 crores as export. That means from the authorization till the export obligation is discharged. That means for all these 6 years also, you should be maintaining the average level. That means every year you should be maintaining that 5 crores as export. So this average export obligation means the average of last 3 years should be maintained for the whole period until which the export obligation is discharged. Okay, this is about what? Average obligation. Next, there is specific export obligation also. What does this specific export obligation say, sir? Specific export obligation is over and above average export obligation. It is over and above average export obligation. That means this average 5 crores has to be maintained. Other than this, additionally you need to make some other exports to fulfill the specific export obligation. So how much you need to do extra? 6 times of duty saved on capital goods imported under EPCG scheme within 6 years from authorization date. How much, sir? 6 times of duty saved. Let's say on capital good imported they saved 1 crore, sir. They saved 1 crore duty. 1 crore into 6 means how much, sir? 6 crores. Okay, 6 crores worth imports has to be made within the 6 year span of time. This is over and above the every year 5 crores. Every year average 5 crores should be maintained. Other than this average 5 crores, additionally 6 crores has to be achieved within the period of 6 years from the authorization date. So specific obligation is over and above the average export obligation. Okay, when it is import, sir, 6 times of duty saved has to be achieved within 6 years. In case of indigenous means what, sir? Domestic procurement, then there is a relaxation up to 25%. That means 4.5 times of duty saved or taxes saved, 4.5 times of taxes saved alone needs to be achieved. Okay, 4.5 times when it is indigenous procurement. When it is import, 6 times of the duty saved is the specific export obligation. Okay, while, sir, here one more thing. Sir, while maintaining the average obligation, even specific obligation has to be reached, no? Specific obligation can be achieved within a period of 6 years, no? So, you cannot say like, I'll achieve everything in the 6th year. They are giving even a in between intervals also, time limits also, such as like advance tax, okay, which needs to be paid by March 15th, but in between there are installments, no, in income tax. In the same way, even though there is 6 years time, but again they are dividing it into 2 blocks. First block 4 years and subsequent block 5 and 6 years. In first block, yes, you can achieve it in the 6 years period, but within first 4 years itself you need to achieve certain part of specific export obligation. How much, sir? 50%. That means, sir, here 6 crore, 1 crore is the duty saved, na? 1 crore into 6 times means 6 crores, na? Out of this 6 crores, 50% means 3 crores. Specific export obligation has to be achieved within first 4 years. Whereas the balance
3 crores can be achieved within 5th and 6th years. So specific export obligation is 6 times of duty saved. Indigenous means 4.5 times of duty saved, which can be achieved within 6 years, and this is over and above the average export obligation. Okay. However, you cannot say like I'll achieve everything in the 6th year. There are blocks given. In first to 4th year block, you need to achieve at least minimum 50% of the overall specific export obligation. That means 3 crores in our example. Okay. Other conditions are shipment under AA, DFIA, duty drawback scheme or reward scheme would also be counted for fulfillment of EVO. Okay. Sir, I am a AA holder. So to advance authorization. For having that AA, I am making certain exports. No. Whether the same exports even be counted for EPCG? Yes, that can be counted even for EPCG. Both physical exports as well as deemed exports shall be counted for fulfillment of export obligation. Every EPCG holder shall submit to regional authority by 30th April of every year a report on fulfillment of export obligation. In that year, how much of export obligation is fulfilled? For that, a report has to be provided every year by the EPCG authorization holder. Every EPCG authorization holder shall maintain for a period of 2 years from date of redemption the account of export, supplies made and services rendered. Okay. From the date of redemption also till 2 years, you should maintain the records and the details of your exports, all these has to be maintained. Okay. Next, the applicant who is having EPCG authorization shall mention his authorization number in all his export documents, because they should track, no, that's why. On completion of exports and imports and other conditions as specified in EPCG, on application, he can redeem from the authorization. Then the concerned authority will give export obligation discharge certificate or redemption certificate. Okay, incentive for early fulfillment. Sir, I achieved the whole specific export obligation also within 2 years. Do I have any benefits? Yes. For earlier achieving specific export obligation, you will be relieved from the authorization scheme earlier itself. Importer fulfill the export obligation as specified below within half or less than the half of original export obligation period. Actually, the time period is 6 years. You achieved this below mentioned percentage within half period. That means within 3 years or less than 3 years. 75% of specified export obligation and 100% average export obligation is also maintained. Sir, 6 crores has to be made in the previous example. In first 3 years itself, I maintained 5 crores average and even achieved at least 75% of the overall. That means 6 into 75% means somewhere around 4.5 crores. No, that 4.5 crores I achieved within half period itself. Okay, then I'll be relieved from advance authorization. But sir, again repeating, sir, earlierly you can will be considered as relieved from advance authorization. That EPCG authorization, because you fulfilled early. Okay, when you can call as fulfilled early, sir, within half time, within 3 years itself, you fulfilled specified obligation 75%. That means if let's say 6 crores is specified obligation, 75% means 4.5 crores you achieved within 3 years, and you even maintain the average also. That means average 5 crores in the previous example that you maintained, and 4.5 crores specific export obligation also achieved within these 3 years only. Then you are relieved from export obligation earlierly. Okay, this is about what, sir? EPCG scheme, sir. The next one, sir, and the last one is status holder, sir. Status holder, in the name, as the name suggests, status holder means it's a status given, sir. If you are an exporter, based on your exports, a star rating, okay, something like a star rating, a status holder will be given, sir. Okay, what happens, sir, if I am having status holder? Status holder means like 1 star, 2 star, 3 star, like that it will be given. Based on that, your priority will be more. Okay, something like you need not to provide bank guarantee. You can start your own private warehouses with very less approvals, and any CON fixation will be done to you on priority basis. So these benefits are available to you if you are a status holder. Okay, status holders are whom, sir? Business leaders who have excelled in international sales. They outperformed others. Excelled means what? They are doing well. Okay, they did extremely well in international trade and have successfully contributed to country's foreign trade. Okay, they have earned already more to the country. Okay,
for them, okay, for considering their contributions, they will be given as a status holders. All exporters of goods and services and technology having IEC, import export code, are eligible for recognition as a status holder. Okay, an applicant can be categorized as status holder. An applicant can be categorized as status holder when, sir, upon achieving export performance during current and previous 3 financial years. Sir, current year, let's say 23-24, sir. Preceding 3 years means previous year 1, 22-23, previous year 2, 21-22, previous year 3, 2021. So considering all these years total, if I achieved export performance which is suggested or which is notified there, then if I reach that particular limit, then I can be called as what? Status holder. So we'll be checking how many years, sir? Overall 4 years considering the current year. However, for jewelry and gem sector, the performance during the current and 2 years alone will be checked. For jewelry sectors are not 4 years. How many? Only 3 years will be checked, sir. These 3 years will be checked. Whereas for others, the whole 4 years will be checked. Okay. Status category, sir. When you will be called as a status holder, if at all in the current previous year plus preceding 3 previous years total, you reach 3 million US dollars export performance, then you are called as 1 star. If you reach 25 million US dollars, then you are called as 2 star. If you million 100 million, if you cross 100 million, 3 star. 500 million, 4 star. 2000 million, 5 star. Sir, you can see here, when 1 star, sir, 3 million, 1 star. Okay, 3 million, 1 star. 25 million, then 2 star. 100 million, then you are called as what, sir? 3 star. Okay, next, sir, it is about 500 million, sir, you are called as 4 star. And if you reach 1000 million, then you are called as what? 5 star. Okay, this need not to be achieved in one particular year. This is cumulatively the total of current financial year and the preceding 3 financial years. Cumulatively, if you exceed 3 million US dollars, 25 million US dollars, okay, $100 million and $1000 million, then you will be getting that star. 1 star, 2 star, 3 star, 4 star or 5 star status holders. Okay, sir, export performance will be counted on what, sir? FOB value of export earnings. Okay, sir, we are calculating this millions of US dollars now. That is FOB value you take and total them. If it crosses 3 million, then you are 1 star. For deemed export, then free on road, FOR means free on road value, which will be Indian rupees, will be converted into US dollar at the exchange rate notified by CBSE on the first day of financial year, each financial year. Okay, if at all they are deemed exports, then it is not FOB, FOR, and it is in Indian currency. No, you need to convert into foreign currency by using the exchange rate notified by CBSE on the first day of financial year. Next, sir, in the last 4 years, okay, you are checking last 4 years now. Out of those last 4 years, at least in 2 years, you might have did exports. Okay, only in the last year or the current year you started exports and you made more than $3 million, means you will not be granted export status holder. Okay, in out of the 4 years, at least in 2 years, if you are doing exports, means then they will give you status holder. Okay, next, export performance of one IEC holder cannot be permitted or transferred to another. Exports made on re-export basis shall not be counted. Okay, if it is on re-export, sir, that means what? I already imported a good, for repairs I am exporting back. Okay, or I already exported, for repairs it came back and again re-exporting. Those are not counted. Okay, export of items under authorization including SCOMET. SCOMET means what's the special chemicals, organism, materials, equipment and technology. These would be included for, okay, this would be included for calculation of authorization. Okay, export performance. So even this SCOMET items exported also will be counted for export authorization. Okay, next, and the important points are here. For calculating export performance of 1 star, only for which calculations are? For 1 star calculation alone, the following persons export performance should be given double weightage. Should be given what, sir? Double weightage. Okay, for calculating 1 star export house, that means 3 million US dollars, to reach 3 million US dollars, for the following below mentioned class of people, even though they made 1 crore export, it has to be counted as 1 million export. It has to be given double weightage. That means it is like
2 million US dollars. So to whom such double weightage is given to reach 1-star export house? If it is a MSME or if it is a manufacturing unit having ISO or BIS mark. MSME, ISO or BIS, or units located in northeastern states including Jammu and Kashmir, or units located in agri export zones. Sir, to which units the government authorized or the FTP authorizes to grant double weightage to reach 1-star export house, sir? MSME units, units which are having or units which are having ISO BIS mark, units in agri export zones, units in northeastern states including the Sikkim and Jammu and Kashmir. After all these, I got a status holder, sir. What are the privileges, sir? Authorizations are there, na? And customs clearances of both imports are granted on self declaration. They'll trust you. You have made so much to the country by exporting you and lot of foreign currency to the country. That's why they're giving you a privilege. Like you need not to go for any checkings and all. Self declaration, they'll trust you. It doesn't mean no assessment, no scrutiny, nothing. Not like that. They may go for assessment and scrutiny, but initially they trust you on your self declaration. They'll not ask you to get a chartered accountant certificate or cost accountant certificate. Okay. And whenever Sion needs to be fixed, it is fixed on priority within 60 days by the norms committee. Next, they are exempted from compulsory negotiation of documents to bank. They need not to exchange their documents only through banks. They can directly exchange their documents because they are established the exporters. Next, exemption from furnishing bank guarantee. They need not to give bank guarantees also. If it is a 2-star and above, they are permitted to establish export warehouses also. If it is 2-star and above, they are permitted to start export warehouse. And if they are 3-star, 4-star, 5-star, they will be enabled to self-certify the manufactured goods. Okay, sir. There is something called preferential rate of duty. If goods are originating from preferential area, then they are accessible to duty at a preferential rate, which is a rate lesser than that of the actual or original rate. Okay, so for that actually you need to get a origin proof certificate. Okay, sir, I'm an export house. I'm sending goods from India to Australia. With Australia, Indian government is having treaty, so Australia government is levying lesser import duties on imports from India. Okay, so for that Australia government will ask a origin certificate. Na such origin certificate is not required if I am a 3-star, 4-star, 5-star exporter. I give a declaration that these are manufactured in India. Such declaration itself will be accepted by Australian state government as proof of origin. Next, status holders are entitled to export freely exportable items, okay, excluding jewelry, gold and precious metals, on free of cost basis for export promotion. They are eligible to export free of cost certain materials. I mean, without any consideration, without charging anything. Just as like to give samples, they can export, okay, up to a specified annual limit, okay, to promote exports. So these are the privileges. What are, sir? Authorization and clearances or self-declaration basis. Next, fixation of Sion on priority basis within 60 days by norms committee. Third one, sir, exemption from compulsory negotiation of documents through banks. Fourth one, sir, they are exempted from furnishing bank guarantees, sir. Fifth one, sir, 2-star and above warehouses export houses are permitted to start their own export warehouse. Okay, 3, 4-star, 5-star warehouses can declare that where the manufacturing is made, that itself will be considered as origin, proof of origin. Next, the last one, sir. Okay, the status holders can even export certain items without any cost, free of cost, to outside India to promote their exports, but up to the annual limits given by the governments. Okay, so by this we even completed the status holder topic, ma. So we completed this marathon successfully. So I wish you very all the best for your exams, Nana. CMA final students. Okay, so as you need not to fear for the exams. Okay, you are ready for the exams. You watch the whole marathon. In this marathon itself, you will get around 50 to 60 60 to 70 marks in the exam. So at least from that you will answer 40 marks. Okay, so balance from the other content also you can write 10-15 marks at least now. So you need not to worry about the exams. Be confident. You can definitely clear this time. Okay, trust me. Okay, now bye bye.